start because even in the US, you saw the mood shift as soon as there was a dialing down of some of the tensions around that tariff deadline on the 2nd of April, liberalization day as he's called it. And let's talk about what the context is for us here in India. We have to talk about what happened on Wall Street because what a run they saw overnight. You had the Dow that gained quite considerably, as much as 1.4%, the S&P 500 gaining about 1.8%, the Nasdaq Composite 2.3%, and the Russell 2000, which is their small cap index, effectively ending with gains of about 2.5%. What happened and what led to this? You had an update on the tariffs. US President Donald Trump saying that there is likely to be an exclusion of a set of sector-specific tariffs when applying the reciprocal tariffs that are due to kickstart on the 2nd of April. And the situation on tariffs, according to an official that spoke to the press yesterday, is fluid and no decision has been made yet on a raft of those. This is effectively reports that have come through from the Wall Street Journal as well as Bloomberg. Now, on Trump watch, and this is important to note, the latest update is that auto tariffs, according to Trump, are coming soon, but not all of those tariffs are going to be imposed on the 2nd of April. He's also spoken about pharma tariffs, but no deadline again has been given. Importantly, and this is the line to focus on, he told reporters that he may give a break to a lot of countries, breaks on tariffs of course, but there's a negative that has come through in the form of a 25% tariff that has been announced on any country that is buying Venezuelan oil and gas effective from the 2nd of April. There was an extension of the deadline given to Chevron, which does business in that country, to wind down its operations. That is being seen as a positive for Chevron, but for everybody else that trades with Venezuela at this point, it's seen as a negative. It could have an impact to oil supplies, which in turn could have an impact on oil prices. By the way, oil prices have not moved very much. Brent crude trading at $72 or thereabouts to the dollar. Here's what Donald Trump had to say about those two things.
He says 25% for any country that does business
That's right.
in Venezuela.
If they buy their oil from Venezuela, they have to pay a 25% tariff to do business with the United States.
Is that on top of existing tariffs? So, for example, China.
Yes, that would be on top of it existing. And we'll be announcing cars very shortly, and we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country. And if we have problems like wars or anything else, we need steel, we need pharmaceuticals, we need aluminum, we need a lot of these things. We sort of don't make anymore, and yet we're equipped to do it all. So we'll be announcing some of these things in the very near future, not the long future, the very near future.
Okay, so that's part of the context. The other context, of course, is high-frequency indicator in the form of business activity that picked up in the US and that aided sentiment. The S&P Global's US Composite PMI output has risen to 53.5 in March versus 51.6 in February. And that composite PMI tracks both manufacturing and services, and any reading above 50 indicates an expansion. So that's certainly seen as a positive in the context of the expectation that this year, 2025, is going to be a year where the US sees slower economic growth and sticky inflation. The worry of stagflation exists as well. What happened in markets outside of the equity markets? You had bond yields that spiked overnight, and gold fell for a third day in a row. The yield curve has flattened slightly, with the short-term yields rising about 10 basis points and the yield on the 2-year gaining the most since the 10th of January. The dollar has gained marginally, with the DXY, which is the dollar index, at 104.35. Gold very briefly came very close to that $3,000 per troy ounce mark and then bounced a little bit from that point. But that mark is going to be very closely watched, not just here in India, but globally as well. There was obviously a risk on sentiment on Wall Street, and that gravitated towards big tech. Nvidia and Tesla gaining as much as 3% and 12% respectively. In the Asia Pacific region as well, you have a lot of markets that have opened in the green. Of course, China has opened in the red, if we can pull that up very quickly. You have Shanghai that's trading just about flat, but you have the Nikkei 225 that's gaining about 0.8%. By the way, the yen, a dollar yen has moved beyond 150, and so that's another factor to watch in the near term. Of course, today you'll have to watch out for the BOJ minutes from the previous meeting, which was the 23rd to 24th policy meeting of January, and you have the UK inflation print as well as the US consumer confidence data to watch out for. Not a lot in the way of global cues, but at the same time, it's going to be interesting to watch any developments from Donald Trump and anything that he announces.
And absolutely, and I think that's what, the street is categorically waiting out for, because reciprocal tariffs from Trump administration, and Wall Street is on the edge right now. As you mentioned, the potential uptick in inflation as well as the slowing economic growth. These are two aspects that they are considering to understand the kind of market activity that will pick up from here on as well. But to this, if you see the kind of performance our markets are giving, I think there is that FI buying interest that has come back, right?
100%.
I mean, yesterday you presented that data for the previous week. Yesterday as well, you've seen a number which is above 3,000 odd crores. Now, what is going to be interesting over here is, will the FIs continue that buying streak in India, or will they move to China? Because China is also looking attractive. In fact, China is making itself look attractive right now, right?
And an interesting point, Hiral, at this juncture is to see what is happening in the US, because after 3 years of frenetic buying in that equity market, you're finally seeing in 1 month and in the previous month, you're seeing outflows from that market. Whether or not that will turn is the big question that everybody has. And if it does not turn, where does that money go? Which is the point that you were making. But let's also discuss what happened in trade yesterday. As Hiral pointed out, 3,000 crore odd of foreign institutional buying in the Indian equity market, and you saw domestic institutions also bought, as a result of which you had strong gains across the board for the Indian equity markets. The Nifty 50 gaining about 1.3% to close above 23,650 points. And I'm sure, Hiral, you're going to weigh in about the key levels that we have crossed in trade yesterday.
I mean, 23,500 is the key support, right?
And 23,800 is what we're looking at as a key resistance,
Correct.
right? So, but we'll talk about in the bit. What contributed to this, of course, is Reliance Industries and banks. They've contributed the most. You have the Nifty 50 see a sector contribution from the financial services of 165 points. That's very significant. Foreign institution buying very evident here. Oil and gas is next, followed by IT and power, as well as construction. But the broader markets also looked very sanguine yesterday. Of course, they came off the high point of the day, Hiral.
It did. I mean, what's happening with the broader markets is, as fast as they are seeing a decline on a negative news, similarly, the stocks are seeing that kind of an upside as well, right? So interesting names that if you see in yesterday's session, which actually gained, you had names like JBM Auto, Rajesh Exports, Finolex Cable, Alkyl Amines. All of these actually saw some strong gains in terms of yesterday's session. Apart from this, you had the defense pack, which was absolutely strong. The PSU pack, the BFSI space has been absolutely strong as well in terms of yesterday's session. Now, the key over here is going to be, for how long does this upside continue? Because that's what the street is watching out for. If you talk to analysts, if you talk to market experts, they are of the opinion, buy on dips, sell on rally. And that's the entire strategy that they're relying on right now. However, there is that some bit of cautiousness that is still prevailing because when you speak to them, they're not 100% invested. They're still sitting on some amount of cash. Now, if you look at the overall setup of what it looks like in terms of today's session as well, what was interesting is, with that bullish momentum, we've seen a 6-day rally which has continued. Now, we're eyeing the 23,800 mark on Nifty 50. Now, clearly, we've seen a 1,700 points uptick from March 4 low of 21,964, and actually Nifty has turned positive for 2025. So we have 25 stocks that are now trading in the positive territory on a YTD basis. Now, who are the major contributors to this? So it's mainly the financial stocks which have contributed to this kind of an uptick. And it's the FI inflow that has actually led this kind of a financial recovery in the Indian markets as well. Overall, you are seeing that kind of value buying also which is coming in, because valuations have returned to their long-term averages. So we are pretty much cheaper if you have to compare to the last 3 to 4 month valuation. So that is also one of the trigger points that the Indian investors are considering, as well as the FIs. Now, clearly, the resistance that initially that we were watching out for was 23,600, and Nifty has managed to stay above and cross that resistance level of 23,600, which is a key positive. And if we remain about 23,500 on Nifty 50, then the next level we should be watching out for will be 23,800 and then a 24,200. So that's on Nifty 50. Now, if you look at Bank Nifty as well, yesterday again the support is now placed at 50,970 with regards to where Bank Nifty goes, and 51,000 was the level that we were watching out for earlier. And the next major resistance comes in at 52,000. So we're just around 300 points away from the next resistance levels. So in case that is crossed as well, there could be a further upcycle that could be coming in terms of the BFSI space. And to be noted that the moment FIs start coming in, the trend that you see is it's mainly the BFSI space as well as the IT space which starts to see the initial inflows. Right now, IT is not seeing that because, as we know, the kind of concerns that the sector has been facing globally, and that's the reason why the money is coming into the BFSI space right now, and not only the private banking space, but it's also the PSU space.
Gained over 3.3%.
Apart from that, very quickly, if you talk about what is going to support markets from here on, it's the buying interest, the FI flows, the strengthening of the rupee, the global market support, as well as the cheaper valuations. And the sectors we should be watching out for from here on will be BFSI, PSUs, and the defense space, especially because it seems it's a comeback of the defense space with stocks like a Garden Reach or Zen Technologies. You talk about any of the defense companies which saw some great amount of buying interest in terms of yesterday's session, Alex.
100%. HAL as well, looking particularly strong. BEL also going home with gains of about 3% or so. Let's talk about a couple of notes that have come through on India's strategy as well. There's Bernstein that has spoken about the Indian macro bottoming out, GDP to trend near 6.5% or thereabouts in FY26. All of that bodes well for Indian equity.
Correct. So I think this is the time now where we will see those positive notes that will start coming in from brokerage firms as well, taking into consideration that we've started the uptrend. But clearly what Bernstein is saying over here is that global risks such as tariffs and US recessions, these are the two things that have been discussed in context to the Indian markets. And India macros are at the bottom. GDP to trend remains near that 6.5% in FY26. The impact of reciprocal tariffs are more on US as compared to India. And that's what I think a majority of the market experts are alluding to as well. And they've reiterated that the positive view continues as the FI outflows are largely done from India. Their target for Nifty is 26,500 in terms of 2025. So that's going to be a number we should be watching out for from here on. And the market recovery part should not be considered to be linear. Apart from that, you have a UBS also, which has come out with their India strategy report. They're mainly talking about the housing upcycle, where they think that is the segment which still has steam. And the peak for housing is to be at least 3 years away. The developers should grow higher at over around 10%. And if you talk about the supply discipline, that will be strong with low inventories and new launches. So that is going to be one of the positives, because usually high inventories is one of the major concerns, that this segment has been facing. And as we know, real estate actually ended on a low in terms of 2024. It started on a weak, in fact, a very weak note in terms of 2025 as well. And they are positive on multiple sectors that are driven by the housing cycle. So they're positive on developers, consumer durables, cement, adhesives, cables and wires. In fact, cables and wires has been a segment that has been spoken about a lot, with a lot of new entrants that have been coming in the last couple of months. And very lastly, what they're saying is that the margin expansion should be higher for cement. Banks' credit growth is expected to get a boost with the housing upcycle. And they estimate every 5% incremental housing growth to add 10 basis points to 100 basis points, I beg your pardon, correct, to the credit growth. So the correlation between what's going to happen with housing to what's going to aid banking is absolutely strong with what UBS is making out. But clearly, Bernstein at 26,500.
Yeah, well, that's a number to watch out for in the longer term towards the end of the year, I guess. For now, we're looking at nearer term targets, 23,800, hopefully on the cards today. At the start, of course, we're looking at possible uptick for the Nifty 50, at least that's the indicative open. But let's go across to Puneet to talk about the key levels and the key data that has emerged from the derivatives space as well. Puneet, quite a few levels being taken out yesterday, and so therefore what's the setup at the start today?
Well, thanks, Tarang. You guys have spoken about the key levels for the Nifty as well as the Nifty Bank as well. But the Nifty implied open, of course, indicating a 69-point rise. It'll be important to see if we can go across the 23,800 mark, as you guys rightly mentioned, and maintain that at the closing as well. The Nifty, of course, has gained about 1,600 to 1,700 points from its lows of March 4th, which was 21,964. So definitely there. We've seen a sharp correction in open interest yesterday, while the premium has been around 41 odd points. But I also want to highlight, the open interest data yesterday on the Nifty Bank as well. That's also been something that we've looked at. We've seen roughly about a 15% fall in the open interest for the Bank Nifty as well. And when you look at some of the key aspect in terms of the key levels of the OI distribution as well, we have seen the maximum call option now moved to 25,000 now. While we have seen the near-term triggers of about 24,000 and 24,100 having the near-term call option interest, but the maximum now has moved to 25,000. So that's another key number to watch out for. The maximum put or open interest has been seen at 20,500, indicating the bullish momentum across the indexes. When you look at the delivery data, and that's something that we pulled out today, we saw a lot of delivery yesterday for the major stocks indices such as Reliance Industries amongst the key ones to watch for. This is, of course, the fund flow picture, but if you can pull up the delivery table as well, that'll be something to watch out for, because stocks like Reliance, Kotak Mahindra Bank, HDFC Bank saw 60 to 70% of the tradings that has been taken as delivery yesterday by the end of the session. We have the turnover ratio as well as delivery turnover as well, but that's very interesting aspect that delivery across the large cap stocks has been consistent as well. So let's also pull up the open interest losers as well, which we saw yesterday, because we did see some key stocks in focus for the open interest losers. That was some short coverings in Syngene International, while SAIL has also seen some short coverings because of better fundamental factors. But overall, it's expected to be a positive start. It'll be important to see if we maintain the 23,800 on the Nifty.
Absolutely. Thanks so much, Puneet, for that. Few technical analysts, of course, pointing to the fact that we've run up very quickly in the short term. So at least in the short term time frame, we are oversold. Hira alluded to that as well. But let's talk about a few individual stocks that you should keep on your radar today. And I've picked Reliance Industries. Of course, it has moved up and finally participated in yesterday's move. It moved up as much as 2% or thereabouts, contributed quite a bit. But it could be under pressure today if you look at the latest announcement from Donald Trump, and I'm alluding to what he said about the 25% tariffs on countries that are buying Venezuelan oil. This, of course, is effective the 2nd of April. Reliance Industries is the sole Indian importer, and of course, as a result of that, faces a negative impact. The exact impact is uncertain because of potential volume adjustments that they could take. Reliance Industries, of course, a large buyer of international oil as well. They can switch to other spot market fuels as well. That's the view as of now. So the implications not entirely known. Sentimentally, though, it could have a negative effect. RVNL is the next one on the list, and this is another order win that it has gotten, 116 crore or thereabouts from the Central Railway. This is not a very large order in the context of what RVNL itself has gotten in the recent past, but bear in mind that the stock was up about 3% yesterday, and it has also gained quite considerably over the last 5 trading sessions, as much as 12% or thereabouts. So this could also be seen as a positive. Suzlon is the next one, and this is a Motilal Oswal initiation of coverage with a buy rating and a target price of as much as 70. It says that the company is riding, and it is an interesting statement that they're making, riding the winds of growth. Of course, this is a wind energy player. It is, of course, going to be critical, and this is not something that is new, but the brokerage is taking account of that. It's going to be critical in India's renewable future, because if India is to achieve its targets of renewable capacity by 2030, then wind energy has to more than double the capacity. This is, of course, a bellwether play on India's wind energy potential, and domestic players are well placed if the Niti Aayog pushes for local content in that space. Competition is rising, but the pie is big enough for economies of scale to drive adjusted PAT compounded annual growth rate of 63% according to Motilal Oswal between FY24 and 27, and that's quite a significant growth. EBITDA margin is healthy. The tax shield benefits until FY27 also bode well, and the balance sheet will be placed to fund future growth as well. It also says, Motilal, that Suzlon is reasonably priced versus capital goods peers.
So these are the three ones, but on my list, an interesting one which I have is a Restaurant Brands Asia. Now, this is the operator of Burger King and Popeyes in India. They've actually launched a QIP, and this is to raise around 500 odd crores. The base deal size is set at around 400 odd crores with an indicative price of almost around 60 rupees per share. The floor price for issue is at 62.32, and it reflects almost a 6.5% to 7% discount with regards to its last closing. Now, the issuance will result in almost a 16 to 17% expansion in the company's share capital. Motilal Oswal Investment Advisors is the sole book running lead manager to the offering. And clearly, if you talk about Restaurant Brands Asia, they reported almost a loss of around 50 odd crores, if I'm not mistaken, in the third quarter of FY25. And a loss of around versus a loss of around 36 odd crores in the same period last year. So the losses had expanded for this counter, and the stock is down almost 17 to 18% in the last 3 months. If you talk about the overall company as well, it operates almost 510 stores in India, and it's almost up around by 50 stores on a quarter-on-quarter basis, and it added around 69 stores on a year-on-year basis. So this is going to be one that we'll be watching out for, because the funds that they will raise will be used to prepay debt as well as for the capex plans. How much will be used for what purpose is not known, so watch out for Restaurant Brand Retail. The second is Easy Trip Planners, I beg your pardon. Now, they are looking to invest and purchase 49% stake in Big Charter. To know about Big Charter, that's a prominent player in India's charter aviation sector. They will be infusing around 1,000 Brazilian reals in the Brazil-based arm of the company. Again, they'll be infusing some amount in their Saudi-based arm as well, and around $10,000 in the US-based arm. Clearly, the reason why they're doing this is because they're looking to expand the charter and non-scheduled aviation market, is what they're saying. What they're saying is that they'll democratize travel, particularly in Tier 2 and Tier 3 cities. And if you talk about FY24, Big Charter generated almost 130 odd crores in terms of revenue. So Easy Trip Planners is going to be in focus. I mean, this has been a very interesting stock, Alex, if you think, because the kind of downtick that we've seen on this counter, a similar uptick has also come in at similar levels. So if you just pull up a 12-month chart, there you go 38, 39%, but you'll see those bouts of upticks that have come in, in terms of Easy Trip Planners, and they're saying that they will expand their global presence by doing something like this. So let's see to what benefit it comes in.
The stock was under pressure, of course, because of promoters selling, I believe. If I remember correctly, about 6 months back.
It was the previous time when the promoters were selling. Though after the first bout of selling, you did have one of the promoters who came out and said that this will be the last round, and they're not looking to offload further. So probably, I think business is what we need to watch out for from here on. And very lastly, you have a Garden Reach Shipbuilders. They've signed a pact with a German firm for 2 more multi-purpose vehicles, and this is in line with the option agreement that was signed earlier. The space is in focus. Probably you could see some buying interest that could be coming in terms of a Garden Reach Shipbuilders as well. So these are the stocks that are on my list. But one stock that did see a good day of trade yesterday was a Supriya Life Science. The stock ended with gains of 5.5% in terms of yesterday's session at the day's highest levels, and it's up over 23% in the last 5 trading sessions. The reason of this consistent strength is what we need to understand. The management commentary and the strong revenue guidance is what probably is the reason why you're seeing these kind of gains. In fact, NDTV Profit did get a chance to speak to the management exclusively on the sidelines of the Motilal Oswal's 11th ideation conference. Let's quickly listen into that chunk.
So in terms of CMO, CDMO, definitely for us, it's going to be one of the areas of growth for the next 3 years. We are expecting about 20% of the total revenue in FY27 to come from CMO, CDMO opportunities. As far as China Plus One is concerned, definitely any manufacturer who has the right kind of regulatory approvals and who has a proven track record in terms of export quality will benefit from this. And we are one of those manufacturers. We have a US FDA EU approved plant. We have been supplying in export market for over 38 years. So we have an excellent track record when it comes to quality. So any manufacturer who has regulatory quality will definitely benefit from the China Plus One strategy.
Right, thanks for painting that picture. So you have around 3 to 4 opportunities on the advanced intermediate and the API side. So what kind of growth do you pencil in over the next 2 quarters through these opportunities? And are these significant enough to have a material impact on the company?
So in the next 2 to 3 quarters, I don't see a significant impact in terms of revenue. But like I said, by FY27, yes, you can expect about 20% coming in from these opportunities.
Right, so we are talking about API and advanced intermediate.
Yes, so for us, CMO is on 2 fronts. One is the API advanced intermediate from the current site that we have in Lote Parshuram. And then we also have Ambernath site which is going on production in the next 1 quarter. So that would be contract manufacturing on the finished formulation side. So for us, it's going to be 2 areas, API advanced intermediate as well as finished formulations.
Right, so that was one of my questions actually, as to an update on the Ambernath facility for production. So you said that over the next 1 quarter, is that correct?
Yes, so we have already done our validation batches in Ambernath, and I think next quarter we will start the commercial production. We are also expecting to trigger the EU audit in the next financial year, because it is again targeted for CMO in regulated market space, because as a company we focus more on regulated markets. So maybe second quarter of next year we can expect the EU audit.
Right, and what are your plans on North America and Africa businesses, and what is the progress? Also, what kind of revenue would you expect from these businesses?
So for us, out of the total revenue that we do, about 90% comes in from exports, and out of this 45% comes in from Europe. It's one of our largest regulated markets. North America for us right now is very small, I think less than 5% of the total revenue. With some of the new product launches and the new CMO contracts, it will increase slightly, but for us as a company, Latin American markets and European markets would still be a large chunk of the revenue.
Right, and moving on, let's talk about backward integration. So they contribute around 77% of the revenue, if I'm not wrong. So any update on how that backward integration is progressing?
So backward integration, I would say, is the most important aspect of us as a company. We are one of those few companies who believe in backward integration, and we make our own advanced intermediates. We only buy the basic chemicals from outside. The idea is to have a fully backward integrated basket, but for the new launches, sometimes it is not possible from the get-go. So once the product has reached certain scale in the non-regulated, semi-regulated markets, then we go for backward integration. By FY27, I would say fairly 90% of the portfolio would be fully backward integrated.
Right, thanks for that. And my last question again, any update on the company entering into contrast media?
So yes, you can expect contrast media APIs getting launched by Q2 of next financial year.
Right, and lastly again, I said that was my last question, but you have 3 land parcels, right? So can you give us an update on how those land parcels are being utilized?
So our next leg of expansion will happen in the Patalganga land parcel that we have, but we are expecting it at least 2 years away from where we are today. We have recently invested in Module E in our current site, and then of course Ambernath we have invested about 125 crores. So almost 250 crores capex we have done in the last 2 years. So once that reaches full utilization, let's say by FY27, then I think we would start looking at the Patalganga land parcel.
All right, Supriya Life Sciences, keep that on your radar. And by the way, that whole conversation should be available on the YouTube channel. I'd invite you to check it out, as well as any other management interviews that you should watch out for ahead of trade today. A lot of key conversations emerging from that conference. Let's talk about UBS and what they're saying about cement. We alluded to this earlier on in the show. Hiral spoke about some of the aspects that they are focusing on, but they have upgraded their calls on some of the key players, including Ambuja Cement and Ultratech. Mika joining in to break it down. Mika, of course, we've been hearing a buzz of certain increases in prices in certain geographies. What are they saying about cement?
So what UBS has done is upgraded its entire cement coverage to a buy rating. This includes counters like Ultratech Cement, Ambuja Cement, ACC and Dalmia Bharat, all upgraded to a buy rating. Ambuja Cement and Dalmia Bharat were actually previously pegged with a sell rating. In terms of the upside potential, the highest upside potential stands for Ambuja Cement and Dalmia Bharat, a 20% upside when you talk about its new targets versus its previous closing price. For Ambuja Cements, for ACC and Ultratech, it stands at 16 and 18% respectively. In terms of the top pick for UBS is Ambuja because of higher growth as well as lower valuations. They've upgraded Ultratech on strong execution in a tough environment, and they've upgraded Dalmia's as well as maintained ACC's ratings because of valuations and industry tailwinds. In terms of why UBS has turned positive, because it was negative on the sector for a while now. Well, they expect an earnings upcycle to emerge in the sector in FY26. This is based on several factors. One, demand is expected to be a benefit from the housing upcycle as well as the revival of government capex. There are also structural cost savings that are helping drive margins for the companies, and UBS believes that cement prices have bottomed out in the 9 months FY25, which saw an 8% sharp fall in prices pan-India. And lastly, the sector consolidation that has been led by the top two players, which is Ultratech and Ambuja Cement. And lastly, in terms of earnings potential, well, Ultratech, they expect an EBITDA CAGR of 31% over FY25 and FY27. Ambuja, they expect the consolidated EBITDA of the company to double over the same period. ACC, they expect EBITDA CAGR of 26% over FY25 to FY27, and Dalmia, the expected compounded annual growth rate stands at 18%.
So positive for the cement space as a whole, but key stocks to watch out for. Mika, thanks so much for getting us those details. Now, in the profit watch list, we've got several stocks that you should watch out for. We've already discussed quite a few, but take a look at this. Ambuja Cements, we just spoke about this. UBS upgrading it to a buy, and certain other stocks in the cement space as well. Bandhan Bank, CLSA sees a 49% upside, a conviction, high conviction buy for CLSA at this point. Perhaps they're saying, and we'll get the details of this, that the issues that the bank was facing in the microfinance space are now behind it, perhaps. Brigade Enterprises acquires 4.4 acres of land in Bengaluru. And this is an update that we will also speak about. Central Bank, there's a QIP floor price that has been announced. It's at a 9% discount to yesterday's closing price, and the pricing of that 1,500 crore IPO is going to be critical to watch. The capital adequacy ratio standing at very close to that 16 mark. And also RVNL, it was on my list. It has won a 116 crore order.
Right, you have NBFCs that will be in focus in today's session, and this is HSBC who's gone ahead and hiked the price targets for the companies as well. We will get you more details on the same. You have a Suzlon Energy, it's a thumbs up again. MOSL has initiated a call with a buy rating. Reliance Industries, you could see some bit of a negative reaction on this one on the back of the tariffs on Venezuelan oil as well. And a Tech Mahindra that will be in focus, which is again a thumbs down as UBS has gone ahead and cut the price target on this counter. So it's going to be interesting because if Tech Mahindra and RIL see a major downtick, there could be some bit of pressure that could be coming in terms of where markets are concerned. But let's also welcome in our guest today. We have Amar Dev Singh from Angel One and Sunny Agrawal from SBI Cap Securities. Good morning and welcome to the show, gentlemen. Amar, let me first come to you. Clearly, 23,500 was the key. We are above the first resistance level of 23,600 in terms of Nifty 50. From here on, what's the day looking like? Are you seeing further upside, or you think there could be some bit of consolidation?
I would say that the way the markets have rallied over the last, 7-8 trading sessions, has definitely, I would say, taken many by surprise. But yes, we had earlier also were talking about that a short-term bottom seems to have formed because the markets were sustaining very strongly above the 22,000 levels. Now, if you look at the current levels where the markets are, yes, towards the higher levels, that is 23,700, 800 technically. That's a very strong zone of resistance. So we are likely to witness some sort of profit booking. And also what's happening is that a lot of shorts have got squeezed because the intensity of the rise has, as I said, has taken many by surprise. And the shorts are, they've definitely, most of the shorts have got squared, and fresh shorts that are being created, they would be likely to be created more towards 23,700, 800 zone, because that's technically a very strong zone of resistance where the markets could witness profit booking as well as some sort of selling pressure. If you look at the short-term trend, that is very strong. So the momentum clearly is in favor of the bulls from a short-term perspective. Intermediate term, what we are seeing is that some of the indicators are inching on the positive side, but we'll have to wait and watch out how March actually plays out, because there are many various reasons also where we've seen the markets pull back. So I would say need to be slightly cautious at these levels. As far as support is concerned, the good support comes at around 23,400, 500 zone from a short-term perspective.
Okay. Amar, hi, good morning. Alex here, and Sunny, good morning as well. Amar, I'll come back to you on a follow-up to that. Based on the change in the text of the derivative action that you just pointed to, that you alluded to, certain shorts getting squeezed, would it be okay to interpret that to say that if there is selling that emerges at these levels, perhaps the drop that you see will be short-lived one and not as deep as you've seen in the recent past? And what individual counters are you focused on this morning?
Yeah, so I would say I would definitely agree with what you said, because if I look at even Bank Nifty from a short-term perspective, some of the technical indicators are very strong. That is, the bullish momentum is very strong. So what it effectively means is that those who got squeezed off, they'll again think twice to go short at the current levels. And also, if there is a pullback, that could be a short-term buying opportunity, because as I said, we'll have to wait and watch how actually March plays out. We've also got the monthly expiry coming in, and also it's a financial year closure. So having said that, I would say from a short-term perspective, yes, any pullback could be a buying opportunity. But as I said, the levels to watch out for Nifty are those levels one definitely needs to keep a close watch on. Right. As far as individual stocks are concerned, I would say one stock which I've been talking about for some time, Bharat Electronics. This is one stock which has rallied significantly from almost 240 levels to currently around 300 odd levels. So this is one stock one can look at buying from a short-term perspective for an upside target of 335 and a stop loss of 277.
Right. So two calls that Amar is giving. One is BEL as well as Canara Bank, both interesting sectors that have been in the limelight right now. But Sunny, let me come to you. Clearly, if you see in terms of the way the market texture is right now, there is FI Bank that's coming in, and it seems majority of the funds are coming into the PSU banking space or the PSU space if you look at defense as well. What would you advise right now? Do you think the texture of the market is such where there could be buying that could come in from a fundamental perspective?
Yeah, good morning and thanks for having me on the show. I think yes, definitely. I think in terms of valuation, certain pockets definitely have turned attractive, and especially as you alluded that PSU banking as a sector is trading at a very attractive valuation. And at the same time, the booster by RBI in terms of liquidity and in terms of the recent changes definitely augurs well for the entire banking space as well as PSU banks within that. So if you look at valuation metrics, basically all the private banks are trading in the band of 1.5 to 2.5 times one year forward price to book, whereas PSU banks are trading between 0.8 to 1.2, barring SBI, which always commands a premium valuation. So yes, PSU bank growing at 10 to 12% kind of credit growth, a very decent balance sheet where NPAs are. The issues of NPAs are not much ahead of us. In fact, because of the changes in recent regulation by RBI, I believe there is a probability that credit growth guidance may be upgraded by a few of the PSU banks going forward. So definitely PSU banks risk reward look favorable. And again, here I would like to stick with frontline banks like Bank of Baroda, Canara Bank and Indian Bank on the PSU market.
Sunny, quick comment on central bank and the fundraise that they've announced. Not a very large one, 1,500 crore or thereabouts. But it's interesting considering that it's not like their capital adequacy is low in the context of what public sector banks have at over 16%. So how are you reading this?
Again, if I remember, in a few of the smaller banks, the promoter holding, that is Government of India is holding, is more than 75%, and there was a clear mandate by government to them that either you go and raise the fund so that automatically their shareholding reduces and they go on to comply with the SEBI regulation of reducing their holding below 75%. So I think yes. I mean, a dual agenda. One is indirectly reducing the government holding. On other hand, mobilizing the growth capital, which may be required for the next 2 to 3 years.
All right. So let's focus on some of these banks, in fact, what Sunny was just speaking about, but there are updates that we need to speak about with regard to some of them. And Punjab and Sindh Bank, UCO Bank, Central Bank, we just spoke about the fundraise that has been announced. And Mahima joining in to tell you about what to focus on here. Mahima?
Right, so a couple of these banks are opening their QIP today. Now, to start with, Punjab Sindh Bank it opens its QIP today. The floor price is set at 40.38, which is a 9.5% discount from its yesterday's closing. And overall, they are raising a capital of 2,000 crore. In terms of the overall fundraise, this will happen today. And overall, if you see the stock performance also of the company, the share price has fallen over 22% in the last 12 months and has also dipped around 8% on a year-to-date basis. The next one is UCO Bank. Again, it opens its QIP today, and the floor price approved is at 36 per share. Central Bank is another counter where QIP opens today and the floor price is set at 42.62. This is at a 9% discount from its yesterday's closing. In terms of the overall performance, as you also mentioned, Alex, the capital adequacy ratio as of Q3 FY25 stood at 16.43, and the gross advances grew by around 13% YOY. So this is the overall view as to all of these three banks and with respect to their fundraising.
All right. Thanks so much, Mahima, for getting us those details. Over 3% was a gain for the PSU banking pack as a whole. And we had Amar already allude to the Bank Nifty and the move that it's had. But Amar, individual names, what would you be focused on? Because HDFC Bank has had moves in the recent past. ICICI Bank has looked particularly strong. So if you were to venture into the banking space and buy stocks right now, which would those be? There are, of course, opportunities in the PSU space as well. I think you're on mute, Amar.
Yeah.
So
if you look at the private space, I would say HDFC Bank is definitely one which has been actually trying to move up significantly. If I look at the structure of HDFC Bank from a long-term perspective, that continues to be very, very strong. And what we are seeing is that the bank, when the markets had corrected, the bank also had corrected. But the correction wasn't really as deep. And what we are seeing right now is that the momentum has been building up. So among the private space, if I look at and compare it with, for example, ICICI Bank. So ICICI Bank is also strong on the charts. We've seen some strong volumes, but I would prefer going with HDFC Bank from a short-term to a medium-term perspective.
Right, so that's with regards to the banking space. One more aspect that Alex interestingly was mentioning, which is important to address, is the RBI changes with regards to the priority sector lending framework. Now, clearly, when you talk about the priority sector lending, it's an RBI directive to banks to allocate lending to specific sectors which are of priority. Now, a couple of changes that they've made. Firstly, they've expanded their limit for housing as well as renewable energy. Housing would include some slum rehabilitation as well as infra financing. Secondly, if you talk about renewable energy financing, that is also been included. And there has been a cap that has been made on loans by urban cooperative banks to women. That cap has been removed, so that is again a positive. And the revised targets for PSL, they've revised their targets for PSL by urban cooperative banks. Now, what will be the impact of this is important. There could be better flow of credit to housing as well as the renewable energy sector. And credit to specific sectors may also get cheaper from here on. Now, in terms of impact, we'll have to watch out for if it really does. But there could be a possible negative impact with regards to where REC, PFC as well as IRIDA go. So 3 of the stocks that will be in focus on the back of this news. In fact, let me head across to Sunny to take his view. Sunny, if you've gone through the RBI changes with regards to the priority sector lending framework, how are you looking at it in terms of the announcement, the impact, and which stocks, according to you, you should be watching out for?
I think one has to keep in mind that the overall limit of 40% of ANBC that has to be under PSL lending, that has not changed. So I think only the bucket under which this PSL lending is allowed has been will vary slightly depending on the criteria. So definitely yes, it augurs well for certain sectors like renewable and housing, as you have alluded to, as the availability of credit will be much easier over there. So I think positive from NBFC's perspective, wherein all these renewable related, or for that matter, renewable energy related projects at a smaller level. One has to keep in mind that under the PSL lending, the size of lending will be very small, I believe up to the 30-40 crore number. Compared to that, PFC, REC, their lending size is humongous, in hundreds of crores, thousands of crores. So I think the impact on PFC, REC and IRIDA should be minuscule as such, as the opportunity of growth is significant in the entire power or renewable energy space.
All right. So, in fact, let's pull up the nearer term charts for PFC, REC just to drive home that point, and IRIDA as well. Just to see, and we can do the year to date just to see how it. So 1 month gained about 11%. So clawing back some of the declines that it has seen, 15% for REC. Amar, quick view on this one. PFC, REC, the pair. Would you venture out and buy, or would you hold off?
I would say if I look at PFC would run into some stiff wall of resistance around the 440, 450 level. So that's the upside that one can look at from a short-term perspective. And if I talk about the other stock which you mentioned, REC also has an opportunity on the upside towards 480. So you can expect anywhere between 8 to 10% rally in REC, where it could meet with some sort of selling resistance, because the charts clearly indicate that the short-term rally which we are witnessing is likely to witness profit booking and selling at higher levels for most of the stocks in the short term.
There you go. So you have this year chart for REC, and you can see a bounce back from those lower levels. But as Amar is just pointing out, don't venture out and buy aggressively at this juncture, considering that you could see a bit of a wobble as people book the short-term gains. Let's talk about the latest update from the Securities and Exchange Board of India. There was a first board meeting under the new chairperson Tuhin Kanta Pandey last evening, and in fact the market regulators approved the formation of a high-level committee to revamp its rules on conflict of interest and disclosure obligations for board members. There are a couple more updates that came through from that meeting, and Agni Dev is joining in to tell you about what was discussed and what was announced. Agni?
That's right, Alex. So let me take you to the top 5 takeaways that came out from the SEBI board meet. So from what we have, first of all, SEBI has approved the formation of a high-level committee to decide on conflict of interest norm for SEBI board members. Now remember, NDTV Profit had already reported this the previous day, and this is a news break that has been confirmed. So the board, the committee will table its report within 3 months of being formed. However, the members of this committee have not yet been decided and will be announced in due course of time. The second update from SEBI's end is the easing of FPI disclosure norms. So earlier, norms for granular disclosure applied to a limit of AUM of 25,000 crore. That limit has now been doubled to 50,000 crore. Now remember, this comes on the back of a heavy foreign fund exodus from India, and the SEBI chief Tuhin Kanta Pandey has said that the move is aimed at improving ease of doing business. The third thing is a relief for merchant bankers to some extent. SEBI had earlier said that there will be an implementation of an amendment wherein merchant bankers will have to undertake their other businesses through separate legal entities. So this is a move that has now been deferred in a move that can be seen as a relief for merchant bankers. The fourth thing that SEBI has done is asked MIIs to introduce a cooling off period for KMPs and PIDs when going from one MII to another. This might sound like a bit of a jargon, but let me break it down to you. A PID is a public interest director, a KMP is a key managerial personnel, and an MII is a market infra institution like your NSE, BSE, CDSL, other depositories or any other similar market institution. So SEBI has said that any key personnel, which can include risk officers, compliance officers, information officers, technology officers, so any chief officer moving from one market institution to another will need to serve a cooling off period. The fifth thing is that SEBI has approved the advance collectment of a 1 year of fee payment from for research analysts and investment advisors. Now remember that earlier research analysts could charge advance fees of only up to 1 quarter, while investment advisors could do so for an advance period of only 2 quarters. Other than that, what has come out from the press conference that followed the decisions, not through the decisions exactly, is that SEBI has said that it is not looking at any entry level criteria for F&O players. So that's it from my end. Stay tuned.
Thank you, Agni, for getting us the details. So interesting points that have come in from the SEBI board meet as well. In fact, this is the first board meet with the new chairperson. And overall, if you see in terms of the outcome, the FPI limit is what is interesting over here. Whatever will come out in terms of conflict of interest and the F&O angle is what we should be watching out for. But one stock that we want to discuss today is a Reliance Industries. Now, you know that Trump has issued an order stating that any country which is buying oil and gas from Venezuela will be slapped with another 25% tax, with addition to already existing tariffs to be imposed from the 2nd of April. Now, from what analysts are indicating is that Reliance Industries is the one which is one of the buyers as well. Sunny, how would you look at it? Because Reliance was one of the contributors in terms of yesterday's up move. We saw gains of 2% coming in there. How big a hit could this be?
Again, to be very honest, I don't know what percentage of crude oil is currently sourced by Reliance to Venezuela. And at the same time, I have to keep in mind that it's an open field where Reliance have got an option to source their crude oil from any other country in case there is some restriction on buying from Venezuela. So I think the impact will be minuscule, maybe for a few weeks or for a quarter, maybe in terms of the crude oil sourcing. Otherwise, I don't think any significant impact, as overall import from Venezuela hardly account for 1 or 2% of the total import basket of India.
Okay. So, but let me ask you another question on Reliance Industries. Based on your judgment of growth going forward for its various businesses and based on the price action in the recent past, it seems now finally that buying seems to be coming through, Sunny. So, what is your call on Reliance Industries, and is this a zone to accumulate?
Yeah, coming to Reliance, definitely I think risk reward continue to remain attractive in the band of 1200 to 1300 for Reliance, as we all know that the company earlier was going through trouble in terms of a slowdown on consumption front hitting their retail business. But with an expectation of revival in consumption during FY26, we expect their retail business to again go back to a healthy double-digit growth. At the same time, telecom business continue to have a tailwind in terms of recent tariff hike, which will continue for 2 more quarters. And in terms of oil and gas and O2C business, again, that business can remain subdued for a quarter or two. But overall, if you look at some of the part valuation, we believe the fair value of the company is 1600 rupees. So if somebody has got an investment horizon of 12 to 18 months, he can definitely look at Reliance with a price target of rupees 1600.
Right, so that's with regards to where Reliance Industries is concerned. But apart from that, if you see in terms of the defense pack, that is also pretty interesting with the kind of moves that you've seen in yesterday's session. You talk about HAL, you talk about Zen Technologies, you talk about Parents Defense. All of them have been on an uptrend in terms of, yesterday's day of trade. Amar, anything from the defense pack that you find interesting? And if so, what would be your top picks with a target price and a stop loss?
Yeah, I would say amongst the defense space, one I've already spoken, BL is one stock which definitely can be looked at with a 8 to 10% upside and a stop loss of 277 from the current prices. The second is HAL is also one stock which can be looked at. It has, though, rallied significantly, almost 33% this month itself. And yesterday also was a very sharp move for the stock. So on any pullback, see, these are stocks which you can definitely accumulate from a medium-term to long-term perspective. As far as the short-term bottom seems to have definitely formed for most of these stocks until unless we see a meltdown in the markets. That's the only caveat. Currently, it's around 4,100 levels. Any pullback towards the 3,900, 4,000 can be a very good buying opportunity because technically the stop loss needs to be below the 3,800 levels for an upside target, because once the stock starts sustaining above the current levels, that is 4,100, it has the potential to rally towards 4,600, 4,700 levels. So that could be an upside target for HAL.
Aman, what will be your stop loss on the HAL?
So HAL, the stop loss would be below the 3,800 level. That's what I've spoken. Yeah.
Okay. Okay, so let me also ask you this. If you were one of the lucky few, or maybe I don't know how many people managed to catch that bottom in this defense pack a month back, and you've seen gains of over 20% in some stocks, the simple question, Amar, would you book at this juncture?
I would definitely advise booking at least part profit, maybe 50, 60%, or maybe even 70%, depending upon the risk appetite. Because what we are seeing in the markets is that post the sharp correction, we are seeing a pullback. Now, this is on certain expectations that we'll have maybe better quarterly results also going to come in, and value buying also to a certain extent. But still, I would say, if I look at the charts, so they clearly indicate that most of the stocks which I mentioned are approaching key zones of resistance where we could witness some profit booking definitely coming in, most of them, be it even Reliance.
Okay. All right. You saw a few stocks from the broader markets that we identified and told you about that moved yesterday, and one of them was Finolex. And there is an update, in fact, with regard to anti-dumping duty that has been announced yesterday on China. And Puneet is joining in to tell you about this because it has to do with PVC paste resin. Puneet, what is the implication for companies like Finolex, Supreme, as well as Astral?
Well, thanks for that. So there was some, wouldn't say the word is confusion, but specifically PVC paste resin is not used specifically for manufacturing pipes in the country. And the move that we saw yesterday, 12% for Finolex Industries on an intraday high, but roughly a 4 to 5% high for Supreme as well as Astral. But the fine print of that which came out yesterday was something to watch out for, because PVC paste resin, which is now where India has put an import duty against China, that is specifically used for coating as well as forming functions and not specifically for manufacturing pipe. While on the other hand, the PVC resin is used for manufacturing of as a key raw material for pipes, and there is no change in import duty of that, and hence we saw that intraday correction yesterday for Finolex Industries, and there is no material benefit for Astral as well as Supreme Industries because the PVC resin segment is very minuscule for them compared to roughly 20 to 30% for Finolex Industries, and hence while the benefit of PVC paste resin and the import duty on that will benefit Finolex Industries, there is no material benefit for Astral as well as Supreme Industries. And the benefit for Finolex also, while it could be anticipated, it could be much higher for the pipe segment since PVC paste resin is not used for pipes. It'll have a lesser benefit, and hence we might see some pressure on these stocks. Yesterday we did see a correction by the end of the session, but we might see these stocks correcting on anticipation of the import duty being reduced, but not for the pipe segment.
Important clarification there. Thanks so much, Puneet, for getting us those details. We will speak about the implications of this update in just a bit, but we have to take a very quick break. We'll be back on the other side to talk about these companies as well as more before the start of trade. Do stay tuned.
small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting in space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold
Welcome back. You're watching India Market Open. Right before we get to the pre-open rates, let's quickly pull up the implied for you as well. So you're looking at another positive day for the Indian markets, which is going to be a huge relief, a big breather there. Can we continue the up move? That's the top question this morning for Amar Dev Singh and for Sunny Agarwal. Amar, good morning. I mean, you've given your picks this morning. You've spoken about defense stocks. I wonder if you'd add railway stocks to that picture. Because, these are the comeback kids, isn't it? Who might be also participating in this rally. Companies that have been ignored for the last 5-6 months or even more with investors.
Yeah, I would say if we look at some of the railway stocks, like for example, RailTel, which has corrected by almost 50%, because if you look at from almost 670 in 17, currently it's around 317. Or if we look at RVNL, that also has corrected. So what has happened is that most of these stocks have corrected significantly. So there is this pullback. Now, the big question is how long is this pullback going to last and from where that's going to reverse? So I would recommend definitely that you need to be slightly cautious. Don't expect that we'll have another bull rally in a very short span of time. It would be more of consolidation and also of profit booking going forward. So you need to be slightly cautious there.
Okay, so cautious, fine. Any favorites here as far as real stocks are concerned? Titagarh, Jupiter, any of those that you see on the chart? Amar, this question for you.
Yeah, so if I look at some of the stocks in the railway, Jupiter Wagons is one stock which one can look. But again, I would say if I look at the chart structure, clearly tells me that it's currently on 365. So one will have to look at booking profits around anywhere between 380, 400. That's the upside. But the downside, because the stock has got crucial support somewhere around 310 or so, the risk-reward issue wouldn't actually work out. So I would say rather stay away at the moment.
Okay, stay away at the moment. Sunny, good morning. You'd agree with that? Stay away at the moment from railway stocks altogether, even as defense continues to be in flavor.
Again, I would like to tweak this sentence a bit. I would like to say buy on dip is the right strategy, especially on railway wagon segment. So we are bullish on Titagarh, Texmaco and Jupiter Wagon, as we believe all the three companies are sitting on a very robust order book, and the kind of focus which government has towards shifting of logistics from road to rail. So I think wagon as a sector continue to look good, and we are bullish on all the three names with a long-term investment.
Okay. Sunny, I know we spoke about Reliance Industries, but let me also ask you about the oil marketing companies. And if I remember correctly, just a few weeks back, we were talking about the potential for these. Maybe they had bottomed out. And why don't we pull up the 1 month chart for HPCL, BPCL, just to see how they've done. But Sunny, would you buy at this juncture?
Yes, I think risk reward continue to be favorable as far as oil marketing companies are concerned. So basically, crude oil has come off by $8 to $10 during the last 2 months. At the same time, we have not seen any changes on the retail fuel prices front. So I think in terms of at least marketing margin, all these oil marketing companies are likely to report healthy set of numbers. And at the same time, one has to keep in mind that September quarter and December quarter was the kind of low base for all the oil marketing companies due to one reason or other. So I feel even on from an earning perspective, I think on sequential basis, all the oil marketing companies are likely to report healthy set of number, trading at a reasonable valuation. I think risk reward continue to remain favorable for all the oil marketing.
Akshay Bhagwat also joining in this morning of JM Financial Services. Akshay, very good morning to you. What is, are you looking at a Nifty at 24,000 in the short term? Are you seeing that much of power, firing the markets? Or would it be too soon to say?
Good morning to all. Well, yes, there is absolute fire in the market, and this upside move has caught many by surprise, especially if you are an option writer or you're short in the future segment. You're on the wrong side of the market because it's the monthly expiry which is just in the next couple of days. There is no indication as yet on the technical setup where you can see a kind of a stopover in the Nifty index, and really it is more of the short covering rally which is driven by the covering up of call writing positions, which is driving up the index. Now, clearly the call writers in the futures and options segment are shifting their writing bets to strikes of 24,000, 24,300 and higher. So there is kind of a stance where the call writers are severely stuck, and in all probabilities there is a very good chance that the market may aim for levels of 24,000 in the next couple of trading sessions itself. So yes, 24,000 landmark can be achieved within this expiry itself.
Expiry, that's important. So, I mean, if you're sitting with shorts, of course, you have to cover up quickly. That's probably what's driving up the markets. But if you want to build fresh positions, Akshay, that question to you, what would you advise?
Really, from a fresh buying perspective, I think we should give a look at how the rollover numbers comes out in the futures and options, because the recovery is too fast and too furious, and really you have a lot of factors like an NAV propping or tax harvesting, which are all the factors which come into play in the second half of March. So really you have to take this move in part and parcels at this point of time. Clearly, risk reward payoff doesn't suit well for a trader, and really you have to wait it out and patiently wait for a small dip for things to settle down before building up fresh trading buys.
Very quickly, Akshay, your top picks this morning.
Well, I have ITC on the buy side. Most of the stocks have moved up. So really, FMCG has not done yet its share of up move. So I think ITC should see 418 and 422 in the short term scenario. Stop loss will be 402. And the second trade is in financial services, Power Finance Corporation. The target area I look forward to is 445 and 453. These are the two targets with a stop loss of 407.
Okay. All right, so PFC as well as ITC on his list. But let's talk about the big brokerage call of the day. And we've got Axis Capital that has initiated a buy on Karur Vysya Bank with a target price of 295. Another financial name that is in focus today. Harsh joining in to tell you what they're saying and why this is a conviction buy. Harsh?
Yeah, good morning. 41% upside from here is what they're seeing on this one. I'll break it up. First off, with regard to margins, they believe that Karur Vysya has a phenomenal deposit franchise, quote unquote, formidable deposit franchise versus peers, and therefore raising funds is at a lower cost is not a challenge with regard to where this bank is concerned. Plus a reduction of turnaround time with regard to loan disbursals, as well as trying to with digital, trying to push loans out in a more efficient fashion are going to aid the margin numbers as well going forward. There's been a big shift from corporate towards agri and MSME. All of these levers should help margins going forward. Risk-based pricing across loan segments should overall help the margin profile. Second, with regard to asset quality, what's helping it is the shift away from corporate. Loan origination has become better and the recovery processes have become better according to Axis Securities. OPEX ratios will continue to remain elevated according to them. Higher employee expenses, retirement provisions as well as higher tech spends will keep pressure with regard to where OPEX is concerned, but otherwise overall ROA delivery expected at 1.6% and ROE at 17% FY27 is what they're penciling in, giving it a 1.6 times price to book. Risks, of course, being delayed in cost improvement ratios or improvement in cost ratios, and a higher than expected slippage or credit cost could well impact the expectations around the target price. But outside of that, a very solid 41% upside.
A 41% upside coming in on a Karur Vysya Bank from Axis Capital. The stock ended with gains of nearly 2% in yesterday's session as well. But moving on, you have the consumption pack that has been in focus, not doing pretty well right now in terms of the sector as a whole. And from what we are picking up is that the FMCG distributors' inventory, that is what is piling up, and this is mainly because of the faltering that's happened in the February sales numbers after that marginal uptick that we saw in January. My colleague Sesha Sen has more details on this. Sesha, if you could help us understand what has happened overall in terms of the inventory pile-up and which are the companies that you see that could be getting impacted?
The distributors of fast-moving consumer good companies have been piling up inventory as companies aggressively push products into channels to show volume growth. Now, after a lackluster festival season, there was a slight uptick in demand in January, but again, February and March so far have lagged, causing a build-up in stocks. Now, what we are given to understand is that the average closing stock at distributor levels has gone up by 25 to 40 days versus a lag of 7 to 10 days in the last few quarters. Distributors of companies including Colgate, Dabur and Britannia have missed their sales target for February as demand in urban markets remains under pressure. Meanwhile, the FMCG companies have been focusing more on quick commerce, standalone modern stores as well as rural markets for growth. Now, unlike in the traditional general trade, there is in fact a surge in discounts in modern trade such as the supermarkets, and companies are pushing for bundled offers in small packs to grow volumes. Now, but that hasn't really been effective because the muted demand scenario would mean another stressful quarter for FMCG companies, with analysts predicting a single-digit volume growth for FMCG players in the March quarter. Rising input costs such as those of palm oil and coffee are also eating into margins. While companies have taken price hikes, it may not really be enough to cushion margins in a subdued demand environment.
Okay, important story there from our colleague Sesha, who has done the ground checks to back it up. And I want to just pull up some of the stocks that she's talking about and look at how they're doing in the pre-open session and how they fared in the pre-open session. Your pre-open has ended now. Nestle, Colgate, just Britannia, just let's look at a few of them and see how they're performing. Colgate actually under pressure this morning. I think so is Nestle as well. What is the play? Sunny, let me come to you on this. Is there any, when you're expecting an economic recovery, is FMCG something that is going to be left behind? Because logically, you would think that you would see a better inventory build up here. But from what we're learning, maybe Q4 is going to be a bit painful as well.
Yeah, FMCG, I think will be kind of mixed bag. So we all know that GT, which is a general trade, has been going through a rough patch because of the emergence of new distribution channel like quick commerce, and most of the FMCG companies have alluded to this the same during this during the earning call also. But what I feel is that most of the negatives are already in the price, and in fact, if you look at the palm oil prices, they have corrected significantly during the last one quarter. So we continue to remain selectively bullish within FMCG names such as Godrej Consumer, which is one of the largest, second largest player as far as the soap business is concerned in India. At the same time, companies like Imami, where we have seen a very robust December quarter, and we are expecting the performance to continue during the March quarter also, trading at a reasonable valuation of 25 times price to earning multiple. So Imami is another pick. Tata Consumer going through some trouble in terms of higher tea prices. But again, I feel it's a good time where one can look at names like Tata Consumer and ITC also.
Akshay, early on we were speaking to Amar as well, and actually isn't your pick ITC? So I'm wondering whether you see any opportunities in the wider consumption space, considering that this is not really a pocket that has participated as much. You mentioned that, but beyond ITC, do you see any opportunities?
Well, from a technical standpoint, it's more of banking and financial story. And somewhere, if I were to look at even the positioning in derivatives, there has not been any major additions on the buy side in the consumer durables pack. So really, when we talk about names like an HUL or an ITC, which might do well, they would do the job of supporting the Nifty index from here on, where they would lead in parts and parcels. But really, sector per se, if I were to take a view, still there is no long addition or a kind of a momentum pickup scenario which I see in the FMCG space. So I think it's more sensible to chase names which have strength, chase the banking and financial names. There's where the strength is if you are keen on capturing the momentum of the trading side of the market.
Right, so that's with regards to where the FMCG players are concerned. Now, two other sectors that remain in focus is auto as well as pharma, and this is with regards to the tariffs that could be coming in from the 2nd of April. Now, the dates are not confirmed. However, there will be imposition, that is what is confirmed. Sunny, let's look at auto. Now, within auto as well, mainly if you have to look at companies which are on the ancillary space, how would you look at it? A quick one, what would you avoid?
Yeah, so I mean, the tariff definitely, auto is a sector which is likely to get impacted because of this tariff, and let's see how this play out. Whether so, you need to look from both the angle. One is the companies which are supplying to US markets, and then companies which are supplying to European markets, and the tariff across between US, India as well as US, Europe. So ultimately, slight confusion over there. But again, as of now, I would like to remain focused on the domestic focus auto ancillary companies.
Right. Okay, domestic companies is what your focus is, and that makes sense till we're clear on what happens to tariff, what happens to the EPA. But nevertheless, the focus is all on India this morning. Do you hold up? 23,800 is the next focus on the Nifty. We're not far, to be honest, but we have to see if we hold up, as seems to be the case. IT sector showing a bit of a comeback today. More IT than banks this morning. 1% up on the Nifty IT. Remember, they've been sitting it out and not really participating in the fast and furious recovery as was described by our guest this morning. Fast and furious it surely is. Even on the broader end of the spectrum, 0.5% up on the mid cap 150, not half bad at all. The small cap 250 also 0.75% up in the green. So a good opening this morning. Bank Nifty also 0.5% up, not showing the same boom as the Nifty IT, but then remember the Bank Nifty is what has been firing overall. Let me pull up the Nifty heat map for you just to show you what is on top right now this morning, as you're seeing another interesting morning coming in. Ultratech ruling the roost, about 2% up. Look at the entire top row. It's all about IT. Remember, you see the sector rotation happening right now as the market is trying to find its feet once again after nearly 6 months of drudgery. And it's the turn of the IT companies. HCL Tech, Infosys, TCS, all of them, Wipro, all of them coming into flavor. HDFC Bank continues to be the favorite. Axis as well. I wonder if Kotak Mahindra Bank is participating this morning. Perhaps not as much. But, a fair division of green and red, not too much to complain. Dr. Reddy is only, one to mark out. Maybe some of the pharma companies. Remember, Trump now says auto tariffs coming again, and then pharma is next. It's all vague, but we don't know where those, darts are going to hit. So maybe that's why about 2% down on Dr. Reddy's. We have done a story today talking about inventory levels building up. Nestle and Britannia in the FMCG space. Nestle and Britannia feeling the heat not participating in the bank rally at all for obvious reasons. So that is understood. But broadly, this is the picture. RIL under a bit of pressure, which was, secondary tariffs on anyone importing from Venezuela is what the US president has said. Some impact on RIL was expected to be seen. And if you had a heavyweight like that participating, perhaps you would have seen more strength on the Nifty now, about just 80 points up in the green. But the broader markets is where all the action is, Alex.
And right on top of the screen, you pointed out Ultratech and part of the cement pack, and we'll talk about a few more names as well. But I do want to pull up the sectoral indices just to see what the texture of the market is like this morning. IT right on the top of the screen, gaining as much as 1% or thereabouts. It gained this much, but the rest of the market gained much more yesterday. So it is leading the pack today. Realty as a pack doing reasonably well. Defense continues to be buzzing. And this is really, a lot of these stocks have gained very handsomely over the course of the last month. Our technical analyst earlier today, Amar, saying that you should perhaps consider booking if you have significant gains over the last month or so. You have media that's doing reasonably well. Energy is up and about 0.5%. What's languishing? And you have pharma, but not declines that are egregious at this point, down about 0.4%. All right, let's talk about individual stocks. And there are several brokerage notes that have come through, which we're going to focus on the impact of at the start. And the likes of Ambuja Cements, we pulled this up because this has been upgraded to a buy by UBS. And Ultratech was also mentioned. The stock is up and about, and you will see stocks in the cement packs perhaps reacting to this. So the mood is changing in that pack. Things are looking up for them. Bandhan Bank, strong, high conviction buy from CLSA. It sees a 49% upside at this point. The stock is up about 1.5%. More brokerage calls. Suzlon, there is a Motilal Oswal initiation with a buy rating. Target is 70 rupees, which is a considerable upside from this point as well. It's not a level that the stock has not seen. The stock is up about 2% in trade today. Again, what they're saying is that all of the factors that we've been talking about with regard to Suzlon, the participation in the renewable story going up to 27 as well as 2030 is looking good for the stock. Karur Vysya Bank, another buy call. This one is also an initiation of a coverage. Axis Cap saying that the potential upside is quite considerable, as much as 41%. Let's talk about a couple more. Brigade Enterprises, and it has acquired 4.4 acres of land in Bengaluru. The stock is up and about, gaining as much as 3.5%. Remember, this is a stock that is part of the pack that has bounced back in trade today. Central Bank of India announcing a QIP. It was at a discount to yesterday's closing price, so the stock is under a tad bit of pressure right now. 1,500 crore rupees to be raised in this latest issue. Not a very large amount, and also the capital adequacy standing at over 16. So it's not like the bank desperately needs funds. The pricing of that issue is what you should focus on. RVNL has got another order to the extent of 116 crore, smaller than the recent orders that it has got, but it's still a positive, and this stock has now gained over 11% over the course of the last 5 days or so. And finally, the pack of PFC, REC and IREDA. All of them are gaining in trade today, but the development was slightly negative because the priority sector lending norms have been tweaked a little bit, allowing for more lending in the renewable energy space. If banks lend more there, then it eats up into the pie of PFC, REC and REDA. The street not taking it badly at this juncture though. So all told, a lot of interesting names, Tamanna, and more stocks gaining than not. Hiral, what else are you looking at from the broader markets?
One more stock, Alex, that is in focus is a SG FinServe. That stock rallied in yesterday's session as well. Today it's up almost 16%, and this is on the back of Madhusudan Kela, who's gone ahead and bought around 1.7% in the company. So that's a strong stock company that we've been watching out for. If you see the 5-day chart as well, strong moves there. Apart from Ultratech, we've spoken about Dalmia and Ambuja, which are on an uptrend. OMCs have been under pressure, so you have the likes of a Chennai Petro, HPCL, BPCL, all of them that have been down and about in trade. And this is probably on the back of Trump's tariff impact that you're seeing this kind of a downtick that's coming in with regards to where OMCs go. In terms of other broader market stocks, Salasar Technologies, second consecutive session of an uptrend on that one, 14 to 15% is the kind of gains that you're seeing today as well. Ethos is seeing a good run. Zen Technologies, that continues the uptrend as well. So with a Zen, let's pull up a Garden Reach Shipbuilders or MTAR, because the defense companies are the ones which have been picking up steam as well. In fact, we will be taking this conversation further as well as to what's the next leg on that aspect. But these are a few of the other names which are seeing some smart moves. In fact, Akshay, let me come to you with regards to one of the stocks which is seeing strong moves, SG Finserv. What are charts indicating on this counter? 2 consecutive sessions of gains that have come in. Do you see further buying interest, or would you say this is the time to book profits as per the charts?
Well, if you look at the kind of volumes which have picked up in this counter today, that's a very strong signs of a possible bottoming out scenario around the levels of 320 to 325. So if you are considering the stock from a buy and hold with a positional outlook of a 10 to 15 day holding, then it makes sense to take a fresh buy trade. Overall, the charts are suggesting that this is heading for the immediate resistance zone of 380. Might take some time to break the resistance, but the way the setup is, the way the volumes are picking up, in all good probability, the stock should make an attempt to get past 400 and possibly move for targets of 415 to 420.
Okay. I want to look at JBM Auto. If we can pull up the last 5 days or last 1 week, because this is a stock that I was wondering about yesterday. It gained over 10% and it's up about 30% for the week, but it's down about 2%. I'm just wondering, Akshay, profit taking seemingly kicking in, and if you manage to buy this stock, would you take money off the table right now?
Yes, if it is intraday or very short term with a couple of days perspective. If I were to look from a slightly medium term perspective, months holding, then the stock has recovered from its key technical support zone of 565.70. So that holds a lot of promise from the stock from a positional or a buy and hold perspective. Overall, I am looking at targets of around 750, 755. So this is more of a buy and hold kind of a strategy which you need to adopt. If you have an intraday view, then really it's going to be a bit choppy considering the fast move which it has witnessed. And so I would suggest better to wait. You will reap the benefits of this patience where the stock rewards you for targets of 750 plus.
Okay, we talked about how IT is in focus. Akshay, is there anything that you would nibble over here in terms of IT companies as well?
IT definitely is the sector which you should look forward to from a short-term trading perspective. A couple of names which are noting long additions in the April series and which have strong technical setups where you can kind of buy and hold. One is Persistent Technologies here. This stock is signaling a possible bottoming out formation around the levels of 5200. There's a small resistance zone around 5500, and I'm looking forward for targets of around 5700 to 5800. So Persistent Technologies is one stock you can look forward to. The other stock which you can look forward to is OFSS, Oracle Financial Services. Here the stock is setting up a base around the levels of 7400, and in all probabilities 8800 to 9000 should be the targets you can look forward to.
Stop loss for both, for Persistent and Oracle?
So for Oracle, the stop loss would be 7400 on the long position which I recommended. And if you're buying Persistent Systems, then your stop loss should be at 5275.
5275. All right. Stay on with us as we get you details on what exactly is happening with Colgate. I just want to pull up the Colgate chart this morning where we're seeing quite a bit of pain point. I don't know if you can pull up the intraday as well for the last few minutes of trade, about 10 minutes of trade that we have seen. So you're seeing that sharp drop. Now here's what's happened. There's been a call with select analysts where Colgate management has indicated that a muted growth environment with high base as well as weaker demand has led to a slowdown in sales in February. Remember, this is echoing a report we showed you just a short while ago from our colleague Sesha Sen. Somit joining in with more details of that particular call with Colgate specifically. Somit, what are we hearing?
Yes, Colgate will remain in focus given that it's one of the top F&O losers, and Colgate actually did a call with select few analysts, and what we are picking up from the key takeaways that are coming up from that call is firstly, the management has clearly highlighted or indicated that Q4 numbers are expected to be muted, and this is because of high base and weaker demand which has led to this muted growth environment for Colgate in the fourth quarter of FY25. Along with this, they're also saying that there will be profitability pressures in the fourth quarter owing to higher promotions and and higher discounting, which has been a trend for Colgate at least for the last couple of quarters. So that has remained in the fourth quarter as well, and that will lead to lower profitability. So both these factors, lower revenue and higher discounting, both these factors will also put pressure on the company's operating leverage, and the margins are expected to be in fact weaker on a YY basis. Now they're also saying that they had taken some price hikes. However, the impact of this price hikes will not fully reflect in the fourth quarter given the fact that discountings were higher. So price hike will not mitigate the impact fully of the higher discounting that the company has been doing so far. However, they have also said that they are likely to outperform the overall industry growth in the fourth quarter. Now, analysts were expecting Colgate to report a revenue growth of around 1.5% and EBITDA and PAT growth of around 9%. But given this new indication that the management has given, analysts believe that there could be target price cut or EPS cuts of at least 3% post this new update that has come in from Colgate, and that's the reason we are seeing this kind of a downtick when it comes to Colgate share prices.
That's a quick update, Swami. Thank you for that. You're seeing that a reaction come in almost instantly on Colgate. I want to see what Nestle, ITC, Britannia is doing as well, and we mark this as we open the markets as well, that FMCG might be a pain point over there. In the interim, do note how markets have come off. Akshay, some selling pressure there coming in, FMCG under pressure as well. Anything that you would see as an opportunity as in FMCG, or you'd stay away? Any short positions over here? What would you do with FMCG as a pack? Akshay Bhagwat, that question for you.
Yeah. So FMCG, I will look for selective pockets. HUL and Colgate are my top picks here. Colgate, Nestle, these overall have a weak setup. So I have to be very specific when you select FMCG names because the momentum is not in these counters. So ITC, which I recommended on your show, continues to be a buy for me. HUL also I feel should recover well. Avoid Colgate and Nestle as of now.
You're saying is a top pick or an avoid? Because I thought I heard you saying it's a top pick.
Yeah, so it's a top pick. ITC continues to be my top pick. You can consider buying it. Overall, I believe 420 plus.
What about Colgate? What about Colgate?
Colgate should see continuing selling pressure. It has a weak technical setup. It has not performed well in the recent recovery of the market as well. Looking at targets of 2100 on the downside.
Stop loss on Colgate, Akshay?
If you are shorting Colgate, then your stop loss should be 2400 plus.
Okay, so 2400 plus on a short call coming in on a Colgate from Akshay. But moving on, as we know, Trump has issued an executive order declaring that any country buying oil or gas from Venezuela will pay a 25% tariff on trades. Now, the announcements would have an impact on the oil prices because if you see in terms of oil, currently we're trading at around $74 per barrel. Mika joins us with how this announcement will actually impact Indian companies. Mika, over to you.
So India is at a risk for getting those 25% tariffs imposed, and that's just because of 1% of our crude import bill. The major announcement is Trump stating that he would leave at 25% tariff on any country buying oil and gas from Venezuela, and India is one of them. Now, as per Ministry of Commerce data, in 2023-2024, we imported $800 million worth of Venezuela crude, and this was a part. This accounted for 0.58% of our total crude import bill. In the April 2024 to December 2024 period, which is the latest data available, that is at $1 billion of crude from Venezuela, and this marks a 27% uptick. And in terms of the amount of barrels that we've bought in the April 2024 to December 2024 period, we've imported 15.5 million barrels of oil. This pertains of 1% of our total crude oil imports, and this is an increase from the 2023-2024 period where Venezuela oil accounted for 0.74% of our total crude imports in terms of barrels. Lastly, in terms of stock-specific impact, well, Reliance Jio is in focus because as per multiple analysts, Reliance is the only Indian company currently importing Venezuela oil. It had secured an official clearance from the US authorities to get it from the South American country, but the clearance was given in July of 24, and this was well before Trump administration did come into office. The exact amount is unknown, but yeah, there would be a negative impact on this company.
All right, so thanks for that update, Mika, and clearly you're seeing some implications of that play out right now. But The stock that I want to focus on, in fact, actually let's pull up the intraday chart for the Nifty 50 because this will just give you a perspective of the fact that it's quite choppy today. It's not a very large range, but we bounced from the low point of the day. We gave up some of those gains. We're back where we started more or less with gains of about 1/3% for the Nifty 50. The worst performer on the benchmark though is Dr. Reddy's Laboratories, which is down about 2.5%. In fact, that entire pharma pack is losing ground, perhaps on the back of the expectation of tariffs. There was an announcement or a statement that was made by US President Donald Trump saying that there could be tariffs in the offing, of course, for the auto sector, but pharma is not too far away, is what he said overnight. Auto pharma losing ground, Dr. Reddy's Laboratories, Ipca, Granules, all down in trade today. But Sunny, the question really is that would you wait for the dust to settle? Because we've been speaking about this over the last several weeks. It's not easy. As you've seen, there was an announcement by Hyundai to set up capacity on steel there, set up manufacturing capacity in the automotive space, but you can't switch capacity in pharma very easily. So the expectation was that they would be more or less insulated. Does that change right now?
No, I think, Alex, I agree with your view that this sector being one of the sector which will hurt the interests of common man more in US. And I think ultimately, in case there is an imposition of tariff, all the pharma companies will pass on that increased cost to the consumer over in the US, and that can lead to the further inflation on the healthcare cost in United States. So I think overall, I think it seems to be more of an insulated sector as compared to other sectors where shifting a manufacturing base is relatively easier. And at the same time, on other hand, when US is trying to reduce its dependence on China, I think you can't be plugging both the ends, where in China as well as India, you can put an import barrier, and that can hurt the healthcare industry in the US. So I think it seems to be a relatively insulated sector. Better wait for the clarity from the US, what exactly they are trying to do and which are the sectors they are trying to plug through tariff imposition.
All right. Thank you so much, Sunny and Akshay, for joining us on this leg of India Market Open. Markets have come off. Let's just pull up very quickly before we get to our first exclusive corporate conversation of the morning. Markets, okay, back up again 0.5%. So volatile kind of a day. Nifty back up about 0.5% after a dip that we saw there. I want to see if banking and IT are holding up. Banking also seeing that recovery. See that exact same chart pattern that you can track over there. IT has been solid now, about 1.5% up there. Broader indices, just very quickly, I want to see what the 250 and the mid cap are doing, small and mid cap are doing before we get to that conversation and track it there. Nifty mid cap has come off a bit, but holding on. Small cap 250 now in the red. So a bit of a volatile session. Remember, a lot of short covering on the monthly expiry week is fueling the markets as well. So keep a close watch on where those indices go. Meanwhile, it's day 2 of the Motilal Oswal Financial Services 11th Ideation Conference, and we've been bringing you all the action exclusively on NDTV Profit. It's also a great opportunity for investors to find hidden gems in this space, and we've been speaking to an array of companies on this and more. The company in focus right now is Raymond. Harmohan Sahni, ED and CEO of the real estate business of Raymond, is joining in now from the conference. Mr. Sahni, thank you so much for your time and great to have you here with us on NDTV Profit. So the real estate division, I think a foray of the group which has a lot of focus and excitement. You've been in the news for the redevelopment that is taking place in the suburb of Mahim. Tell us what the progress on that is.
First of all, thank you very much for having me over. And you touched upon joint developments. Joint developments, of course, Bombay as a city requires a lot of development, and you know that there is a renewal which has been happening on the infrastructure side. So even on the residential side, it requires a renewal because it is an old city and a lot of places need redevelopment, and newer developments are coming up. So we are also participating in a big way in that. So we've got one project in Bandra which is already going on, and that redevelopment is going fine. The sales are really good. The progress of work has been ahead of schedule than what we had planned for. And the Mahim one is what we signed recently. and we are currently working on the plans and the approvals. So most likely in Q3 or Q4, depending on when the approvals are, because there is always, a little bit here and there wherever the government work is involved. There could be some, 20, 30, 40 days here and there. So either Q3 or Q4, we would see a launch of that project in terms of sales. So yes, things are going well. So far we've got 5 JDAs. We've got 2 in Bandra East. We've got 2 in Mahim. We've got 1 in Sion. So in all 5 JDAs, total gross development value is about 10,000 crores of all these projects put together. And almost 2 to 3 out of these should launch in the coming year itself, starting 1st April.
Why the focus, Mr. Sani, why the focus on JDAs, joint development agreements? And yes, from a Mumbai perspective, it's a sitting duck, but it's a space also fraught with a lot of uncertainty. It has been tried and tested, and many have not really succeeded to that extent. So what is the thought behind pursuing joint development agreements as your real estate foray, or as the key proponent of your real estate foray?
So joint development actually in the sense is a no-brainer. I'm sure you already know, and the viewers also would know, that it's a more capital efficient model to follow. We are a capital starved country per se, and there are only 1 or 2 players who would be adequately capitalized, and they also run out of capital very quickly, and that's why you see most real estate companies every year or every 2 years or every 3 years would be raising capital, which is actually not liked by the investors, and it's definitely not a great thing to do. So how do you de-risk this business? How do you make it more capital efficient? It has been the perennial question, and one of the easy answers is do joint developments, especially in areas like Bombay, where land values are very high. Landowners are very savvy, their expectations are very high. So closing a deal also becomes a challenge always, because the value expectation between the buyer and seller doesn't match, so a deal doesn't take place. So joint developments become an easy way of closing deals also, because if the market rewards you, you can share that much more with the landowner. So it works for the landowner, it works for the developer in terms of capital efficiency. The interests are completely aligned between the landowner and the developer in that sense. Now you mentioned that it's not been a very successful model in the past. Yes and no. There are players who have successfully run this. I have personally been in the business for almost now 29-30 years, and mostly have done JDAs in my various roles that I have performed over the years with different organizations, and successfully so. In between, there was obviously a hiatus for about 10-12 years because there was not enough clarity as far as the regulation was concerned, especially in Maharashtra, in Bombay. But with the DCR 2034 coming in, and RERA coming in, GST being clarified, even the premiums on the government side have now seen a stable regime for the last 4 or 5 years. So last 5 years or so, JDAs are back in fashion because it's easier now to calculate and take a bet as far as the developer is concerned. So there is more stability and certainty.
Yes. So Mr. Sani, good morning. This is Hiral on this side. So I understand that good progress that's happening with regards to where GDV goes. Now, if you have to break it up between your own land parcel development versus the GDV part of it, JDA, I beg your pardon, how much of your revenues will come in from a JDA-led business model versus your own land, and what is the impact on the margin picture then?
So that's a very good question, and in fact that's a question we've tried to answer for the last 3 years, and every year we get a different answer. But currently where we are at is roughly about 30% of my pre-sales really comes from outside of Thana, and between 70 and 75% comes from Thana. In the coming year, outside of Thana share will grow naturally because with the launch of more projects, and we are accessing more micro markets, while Thana is the same micro market, so there is a limit to how much growth we can see in that one micro market. And the other micro markets we are not participating in, other than Bandra East is the only place where we've got one project where currently we have a project going. So once we start opening up, naturally the share of pre-sales from outside of Thana is bound to grow. And in the coming year, we are expecting it to be somewhere in the region of about 35 to 40% of our total sales. Pre-sales should come from outside of Thana. So, but the revenue proportion may vary because we follow a percentage completion method of accounting, and by the time the progress of project reaches a certain level, it is about 12 to 18 months that it takes. So yes,
Mr. Sahni,
the
I
proportion
understand.
of outside Thana will keep on growing, and the impact on margins, sorry.
Yes, so I understand the kind of revenue contribution you'll see, but very quickly, impact on margins. So is it the joint development that will lead you to margins of 25%, or is it your own land development that will lead you to margins of 25%, and by when?
So the guidance we have given is that our margins will flit between 20 and 25% depending on which quarter we are in and which project sales are more, and whether there is a launch of a certain project in that quarter or not. So it will never be a static number. It will range between 20 and 25. So some quarters you may say 22%, some quarters you may see 23%, and that's been the past trend also. Going forward also, we will remain within this range. There has been an improvement in the margins. If you see in the last 2 to 3 years, we have moved from 16% margin to now 22-23% margin range. And that is where we will stay principally.
And with regards to pricing, what is the trend that you're seeing right now? Because your focus is going to be mid-sized as well as premium segment. The sales are happening in the premium segment, mid-sized overall. The word on the street is that it's slightly stagnant. Affordable housing is also slightly under pressure. So how do you see it for a Raymond?
So far we have not seen any pressure as far as sales are concerned. Depending on which quarter we are at, because it is partly seasonal, it is dependent on holidays and some of the other things, auspicious dates and festivities around that. I mean, barring that, we haven't seen any softness in the market or signs of tiredness. As far as price growth is concerned, price growth in Bombay has been very, very healthy and consistent. We have seen 4 to 6% growth in the markets that we are in. I can't say much about South Bombay, where the price growth was very steep, and now probably that is one market which is probably showing signs of tiredness, but we are not present in that market.
Okay. And overall, if you see in terms of the realizations, bookings and collection, what is the growth expected to look like in terms of FY26, taking into consideration the kind of construction work that is going to be carried out?
So the guidance we have given so far is that you should expect a 20% growth from us, an upward of 20% margin, and an ROCE of 20% or upward of that. So all three, so it's a 20-20-20 strategy in terms of revenue growth, in terms of margins, as well as the return on capital employed. We hope that next year we will do better than that. I cannot give you a specific guidance because we don't have a policy of giving a number, but yeah, a general guidance is what I've given you.
All right. Thank you so much, Mr. Sahni, ED and CEO of Real Estate Business Raymond, speaking about what the outlook on the business is, and he's speaking to us exclusively from the Motilal Oswal Ideation Conference. So great to chat with you on that. Meanwhile, as we turn our focus to defense, and that's our segment coming up, defense stocks have been in focus and have been fairly charged up, considering the kind of rally we've seen in the last 6 sessions. I'm going to pull up some of those counters. Let's look at a garden Garden Reach more than anything, because they have had an announcement today. Let's talk about 2% up right now. You should look at a Mazgaon, you should look at a Hindustan Aeronautics. So some of those also showing some interest. Should you look at this as a sustainable comeback is the question that we will attempt to answer. Is it time to maybe exit positions if you've been stuck at a higher level? Will this momentum continue? To speak on all of this, we'll be joined by Amit Anwani, a research analyst at PL Capital, in just a bit. But Anushi is joining us first with some data sets. Anushi, defense has seen some recovery, but not quite the kind of recovery one would have hoped for.
Right now, what we've seen in the past is that these defense counters have been in some steep correction, especially considering how the markets have been volatile also in these last few months. But right now, in these last 1 week or so, we have seen strong recovery from some of these defense names, and it just brings into perspective what is the future ahead for some of these defense counters which are there. We are looking at a scenario wherein the India-US ties are expected to improve. Along with that, even our own defense procurement, if you look at, the focus has remained on the local push, the indigenization efforts also. We had the latest update wherein Defence Acquisition Council had cleared about 8 capital acquisition proposals worth 54,000 crore, taking the total acceptance of necessities number to 2.2 lakh crore. And the aim is now to boost the defence exports also. We have seen the defence export number currently 21,000 crore, and this is the kind of scale that they are planning to reach. What had been in focus in this acceptance of necessities is for Indian Army to upgrade the present 1000 HP engines for T-90 tanks, along with Indian Navy, wherein the focus is Vasundhara torpedoes, which brings stocks in focus like Bharat Dynamic, Indian Air Force Airborne Early Warning and Control Aircraft System, wherein the focus shift towards Bharat Electronic. FY26, as majority of these brokerage houses have pointed out, is to be an inflection year for some of these key orders which are expected to flow through, and Q4 is a period wherein there are high order expectations for some of these counters. So strong growth that we're looking at in budget. If we see the numbers stood at, the defense capex stood at about 1.8 lakh crore. So defense, the government focus has remained there. High ordering is something that could be expected for FY26, but that's the overall perspective that we are seeing for some of these defense counters.
Thank you, Anushi, for giving us the entire setup of what could be expected from here on as well, from a fundamental perspective. But let's also now welcome in Amit Anwani, research analyst at Prabhudas Lilladher Capital, to discuss more. Clearly, Amit, good morning, and firstly, welcome to the show. My first question coming to you is the kind of buying interest that is coming back with regards to the defense sector as a whole. And within the defense space, it's the PSU space which is seeing even higher buying interest. Would it be right to say that this is going to be a comeback of the defense sector as a whole in terms of the Indian listed companies?
Right. So I think as Anushri highlighted, that this is a multi-year change, structural change, which has happened in the Indian defense market. And the key focus areas definitely to increase the local procurement and also to modernize, whether it is aircrafts, helicopters, and there are a lot of missile orders on the watch. So there's, I would say, at least 4 to 5 years of more orderings which is pending. And we saw past 2 years also, there was very strong ordering which happened in the defense space. Now, with respect to valuations, all the valuations gone up to, let's say for OEMs to 40-45x last year. And also for the electronics companies, for especially for the PSU defense electronics companies, the valuations were upward of 45x, 1.5 to year forward. That corrected from the peak to 50%. Obviously, there was some supply chain issues with respect to especially OEMs, where HAL was facing the brunt because of the engine delivery getting delayed. So I think there are talks now. I will go, I think, the space to space. So for OEMs, I think the critical part, obviously, the localization and the robust supply chain. Now, I think the things are getting better and government is also focusing. So I think HAL particularly can do better deliveries in FY26. There are talks that they can do their first delivery. I think that is also fueling the sentiments back. And second thing, we have been highlighting that defense electronics, and since the government also highlighted that this is the year of reforms, will be in focus for multi-year growth. And the government has been encouraging private companies to collaborate with DRDO for defense electronics and various other subsystems and components, where I think there's a multi-year growth opportunity for many defense companies, which is emerging. So I think we are just checking 1 year, 1.5 year forward, but we have to also see how the defense market will evolve over the next 5 years. And I think that is something all these companies are trading at least 50-80% higher than what they were trading 2 years back.
That's exactly the point, Amit. Good morning, Tamanna here. It's the valuations consideration, because at the first sign of trouble, the reason that a lot of these defense stocks cracked, I suppose, and you can tell us this in more detail, is the valuations just did not match what we were seeing. And the order wins seem to be the very regular kind of boosts to the stock. Is that sustainable in your view? Has anything fundamentally changed here? Because now you know that the defense capex is okay. It will be continuing at a steady clip. But are now valuations in a comfort zone for you for any of these counters?
See, I think after this rally of 30 odd percent, I think the OEMs are trading at, especially HL is trading at 27x 2-year forward. And I was checking the global 2-year forward multiples also for good companies where there's growth are still trading at 30x plus minus. So I think, for example, HL has a multi-year delivery schedule, and I think the regime has changed for defense companies. If you see, the order book of HL used to be very low versus today at 1,20,000. And this indicates that they can grow for 12-13% CAGR for at least a decade if we have to deliver this aircraft and the another order for LCA aircraft and a lot of helicopter orders. So I think because of the growth, they'll continue to trade equivalent to any global growing company, and that is where I think around 27x there's some comfort, but at 24-25x there was a major comfort with HL. With respect to Bharat Electronics, we have been highlighting that the company is going to see at least 14-15% CAGR in top line, and this is backed by the very strong pipeline again waiting for the orders, including QRSAM and few other large orders. So I think it's a growth story versus rest of the world, and we checked the multiples globally also, and for especially for electronics companies, obviously because of emerging market, they can continue to trade at 35x forward. I think BL after the recent rally is trading at about 31x. So the upside remains limited, but I feel this is a multi-year story, and at dips we can definitely look the stocks. The only challenge which these companies face is supply chain issues, which SJL face, but I think that does not derail us from the long-term goal which the government wants to achieve with respect to the defense localization and modernization. Yeah.
Okay, so in terms of, and that's an important aspect about valuation comfort, in terms of, outlook at this point, Amit, assuming that you're going to see this rally continue for a bit. I mean, we've crossed 23,800, 24,000 possibly this week, and now you're going to see some up move continue. Which are going to be your top picks in terms of defense companies?
Yeah, I'm very positive on the defense electronics space as such. The current European rearm plan might not benefit, but could benefit to some electronics companies, and we are focusing on the export, significant increase in exports going forward. The government is targeting that, and as well as the domestic production. So I think for me, Bharat Electronics is the topic, where obviously the stock has rallied again by 25%, but can be a consistent performer over the next 3-4 years, considering the very strong pipeline which is going to come. And second definitely is HL. I feel obviously the risk is definitely there with respect to the supply challenges, but the government ambition and the requirement of squadron is also a very serious matter which government would not like to ignore. So I think HL has to deliver, and apart from these orders, there's a lot of pipeline. We're talking about at least 2 lakh crore worth of orders going to be tendered out over the next 2 years for HL, and the pipeline is very, very strong for them as well. So I'm giving this as a long-term pick. Currently, they might be limited upside to these stocks.
Right. Amit, how about a Data Patterns, Garden Reach, Zen Technologies and Apara's Defense? And I'm talking about these 3-4 counters on the back of the EU defense OEM, you know, who's turning to public and private defense firms to procure components and subsystems. Now, taking into consideration that the orders that could flow in from here and the US military aid that has been, now stopped with regards to Ukraine, do you see any benefits in the short term to these companies? And if so, any top picks and what target price?
Right. So I think the EU plan can benefit with respect to export for us. And historically, when we did 21,000 exports last year, we were exporting the mounted guns and subsystems and few components in electronic warfare system side. I would say defense electronics. So I think, and we were exporting to mainly US, France, Armenia, as we read. So I think broadly there could be some benefit to few of these companies that we have to read because Europe is not going to import from us the OEM, the full systems. Obviously, it will be some parts if they are manufacturing at their end, and they have been buying the full systems from US, which was the large part. So I think the benefit will be there, but I would say limited, and especially as you highlighted, especially Data Patterns, Zentech, Astra Micro, a few of the defense electronics companies can definitely benefit to some extent, but we have to see what is the quantum and numbers which is going to come to them. But I think that is pretty early, the deal and how it is going to shape up, because it also depends on your relationships, the European relationship with the vendors and the vendor relationship with any procurement which is happening in EU. Yeah.
All right. Thank you so much, Amit, for coming in and giving us, this perspective and this outlook. Maybe a little longer term impact as well, or a wait for some of these calls. BEL is one of his top picks. You also have to understand that as this negotiation and push and pull continues between the US and the and India on tariffs, there is going to be collaboration going ahead on defense as well. So watch out for that. There you have it, some defense stocks in focus today. But we'll take a very short break. On the other side, we're telling you what to do when markets hit 23,800. We have a great conversation lined up in terms of the market. Before that, an exclusive conversation with Dilip Bhantia, CFO at Radico Khaitan, talking about the road ahead for the Alcobev space. We'll also hear from Ashwini Agarwal of Demeter Advisors. Stand by for all of that and more.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
he sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How
Welcome back to India Market Open. Clearly, 23,800 is what we've already seen in terms of Nifty 50, where from here on, 24,200 is the next biggest hurdle that we have been tracking. Bank Nifty is supportive. IT has come to the support as well in today's session. And as Tamanna was mentioning, that rotation is happening from the financials to the IT space. There could be pressure that could build in with regards to auto as well as pharma as we move closer towards the 2nd of April. But moving on, the 2-day of Motilal Oswal Financial Services 11th Ideation Conference, which is underway. We have been bringing you all action exclusively on NDTV Profit. The conference is focused on deciphering key trends in broader markets and unlocking the full potential of small and mid caps. In fact, the conference is held every quarter and is a great opportunity for investors to find hidden gems in the space. We spoke to Dilip Bantia, CFO at Radico Khaitan, which is a rare conversation to get about the sectoral outlook. Let's quickly listen in to what he had to say.
This is a great time for Alcobev industry. We are seeing good volume growth. In particular, the P&A volume growth is growing in industry, and Radico in particular is growing in strong double digit. We have seen the progressive changes in many of the states, started with UP in 2017, the market driven policy on retail as well as on wholesale. Recently it has been done by AP, where the route to market has changed, and we have seen that route to market changes have improved the availability of brands. The national players are being available now. We have gained market share. We ramped up our capacities as well. So we have gained a sizable market share in that market. Karnataka also did in last couple of months. They reduced the prices of the retail price of premium product by reducing the duties. That has also led to the growth in the premium brands. So the premiumization is here to stay, and premiumization is a trend in the industry. Radico, with its portfolio on luxury, semi-luxury and super premium and premium, is doing better than the industry and it's growing in strong double digit. So we see a good time for Alcobev industry in years to come.
Right, this was supposed to be my next question, because you mentioned premiumization. We've seen that premiumization story has been, of course, on the lower base as well. But do you think that, this is expected to continue? And if yes, right now, what is your overall share of prestige and above? And how will that pan out to be? Like, how will the mix change going forward, keeping in mind the premiumization story going ahead will get stronger?
So as an industry, the premiumization is happening, and as an industry, premium brands are growing 6-7%. Radico is growing in strong double digits, so we are outsmarting the other player. At the same time, our share of the premium brand volume-wise is 50% plus, and value-wise it's 65-70%. It continues to grow. We are actually launching brands in last a decade or so. We have launched around 10-11 brands, and in last 2 decades we have launched 17-18 brands. We are present in almost all categories. We are the leader in vodka, with Magic Moment families having more than 55-57% market share across all price point. In case of brandy, we have a super premium brandy which is also having 60% plus market share in the super premium brandy category. 2.5 years back, we launched Royal Ranthambore, which is also gaining market share. Now we have a malt, which is the Rampur Indian single malt, very well acclaimed globally and distributing in India in 15-16 states. There also we are gaining market shares, and Indian single malt is being recognized as a very great category, and others are also coming in that. We are very confident and we are ramping up our capacities. Rampur, Jaisalmer Indian Craft Gin, another flagship brand, it's also gaining market share, and we are having 50% plus market share across all the imported gins. So our journey is there. We continues to drive with new brands, and recently a week back we launched Ankahi, a liqueur product with Jaffran, and we want to take India to the world. So continues to be like that, and in future also we are coming out with some exciting products in future in luxury category.
Wow, liquor with saffron, that sounds very interesting, Mr. Dilip. A follow-up question on what you said, you're gaining market share due to a lot of your products, and that is because of product innovation and new product launches. Going forward, what are the product launches looking like? What are the new categories or products that you are planning to add to your portfolio? And secondly, even in terms of state expansions, what are the plans like?
So as we actually have been working for last 3 years on 2 of the products which are in luxury category. So in first 6 months we are going to roll it out in India, and 1 more product in super premium whiskey also we want to roll it out. So these are the product in pipeline. Our existing products and the new products in launches is going to take this premiumization journey further strengthened.
Okay, and in terms of...
and what is your second question?
Yeah, that was on state addition. What kind of states are you still, tapping on to add your products to?
So we are virtually covering the whole country. We are now present in all India. So as far as the state expansion is concerned, we are presently everywhere where the liquor is being sold.
All right, and in terms of capacity addition, you talked about, you are planning to add capacities because overall your utilizations might be at optimum levels. What all capacity additions are you looking at, and how will that be funded, and what will be the capex number be like? A rough idea as to how capex number will be like for that capacity addition.
So we have done already the large capex by expanding on a greenfield projects and all, and the new expansions are on malt and malt maturation, and annual capital outlay will be around 150 crores for next 2 years, which will be for branded business mostly. So distillation capacity we are already sufficient for our future growth.
Okay, and this will be funded by internal accruals?
Yeah, it will be funded purely from internal accrual.
All right, and in terms of raw material inflation, because that is something that is putting pressure on your margins, what are the trends like, and how do you expect to cope up with that, and what will the margins be like, let's say, from a longer term perspective 2 years down the line?
So raw material has seen very high inflationary conditions in last 3 years. We have seen unprecedented raw material inflation on grain, ENA, glass, etc. But now the situation is stabilized. The government policy of allowing the FCI rise for ethanol is also actually giving a declining trend and sentimentally improved trend on the broken rice side. So we are expecting a stable scenario on raw material, and by product mix and our premiumization journey will continue to expand our margin, and margin improvement of 100 basis point max annual CAGR basis for next 2 to 3 years is expected.
All right, and in terms of the overall top line and bottom line expansion, what's the growth CAGR that you're looking at, let's say 2 years down the line?
So we are expecting 15% plus growth on our P&A category, mid single digit growth on our regular category. So overall volume growth of around 9 to 10% and value growth of 15 to 17% on the top line in the IMFL business. And margin will also improve. Growth in the EBITDA margin, EBITDA percentage as well as EBITDA absolute will also be in line with that growth in top line.
Hey, Radico Khaitan, they're sounding very, very optimistic about the kind of growth they're looking at. But are we seeing that optimism in the street? If you look at the Nifty, it looks okay. Nifty not doing too badly, staying above the 23,800 mark as of this point, but you should look at the advanced decline ratio, because in the broader markets, some signs of pain also coming in when it comes to what the markets are looking like. The advanced decline ratio not very positive, 1463 declines to 836, 835 advances on the Nifty, so on the NSE. So what is really the overall momentum here, and can the momentum hold up? To speak on all of this and more, I'm joined now by Ashwini Agarwal, founder Demeter Advisors. Ashwini, very good morning to you, and great to have you as always with us here on NDTV Profit. Pleasure to speak with you. I think the concern right now is, because of 6 months of pain, the concern right now is what we've seen in the last 6 days. Is this going to last or not? Is this a change in momentum? Is this maybe short covering we're seeing before a monthly expiry? What is your sense?
Morning to you as well, and thanks for having me on your show. My sense is that, Nikunj and I was speaking, I think, a month ago maybe, and at that time, I had said that it's time to start nibbling in and be prepared for a 15 to 20% drawdown in individual stock prices. And obviously, I didn't think it would play out exactly along those lines, but it did. I continue to think that the correction seen in the last 6 months has brought a lot of stocks to very interesting levels. And on a bottom-up basis, I think, the worst is behind us. Will we go back and test those levels one more time because of, Trump tariffs that are expected to kick in on the 2nd of April? I don't know. It's very difficult to tell. Also, remember, the FX has been very volatile, and the US market has been very volatile. Overnight, we saw strength in the US markets, and if the US dollar were to follow suit, you might see some short-term pressure on the Indian market. So effectively, I mean, what I'm saying is that we've seen a very nice rally. There could be a little bit of a pullback from here, basis what we see on the tariffs next week and what happens in the US. Who knows? I can't say. Longer term, I think I remain quite constructive. I think the domestic economy is doing fine. We will obviously slow down as the world slows down, but I think the domestic economy looks okay to me. I think a lot of valuations are reasonable. So I think from a medium-term perspective, I feel more confident that 25 might turn out to be an okay year.
25 might turn out to be an okay year. Interesting. The worst is behind us, says Ashwini Agarwal. This is Tamanna here, by the way. Ashwini, yes. My question is, what has changed? What has changed in the last 2 weeks? And I'm not sure what conversation you're referring to, but the fact is that 2 weeks ago, everyone we spoke to said economy bad, we don't know what Trump will do, Q4 bad. What has really fundamentally changed in your view? Or has there been a re-realization that the India story is intact?
No, I think, prices do their own thing, right, Tamanna? So if you think about it, you have stock prices that become weak and drive sentiment down, and then stock prices come back and sentiment changes. We are at the end of the day human beings, and, sentiment drives a lot of the narrative. I think what I'm referring to is the fact that domestic demand seems okay. I think that is something that we have to remember. Second is, if you look at a lot of sectors, whether it's consumers, I mean, I overheard the last bit of conversations that you were having with the CFO of Radico Khaitan. I mean, it's not a stock I own, so nothing there, but it's a domestic business. Financials are domestic businesses. Tariffs are not going to have a major impact. Maybe, you'll have some incremental competition from some bourbon brands for Radico Khaitan, who knows? But the point is the domestic economy is fine. You've seen a significant sell-off. Several stocks are down 40-50% from their peaks, and valuations are no longer as expensive as they were. So you start feeling a little bit more constructive. I think last 2 weeks, the only thing that has changed is that things seem to be bottoming out. You're right, Q4 is nothing to write home about, but look for the rest of the year. I mean, I think it's a reasonable bet that if the Trump administration is successful in ending the two wars, we'll be feeling a whole lot better about the rest of the world by the time 2025 comes to an end. Will the US economy go into a recession because of all the changes happening there? I don't know. And that could be a headwind, which is why I said that, the economy may slow down a little bit if the rest of the world also slows down. But I think reconstruction of Europe, the ending of the war in the Middle East, I mean, I think these are positives that one should keep an eye on.
Ashwini, my question to you is, firstly, the first half of it is whether the bulk of the damage in terms of the markets is done. And secondly, would you treat this as a near-term rebound, or is this just the start to the upcycle?
Okay. It's an interesting question. I think it's a little bit of both. It is a near-term rebound, and you can always see a pullback after 4, 5 days, 6 days of very, very strong markets. It's possible to see another leg down based on what happens in the rest of the world and what happens on 2nd April. But I also don't expect the previous low to be broken, or the recent low to be broken. I mean, and I'm putting my neck out there. I think there are a lot of chartists out there who still expect a 21,000 on the Nifty one more time. To be tested, which would be lower than the recent low. I don't believe I'm in that camp. I think it's okay. I think, with a weaker US dollar, with a weaker US economy, there's enough incentive for a lot of the US investors to start looking at emerging markets, India being one of them. I think the domestic investor in India is anyway tied to the home market thanks to the FX controls that are prevalent, and so on and so forth. So I think one should be constructive. Could the recent low be tested one more time? That's possible. So, in that context, to your question, is this a pullback rally? Maybe. But I think, is the bottom behind us? I think so.
So the bottom is behind us. Now, when you look at the way FIs are coming in right now, last week has been spectacular. This week also the FIs have started on a positive note with regards to India. And usually the trend is that they will look at the BFSI space as well as the IT space. Yesterday, strong moves in terms of BFSI. Today, strong moves in terms of IT. Where would your bets be? Because that's going to be the trend that the street is watching out for.
IT, I'm a little bit worried about because valuations are not that cheap in the historical context. And I think job creation in IT is going to be difficult. So companies might still do okay because they'll deploy AI, which will require less manpower to write basic code. A lot of AI or automation might be deployed in testing services. So they might be okay in terms of growing their revenue a little bit and managing their margins because of automation and AI. But for job creation, it's going to be very difficult. So, and valuations are already sort of, high if you take a long-term historical view. So IT, I don't feel, very confident about. Financials, I feel much more confident about. I think a lot of the focus on microfinance and unsecured loans has taken a sheen away from a lot of lenders. But balance sheets are much, much stronger than they were back in 2017, early 2018, when a similar sort of a scare set in. And I think the regulator has been very vigilant over the last several years. So I don't expect a lot of accidents this time around. Having said this, I think for the mainstream banks, the best of the credit cost situation is behind us, and credit cost going ahead will normalize. So I think that's one factor to remember. But the moment you drill down slightly deeper, I think there are a lot of opportunities in financials, and with foreign investors coming in, as you say, IT and financial services is a big focus for them. So that might offer some tailwind.
So financials looks good, IT you're not too sure. What about the consumption story, Ashwini? The whole discretionary consumption story, you were referring to the Radico Khaitan conversation. So you have, let me split this into two parts, the discretionary consumption and the staples. Staples, from what we're hearing, and we've put out reports this morning, looks like they're going to have a rough patch in Q4 as well. Is it a very different view for discretionary spends?
I don't think so. I think, it's going to be a gradual recovery. I don't think it's going to be a gangbuster story for the consumers as well. But I think valuations in several instances from a long-term perspective are now quite attractive. I don't think that's true for the mainline, frontline consumer staple stocks, which are still quite expensive. But I think the moment you drill deeper, again, in the mid-cap space, small-cap space, select large-cap space, valuations are looking interesting. It's a very bottom-up market, Tamanna. And my sense is that, you will see these pockets where valuations are interesting. Companies are doing all right. They're not doing so bad. And, you'll see another year pass by, and the valuations will look very interesting. So what will happen is that the stock prices will probably bounce around current levels for another 3 or 4 months. And then you'll see a gradual upside with maybe a 15% return for the year, which is what I meant, that 2025 may not be such a bad year.
Okay, so, in terms of this whole debate on large caps fueling the return versus small and mid caps, and I thought this was a very apt conversation to have right now, Ashwini, because small and mid caps became the punching bags in the last couple of months, saying, ran up too much, destroying value. There's, you're not going to get those price points back. You're seeing some recovery there, but a shaky one, if at best. I mean, even today, as an example, the broader markets are not holding up. That confidence building has not happened. What is your view on the way you're seeing and filtering companies in this space?
Great question. So, I'm not a believer that there is a large cap universe and there is a small cap universe and the twain shall never meet. Okay, it doesn't happen like that. In my view, it's all about valuations. If you find the right value with the right growth profile and a balance sheet and a management that you can trust, small caps are great, and they give you a much better alpha as compared to the large caps. I'm talking about individual investing, maybe not institutional investing, because institutions have other imperatives, including liquidity and size and the kind of money they look to deploy. So if the market is going to be driven by FIIs for a moment, let's assume that's the case, then you'll probably see large caps do a little bit better than small caps. But I think if you were to take a 12-month view, 24-month view, 36-month view, and you find small caps which have the characteristics I spoke about, a reasonable growth profile, a reasonable entry point of valuations with a balance sheet and management you can trust, I think you'll make more money. So I think it's a very bottom-up market. The correction has put some stocks in very, very good sort of perspective from a valuation perspective, whether it's financial, whether it's domestic consumers, some of the exporters as well. And you have to pick and choose. I mean, you have to decide that, is this correction good enough for me to take the risk? And over a 3-year basis, can I make a 15 to 20% return on an annualized basis? And I think there's several stocks out there in the small cap universe who can give you this kind of return. So I don't think it's I hate small caps and I love large caps, or I hate large caps and I love small cap story. It's all very bottom up. Even in the large cap, you'll have a few things that will give you those kind of returns.
Okay, so you need to look at it specifically. Don't divide, broadly based on large cap and small cap. I mean, large caps are favorites because they're the safer bets. You know that those flows are going to come back very quickly. I want to also ask you, are you of the view that the FII flows have now returned, Ashwini? Or it's
I
too
can't
early?
say for certain, but I do think that the last 6 months of battering and the narrative that, India is very expensive, etc., has finally run large part of its course. And a lot of it will depend on the direction of the US dollar. Historically, we've seen that a weak US dollar is a huge driver of foreign flows. By whatever the Trump administration seems to be doing, their inclination seems to be to weaken the dollar. If they succeed, that's positive for flows into India.
Okay. Thank you so much, Ashwini Agarwal. Great chatting with you as always. And, Hiral, last few days, that change in conversation has been clear. We spoke to Ramdev Agarwal also yesterday, who said the worst is behind us. This is something that our conversation right now is also reflecting.
Absolutely. I mean, the worst is behind. Now, who is going to take the flag post and reach the flag post, which sector is going to reach the flag post from here on is the key, because if you're eyeing 24,200, the kind of participation that you will need from heavyweights, that is going to be very important, more than the broader markets, right? So it's going to be the large caps that will continue to remain in focus, but completely out of time. But that's a wrap on this edition of India Market Open. Up next will be Ask Profit with Mahima and Alex. Please stay tuned to ask all your queries.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations are corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. With me is Mahima Vachar. It's been so long that I've been getting it right every day, and then today I thought about it. Mahima Vachrajani. All right, so this is not one of the names that I struggle with. That name is actually Narayana Hridayalaya. There you go. See, I struggle with that. I'll get that also eventually. But let's talk about the markets this morning. You know what this show is about. This show gets you answers to all of your stock-related questions. And you can get in touch with us either on the WhatsApp number that's on the top of your screen or on the number that is on the bottom. And please do call us, as some of you already have done. Let's talk about the markets. The Nifty 50 gaining about 0.5% and building on the gains that you've seen over the last several sessions. 1 week or so has been incredible for your portfolios and indeed for Dalal Street as a whole. But you're seeing a little bit of a wobble at the broader end, a little bit of a cooling off. And you have the mid-cap index that's down about 0.5% or so, 0.6% right now at the low point of the day. And you have the small-cap index that's also losing ground about 1% or so right now. So I'm curious about the advanced decline ratio, if we can pull that up. And let's pull up the line so that you know. There you go. So at the start of the session, you saw a very significant tilt towards the advances. That has changed over the course of the session, and now you see more declines. This is almost certainly profit taking at the broader end of the market, where you've seen quite a few stocks that have run up very sharply in the recent past. Let's also pull up the sectoral heat map, because IT continues to gain ground. It is off the high point of the day, but it's gaining about 1.3% or so. Nifty Finance is in focus. It has been all of the last week or so. And you have private banks that are gaining about 0.5%. The Nifty Bank as a whole up about 0.4%. But you have a little pressure in the form of pharma, which is down about 0.9%. You also have consumer durables that is losing about 1% or so. And media, which has run up in the recent past, that is cooling off and down over 1% at this point. Not many constituents in that index, but it's still down about 1% or so. But let's introduce our experts for the day. We've got Swati Hodkar as well as Astha Jain joining us this morning. And ladies, thanks so much for taking the time. Good morning to both of you. Yours are not names that I struggle with, thankfully. Let's get our first caller in for the day. We've got Dheeraj calling us. And Dheeraj, I'm not sure where you're calling from. Good morning. Tell us, first of all, where you're calling from.
Sir,
and
good morning.
Good
morning, sir. This is Dheeraj from Hyderabad.
Okay. Please go ahead. What's your question today?
Sir, my query is regarding Home First Finance. I'm holding 310 shares of Home First Finance.
Okay.
At 1108 rupees.
Okay.
So, can I hold it for the next 1 month or in the coming 3 weeks? Or should I sell my entire Home First Finance shares and get into some pharma stocks? Because as pharma is underperforming.
Okay, so this is a contra call that you want to take because it is underperforming. You want to try and get in, but it's a very short time frame that you've chosen. So I'm wondering, Home First Finance, when did you buy this share?
Actually, like in the recent rally towards the uptick, I bought it, sir. Like one day there is an increase of around 7-8%. So that day at some high level, I have entered like around 1108.
Okay. Let me take your question to Swati on the technical, since your question is for a period of 1 month or so. The stock has seen a tremendous run up, as have several in the broader market, Swati, but he wants to sell perhaps and move into a pharma name. Is that advisable? And of course, the context is important to understand. Anything that is announced in the next week and a half on tariffs could be a negative for this sector as a whole.
First of all, good morning, all of you. The overall view on the Home First is, as of now, is being positive only. If you look towards the weekly, monthly, or the quarterly charts, those are trading in the high top, high bottom formation. No wonder in a shorter period of time, we might get some sort of a selling pressure on the higher side. But the overall structure of this particular stocks is really positive. I believe if you look towards the longer term horizon, you should hold on this particular counter downside. It has a crucial support nearby 1000 levels provided by its 20 days moving average. So as long as it sustains thousands level, the upside momentum can be continued towards to 1150, and beyond that level 1200 levels can be tested. So I will suggest to hold on this particular counter not for a 1 month but more than that period. Definitely you will earn a good amount of profit in this particular stock itself. Rather than concentrating on the pharma as such, I believe you should more concentrate into the IT pack now, because already we have seen a lot of correction in those particular sector, and as of now we are witnessing a very good buyings at a bottoms level. So rather than taking a buy call into the pharma or switch this particular stock, I will not suggest such kind of a decisions. But any fresh long, you want to switch on to the another sector, accumulate the another sector counters, try to concentrate more into the IT such as the Tata Tech, Coforge and TCS. Those counters are really looks very strong on the technical front.
All right, and Swati, what will be the stop loss for Home First Finance?
1000 rupees.
All right. Okay. 1000 is the stop loss for Home First Finance. All right. Moving on to our next question. Mahesh from Mumbai is holding 870 shares of Trent, accumulated at an average price of 814. Wow. He wants to know the fundamental view on this. He's sitting on a significant profit of 37 odd lakh rupees. Asa, do you think that it's right to give him the fundamental advice at these levels? What do you think? Should he continue to hold, considering the past 2 quarters performance for Trent, which have been impressive, but they've been sub 50%, which has not been the case so far for Trent? What's your view like?
Hi, good morning to all of you. So talking about this counter, results were good, but they were not in line with estimates. So I think that was the major reason we have seen a downfall in the trend. But going ahead, we believe that this counter is well poised to show more upside from here, because we believe that the results there will be showing definitely will surpass, especially on the margin front, which we believe will can be the case for taking the stock towards northward direction. So overall, we believe continue holding in this stock is a better choice rather than booking profit. Or even one can book partial profit in case if anyone wants to earn cash. So idea here is either to book partially or to remain invested in this counter if money is not required immediately. Target for this counter at the immediate level is at around 5,400 to 5,500.
All right, so that's the view with respect to Trent. We have the next query from, this is from Shravan Kumar, who's from Bengaluru. He's bought NHPC at the price of 91, and he's bought 2,500 odd shares, and he wants to know what could be the target for the next 6 months. Swati, what are the targets that you're seeing for this particular counter where charts are concerned, and what's the stop loss that you're seeing?
Yes, if you look towards a larger degree, formations on the technical front, 2024 was not really good for this particular counter, and it was trading in the low top, low bottom formations. Now, this counter has given the downward trend line breakout, which is a positive sign on the weekly chart, and slowly and steadily it will move on the high side. For a month and quarter period as such, definitely my target comes to at around 92 to 94 rupees. Up to that level, we can witness positive momentum, and support it has at around 76 rupees. So by keeping that as stop loss, you can definitely hold on the long positions.
All right, so that's the view with respect to NHPC coming in from Swati. We have a next caller lined up. Ravi Chandran is calling in from Hyderabad. A very good morning to you, Ravi. How can we help you?
Yeah, hi, very good morning. Yeah, my query is regarding Bharat Electronics.
Okay.
So I'm holding 50 shares of Bharat Electronics at the rate of 290.
Okay.
So the stock has moved upwards since couple of days, couple of weeks.
Right.
So shall hold or sell? Does this stock has potential to give profits, and I can hold for next 6 months?
6 months. Okay. So, and you saw the charts, I believe, when you bought the stock. All right, got it. Swati, I'll again come to you. Bharat Electronics is the counter. What is the kind of target and stop loss that you're observing on the charts?
In my monthly charts, it's really doing very well. This month, we have seen almost 20-21% profit or gains in this particular stock. Now, the interesting fact is that on the monthly chart, the stock is forming the flag pattern. It is under the consolidation phase within the range of 260 to 310. As long as we witnessed a consolidation, probably in the near-term future, we are likely to witness a very strong breakout of 310, which is almost the buying value of the client itself. I believe very soon we will get a breakout. Any move about at 310 levels on the closing basis will extend the up move rally towards minimum 340, then initial then beyond that targets will be at 380. So you can definitely hold on the long positions at the current market price if you want to keep any kind of a stop loss. 280 is acting as a crucial support level provided by its 20 DMA. So by keeping that as a stop loss, you can hold on your long positions.
Okay, all right. So 280 are the levels to look at the lower levels. Raghav is calling us, or rather messaging us from Bengaluru, and he's bought Whirlpool of India at an average price of 1,040. Can he average it out and wait for a year? Since he's talking about at least a year, Asa, I'm going to come to you on the fundamentals here. He's incurring a loss right now. Would you suggest averaging his cost price right now and holding for a year?
Yes, I think one can hold this counter for the year because first of all, results were very strong, and in fact, they have started gaining market share in majority of the categories like cool refrigerations, etc. So I think that will help the company in posting very good set of numbers going ahead also, because gaining market share definitely helped the company in proving itself very strong on the financial front. So my idea here is to stay invested in this counter, and price target which we would like to give this counter is somewhere at around 1100 to 1150 odd levels.
1100 to 1150 is the target on the upside for Whirlpool of India. Shrikant is calling us from Telangana. Hi Shrikant, good morning. How can we help you today?
Hi sir. I am invested in 2 lakhs mid cap and small cap stock recommendation, sir. Long term is 10 years to hold in, sir. Fundamentally is a good stock.
Okay, and you're looking
and small cap.
Okay, and you're looking for a very long period. I see you're looking for a 10-year time frame, right?
Yes, sir. 5 stocks recommendation, sir.
Okay. Shrikant, can you help me? One last question for you. Do you currently have any stocks that you've invested in?
Yes, sir.
Are you currently invested in any stocks? Do you own any stocks right now?
EGA Green Pack, sir.
Okay, and
Finitex Chemical, sir.
Okay.
I know, sir. I am a long-term investment recommendation, sir.
Got it. I understood. All right, Asta, if you were to venture into the small cap and the mid cap space right now, and you have 2 lakhs of capital to deploy for a period of 10 years, it's plenty of time. What would you buy? What would your recommendations be? Or as a lot of people are advising at this point, would you stick to the large caps?
Definitely large cap is looking good to us in the near term, but I think in the longer term, because time horizon is 10 years, so there is no issue in investing in these small cap or mid cap stocks also. Now, talking about small cap and mid cap space, first of all, in the small cap space, Gabriel India is looking very good to us. So I think this company is worth looking at, and one can make an investment. But here I would like to suggest make investment in the staggered manner, not put your money directly the lump sum amount here. Just put 10% or 20% at every downfall. So Gabriel India, this is one of the counter which we are finding very good. In the mid cap space, Solar Industries, this is one of the defense name which we are recommending strongly. Although ticket size is very high, it is more than 10,000 rupees stock. But I think going ahead, it has a strong potential to move till the level of 13,000. So this counter in the mid cap space is looking very appealing to us. In fact, if we talk about the other mid-cap counters also, I think there are various TD Power System, PG Electroplast. These are some of the counters which we believe are well poised to show good returns from here. In fact, TD Power is looking very good to us. PG Electroplast today, it has shown a downfall. So again, stance here is whatever investments you are making, just make them in a staggered way and don't put the lump sum amount at one moment of time. But these are the few counters which we are really liking at this moment of time.
All right, so that's the view with respect to how you can deploy 2 lakh rupees right now with a time horizon of 10 years coming in from Astha. All right, the next counter that we are talking about is Inox Wind. Amir from Kashmir has bought 1220 shares at an average price of 181, and he wants an outlook on this counter. He's not mentioned whether he wants a longer term outlook or a shorter term outlook. Swati, I'll take this with you. What are the charts suggesting for the counter, and what is the target and stop loss looking like?
Remember, the counter is under the consolidation phase within the range of 180 to 165 levels. So as long as it doesn't give the breakout on either side, the direction will not be clear. But looking towards the technical setup at the current levels, we believe that downside it has a very good support, short-term support at around 160. So if it manages to hold that level, a slowly and steadily up move rally can be witnessed beyond. First target will be a 180. Beyond that, 200 levels can be seen. So I will suggest to wait on this particular counter, not to book your losses, because your buying price is nearby the CMP itself. So hold on the long position by keeping a strict stop loss of a 160. If you're getting any momentum towards to 190 to 200 levels, try to book your profits.
Okay. All right. I do want to take this next question on WhatsApp because it's a considerable loss that Harpreet is facing. Harpreet has written in, Harpreet Singh, I believe, and he's incurring a loss of 13.7 lakh rupees in purchase of ABB. He's bought 400 shares at a price of 8,872. And so he bought this in June of last year. He's wondering whether to book short-term losses so that he can set it off against future short-term gains. Remember, in case you were wondering, you can only set off short-term losses against short-term gains in the future. Of course, you can set that off in any one of the next 8 financial years, correct?
Yes.
Okay. All right. So, on the technicals, Swati, at this juncture, would you suggest booking a loss, or is there potential to recover some of his lost capital? And what are the key levels to watch out for? Where would you place a stop loss?
Alex, frankly speaking, I will not suggest to book the losses at the current market price, because already we have seen a lot of sell-off from almost 8,000 levels to 5,000 levels within a span of 6 to 8 months. Now, I believe even on the technical fronts, we look towards the harmonic pattern as well, which depends upon the complete retracement theories. So as per that theory, the counter has given the 100% retracement of its previous rally, and it is under the consolidation phase. From the last 2 months, you can see that the stock is hovering within the range of 400 to 500 points. I believe slowly and steadily it will give a rally. Not to book your losses. Counter is trading near the oversold zone. RSI showing a positive crossover. So up move rally can be seen in the near term futures. Initial targets will be a 6,000. Beyond that, 6,500 levels can be seen. And if you are holding for a 1 to 2 years, definitely 7,000, 7,500 levels can be seen into the stock. Keep a patience not to book the losses. Hold on this particular counter. Over a period of time, you will definitely earn a good amount of money.
Okay, so that's the view with respect to ABB India. We have our next caller, Om Prakash, is calling in from Bengaluru. Very good morning to you, Om. How can we help you?
Good morning. See, I would like to know about the Asian Paint.
Okay.
Which was trading about 3,500. Now it is around 2,200.
Right.
I hold around 400 shares.
Right.
at 2713.
Right.
So I just want to know whether will I get back to that 3,500 level anytime, or that still continues the complication.
Got it. Just a couple of follow-up questions. When did you buy Asian Paints, and what was the thinking behind buying Asian Paints?
No, Asian Paints I have been buying for a very long time, for last 20 years, and I keep on buying. These are all average prices. But it has done good, and I have made good profits also.
Right.
But recently, for last 1 year, it has been very badly going down, continuously going down.
All right, got your query. Asta, I'll come to you. You know, as he rightly mentioned, Asian Paints has seen a topsy-turvy in the past 1 year. Topsy-turvy in terms of the financials have not been doing well in terms of raw material pressure. Also, the company is seeing pressure. There is competition pressure also, which is playing its part. But what's the view like from a longer-term perspective?
So from the longer term perspective, there are certain things which we are looking forward right now. First of all, the rural demand has started recovering. So that can be a positive for this company, but stress is really seen in the urban demand as of now. So one point is there. Secondly, what we are seeing that one of their new products has started gaining the market, and it is now started contributing 12% of the sales. So that is again a positive for this company. Thirdly, what we believe that whatever measures the government is taking will definitely increase the discretionary spending and will help the company in getting good demand. And fourthly, softness in the raw material prices will definitely help. And in fact, the company has also retained its margin guidance. So overall, I think this stock can show some more upside from here. So there is no need to book losses at this point of the time. I think one can see the cost price of around 2,700 at which the stock has been bought. So remain invested in this company.
Just a quick clarification, Swati, you have given a call on Inox Wind, but I'm just wondering what the stop loss is?
The Inox Wind, yes, my view is positive, and the downside you can keep a stop loss of a 160 support provided by 20 DMA. So by keeping as a that stop loss, you can hold your long positions.
Got it. All right. Arjun has got a question. He's writing in from Mumbai. He's got 3 shares of Tata Motors at a price of 1,100. Very elevated levels, I must say, because the stock is at 713, but he's bought only 3 shares. So the loss is capped to that extent. He's not given us exactly what his time frame is, but he's got a long-term view is what he's saying. Asta, opportunities to buy this stock at 700 plus levels, or would you venture elsewhere in the automotive space?
Even Tata Motors is also looking good to us, because whatever guidance management is giving, especially if I talk about their EBIT guidance of around 10%, EBIT margin guidance of 10%. So I think that is good. And in fact, what we are seeing that European Union market has started recovering. So we have started seeing some sort of green shoots from there. So that will also help the company. So more, I think overall we believe that this company can move upwards from here. And we are positive on this counter, recommending a hold with a price target of 780 to 7.
All right. Do remember, of course, that, and Asa, I'm just wondering whether he should be cautious on the Trump tariffs, which everyone's talking about, because he mentioned specifically auto. Just wondering, because Jaguar Land Rover sells in the US market, it is a considerable volume driver for them, and they would technically be impacted by higher tariffs. So that's certainly something to watch out for on Tata Motors as well. We'll perhaps talk about it more after this very quick break. We've got more questions that we can take on the other side. So I'd encourage you to stay tuned.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory
back. You're watching Ask Profit, a show that gets all your stock-related queries answered, whether they're fundamental or technicals. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen. All right, we have our next caller lined up. Murari from Bengaluru is calling in. Murari, a very good morning to you. How can we help you?
Yeah, very good morning to you. Thanks for taking up my query. I want to buy Pearl Global Industries, which is in the garment manufacturing.
Right.
And which is a very reasonable ROE and PE ratio, and with a good growth expected in 26 and 27.
Right.
And the price is at half of the price of Page Industries and lower than even KPR Mills.
Right.
Can I buy it at least from 12 months point of view? At least 12 months point of view.
Okay.
The current rate.
Okay.
It has touched recently 1400.
Right.
From the peak, it has come down by at least 27%.
Got it. Got your point, Murari. I'll take your question with Astha. Astha, Pearl Global is placed well where Bangladesh Plus One strategy comes into picture because it's a retail exporter. What are your views with respect to counter and valuations? Since he mentioned valuations, it's right now sitting at a 27 times P, which is the case for a lot of retailers as well. What's the view like in terms of valuations as well?
Yes, so here I would like to say that if I talk about the industry price to earning multiple, because we are taking it in the textile industry, so the industry price to earning multiple is 30. So it is standing at a valuation of around 27, 28 against the industry multiple of 30. So that in that way, valuations seems to be okay, not very cheaply priced at this point of a time. No doubt, results were very good. In the bottom line, we have seen a sharp rise of around 30%. So yes, they have posted robust set of numbers, but here the main concern is about, or main positive which one is feeling is about the valuation, but I would like to clear that thing. So valuation is somewhere near to the industry multiple of 30 because they're taking it into the textile industry. So overall, we believe that this counter is looking good to us, but just wait for some more downfall to come because I think there the risk reward ratio will be better. So idea here is to wait for more downfall to come and then make entry into this counter. And another thing which one can do is just wait for Q4 numbers as well. So I think after coming of those numbers, then it will be a very safe bet. Otherwise, one can wait for some downfall to enter into this stock.
Okay, all right. So that's a view on Pearl Global. Murari, hopefully that answers your question. Hudco is the name of the counter that we're talking about next, and Shruti is writing in from Hyderabad asking about this. She's bought at a price of 203 and she's wondering whether she can add more at the current rate. Swati, what's the call here?
As of now, Hudco is really doing very well. Even you can add on at the current market price because the counter is just trading at a support level of 200 to 190. That is the support zone level for this particular stock. So at the current market price also one can take a fresh long positions or add on. Upside, I'm looking for a target of 240 to 250 level. So my view is positive and one can take a long position at CMP by keeping a strict stop loss of 190 rupees on the downside.
Okay. All right. So that's the view on Hudco. Swati's positive on it. Amrita is calling us from Kolkata. Hi Amrita, good morning. And how can we help you today?
Good morning.
Please go ahead.
I have some share of Samvardhan Mother's
Right.
200 share. I have purchased it at the higher price, 215, 218 range. There was a mixed range and now it is 169. So should I hold it because the company's basic is showing very strong.
Okay,
fundamental strong.
Okay, I'm just wondering which stock you have bought because the stock price
same stock which you were showing in the screen, Samvardhana Mother's.
Because this current stock price, Amrita, is not 169, it is actually 132.
Yes. 132.72.
Got it. So I just want to know, you bought it based on the fundamentals and you did buy it at high levels, but did you buy it for the short term or the long term?
I buy it for the long term. I am already holding it.
For a long time. Okay, I understand. All right. Let me take your question to Astha. Astha, auto ancillary player, Samvardhana, Motherson, what are the fundamentals looking like? Would you hold on to this?
So what we have seen is a very strong performance and it has outperformed the other global peers because of the premiumization, first of all, and the EV transition. Secondly, their order backlog is very, very strong. Although we have seen slowdown in some of the key regions where this company is operating, but still we believe that this company has been able to post very strong set of numbers despite the weak macro environment. So idea here is to stay invested in this counter, and maybe that Trump tariff thing can be can be one of the dampener. But overall, long-term view is positive on this counter. Remain invested in this counter. Price target can be set at around 160 to 170.
All right, positive view from a longer term perspective, and 160 to 170 is the target for Samadhana Madasan. All right, the next counter is Kirloskar Oil Engines. Mahendra Raj is holding 130 odd shares bought at 1025 a piece. He's currently sitting on a loss of 37,000 odd rupees, and he wants to know what should he do next. Swati, I'll come to you. Kirloskar Oil Engines is the counter. What are the charts saying?
Mahima, the view is little bit cautious, but no wonder the counter is trading near the oversold zone. So after such kind of a sell-off, we like to witness some sort of a pullback rally, which we are witnessing from the last 2 to 3 weeks. And this rally is likely to be extended towards to 770 to 700 levels. So not to quit the long positions at the current market price. If you're getting any bounce back rally towards to 800 and so level, then you can quit the long positions. But at the current levels, you can hold on. Downside, it has a very good support at around 700 rupees. So by keeping that as a stop loss, you can hold the long positions.
Okay, all right. I do want to ask about ONGC. We've got a viewer, Anirudh, who's writing in from Hyderabad, who's bought at levels of 258. The stock is currently at 241. 70% of his portfolio is in the stock, and he's deployed as much as 70 lakh rupees. He's looking for a 1 to 2 year time frame. So he's got a concentrated call on ONGC. Asta, on the fundamentals at this juncture, what would you say with regard to an exploration company, ONGC? Because crude oil prices at just about $72, they've been a little depressed. So what's the view on ONGC?
But I think the company has shown a good volume growth, especially if I talk about the KG 98 piece. Then the volume growth is very, very strong. So this is what we are liking about this company. In fact, whatever tie-ups they have done with the BP, I think that will also help the company in having good production volume. So overall, in the longer term, I think this stock is a candidate which can move in the northward direction, and one can remain invested in this counter. Initial price target we are limiting to is 270 to 270.
All right, so that's the view with respect to ONGC. Our next caller, Rahul, is calling in from Patna. Rahul, a very good morning to you. How can we help you?
Yeah, good morning. Actually, I wanted to know about NCC share.
Okay.
Can I hold or sell?
Okay.
Right now it's going falling down, so I wanted to ask. I have 100 shares of NCC Limited.
Got it. I got your query, Rahul. I'll go on to Swati. Swati, what are the charts looking like for NCC?
The charts are really doing very well on the NCC part as such. The counter, after such kind of a sell-off, we are witnessing some sort of a relief sign or a pullback rally. But only the concern is that it has a very cluster resistance zone of 215 to 216 levels. As long as it stays below that level, the short-term view will remain cautious. But downside, it has a very good support at around 192. So 192 can keep you as a stop loss and hold your long positions. Any move about 215-16 levels will open a door for a 240 to 250 levels. So my view is positive. Hold your long positions by keeping a strict stop loss of a 192 for a target of 240.
240 target for NCC. That's an upside of about, close to 20%. We've got a caller, I believe, but we'll come to that in just a bit. The next question is also from Patna, by the way. Shishir is writing in from Patna and asking about Goa Carbon, which he's bought at levels of 907. He's got a 3 to 6 month time frame, and he's wondering what to do with this. Swati, I'm coming back to you. He's asking, should he hold or sell?
The buying is at very elevated level, higher levels. Whatever the rally we are witnessing from last 2 to 3 days, and today we have seen a very smart rally of almost 9% with the very good volumes. The same volume has been witnessed in the month of the January itself. I believe that the counter has given the formations of the inverse head and shoulder pattern and given breakout of the same level. This rally is likely to be extended towards to 542 and beyond that level 590. But since the buying range is too high, it will take a longer period of time, at least 6 to 8 months. Then only you can catch up your buying price. But at the current level, not to book the losses because we are likely to witness a strong momentum rally slowly and steadily. So it's a hold from my end.
On the fundamentals, we had said it's a hold on ONGC. Asa had given our view, but then our viewer is clarifying that he's looking at trying to get the long-term technical levels as well. He's bought at levels of 258, Swati. A quick answer to this, what are the levels on the long side?
Long side first target will be 280. Beyond that level, 340s can be seen. But my view is a little bit cautious on those sectors. So not to create a major long positions at the current market price, but you can hold on for the mentioned targets level.
All right, so that's the view coming in with respect to ONGC. Our next caller, Ray from Bengaluru, is calling in. Ray, a very good morning to you. I believe you have a question on PB Fintech.
Yeah, correct. Good morning. So my query is, what would be a fresh buy price, because the price that I had bought at is around 2067.
Okay.
And I would like to average it out. So what should I look at?
Okay, and you are seeing this from a longer term perspective, if I'm not wrong.
Yeah, sure.
All right, Asta, I'll take this up with you. PB Fintech, what should be the price levels at which he can enter again and average out his current holdings? He's holding 15 shares at 2067 apiece.
So first of all, talking about the fundamentals of this counter, their insurance business is really looking very good, and they have performed well also. Now, what is positive? Another positive about this company is now they are expanding. I mean, they are thinking to expand into the secured lending also, secured credit lending through various product launches. So I think all these efforts taken by the company will definitely help the company, along with the fact that their insurance business is doing great. So overall, I think this stock is well poised to show more upside from here. Now, the question is regarding the entry. Since we have seen a downfall today in the stock price, my idea here is to wait for more downfall to come, maybe at around 1600 or 1580 are those levels where one can make the fresh entry, and price target can be set at around 1700 at that moment of time.
Okay, Adani Green is the name of the counter we're looking at next, and this is a question from Rajan Kumar, who's writing in from Vijayawada. He's bought at levels of 940, which is very close to the current market price. The stock has risen about 12% or so over the last month or so. He's looking at adding more perhaps, or he's wondering whether to hold on. Swati, on the charts, what's the view?
My view is positive because the counter is showing a positive divergence on the daily as well as on weekly chart. Already we have seen a very good kind of a momentum from 800 to 950, 980 levels. Since the buying price is at the CMP, no use of doing any average it out, because not if you are getting any dips towards to 880 and so level, then you can think of average it out, but not at the current market price. This rally is likely to be extended towards to 1050 and beyond 1120 levels can be seen. So you can hold on the long position. If you want to keep the stop loss, or we can say the support levels will be the 880 levels on the downside.
All right, standard disclaimer, Adani Green is also a part of Adani Group of Companies, and NDTV Profit is also a part of Adani Group of Companies. Moving on to the next caller, Uday Kiran is calling in from Odisha. A very good morning to you, Uday Kiran. How can we help you?
A very good morning, madam. I have a shares of the Kalyan Jewelry, 750 sets I have. At the price of 441.
Okay.
I have little bit confused about the share. What can I hold it for a long time, or I can exit from here?
Okay, and you've entered at the right levels, because the stock has seen a significant downtick in the past few months. Asta, I'll come to you. The downtick was on the back of a couple of, in fact, a series of events which kind of had a overhang on the counter. But overall, fundamentally, the stock is looking strong in terms of its revenue uptick as well. What are the views like from a longer term perspective for Kalyan Jewellers?
So from the longer term perspective, on the back of the news flow in this counter, I would like to advise stay cautious. And secondly, I think the earnings growth will be flat. This is what we believe or we expect going forward. So idea here is to either book partial profit because luckily the investor has taken it at the lower price. I think at around 430. I am not sure about the cost price, but I believe it is on the lower side. Am I right?
Sorry, what did you say? Can you come again?
441. Yeah,
Cost price is at
441.
Yeah, 4.
No. I'm not sure.
No, so his buying price is 441.
Yeah, that is what I'm saying.
Yeah.
Cost price is 440.
Yes, correct.
So luckily the investor is into the profit, so would suggest to book partial profit or take all profit right now. And then when everything like seems to be stable in this counter, then again one can make an entry. So right now our idea is to book profits.
All right. Sula is the next counter that we're talking about, and this is Rohit, who's looking for a long-term view on Sula. He's bought at levels of 423, and so he's incurring a loss. The stock is not doing too well on the fundamentals. He's got 1,000 shares. Asa, what's the view on this? Should he hold or should he exit?
Yes, fundamentally the stock is not performing well, but my idea here is to stay invested in this counter, at least wait for Q4 FY25 numbers and then make a strategy in this counter. So right now I recommend to hold this counter.
All right. The next question is coming in from Narayana, who's calling us from Visakhapatnam. Hi, Narayana. Good morning. How can we help you today?
Hi, good morning, Alex.
Good morning. Please go ahead.
I bought Taril at the rate of 441, 300 shares. I want to accumulate more.
Okay.
In the prospect of 2 to 3 years.
2 to 3 years. And what is the thesis here? Are you betting on the long-term story for power and the requirement for transmission systems?
Particularly, this company has a good profit and the sales growth for the last 2 quarters. I think it has a good order book also.
Yes.
That's why I'm accumulating this one.
Got it.
I want to accumulate more. I want to accumulate more.
Okay. I understood your question, Narayana. Let me go across to Asta on this one. Asta, transformers and rectifiers, it's turning out to be a pretty popular stock among the retail investors as well, and it's done well for them. Would you add more to the current level though?
Yes, because first of all, I think the popularity is due to its one of the best results which this counter is continuously posting. In fact, in the Q3 of FY25, their bottom line was risen by around 200%. So continuously, they are posting very strong set of numbers. So that is the major point which we always look after the stock. And secondly, what I believe is that in fact, they are continuously receiving good orders also. So order inflow is also very strong. Yes, one can stay invested in this counter as well as some add-ons can be made, but at the lower level of around 490 to 500 zone. Price target can be set at around 600 odd levels.
Okay, we've got a message all the way from Dallas, Texas in the United States, and I really appreciate that Sai Karthik has taken the time to watch this program. Means a lot to us. Geo Financial Services, the name of the counter that he's asking about, he's got an average price of 226 rupees per share, which is currently very close to where the market price is. 1,500 shares is what he's got. He's looking at a 3 to 6 month time frame. Swati, on the charts, what's the view?
Yes, my outlook is definitely positive because after such kind of a correction, the counter is trading in the oversold zone. We are likely to witness a upmove rally or a pullback rally towards at least first target will be a 250. Beyond that level, 280 levels can be seen. So hold your long positions. Risk reward ratio is really favorable. Downside, it has a crucial support at around 210 rupees. So by keeping that as a support levels, you can hold on the long positions for immediate target of 270, then 300 levels.
Okay, Vineet from Coimbatore is asking the next question. He's holding 170 shares of Tanla Platforms bought at 611 a piece. He wants to know whether he should hold or sell. What's the view like, Asta?
So I would like to recommend hold on this counter rather than selling at this point of a time. Now talking about Tanla Platform, what we believe that there was some price challenges and that is why we have seen that the growth was not in line with the expectation. But moving ahead, we feel that this counter can give good performance on the financial front, and hence we are recommending hold on this counter. Initial price target which can be set is at around 500.
100 is a call on, initial price target. It's very close to the current market price. All right, it's time for the rapid fire segment. Both of you know what this means. We'll toss as many questions as possible over the course of 2 minutes at you. Do keep your answers as crisp as possible. The first one is from Subramanian, who's writing in from Chennai. Suzlon Energy is bought at a price of 58, which is very close to the current market price. He's wondering how long to hold this for. Asta, what's the view?
I think one can remain invested in this counter for some months, and the price target can be set at around 65 to 70 odd levels.
All right, Utkarsh Small Finance Bank is the next counter. The person is holding 34,000 shares, bought at 30.7 a piece. What's the view like, Swati, on the charts?
View is a bit cautious, but you can hold on this particular stock. 22 is the support level, upside 30 levels can be seen.
Okay, Canara Bank is the name of the counter. June 24 was when Dinesh bought at levels of 110. He's asking whether to sell and buy another banking stock. Asta?
I think the one can remain invested in this counter as well for the price target of 95 to 100.
Okay, Tata Elxsi is the next counter. Tejas from Nagpur wants a longer term view on this. Asta, what's the view?
Longer term, we are not very much positive. Would like to wait for Q4 numbers. So right now, just hold on this counter, but just closely watch Q4 FY25.
Okay, Vodafone Idea 2,600 bought at levels of 11. This is Chandan Jain. Should he book losses at this point? Swati?
He can keep the stop loss of 6.5 and carry the long positions. If you're getting any move towards to 9 or 10 rupees, try to exit the long positions.
All right. Tata Steel is the next counter. Nitin from Bengaluru has done a longer term investment on in this particular counter, holding 60 shares. What's the view like, Astha?
View is positive on this counter given the outlook on the metal space, which is very positive. Remain invested in this counter. Initial price target 175 can be set.
Okay, Vinati Organics or Himadri Specialty, 50-50 or one of the two. Asta, long-term view.
I think 50-50 is a better choice rather than so 50-50, and especially we are more positive on Vinati Organics rather than.
Okay, all right. So tough question at the end. Asta and Swati, thanks so much for joining in. Always a pleasure having you on the program, and thanks as always for joining.
Okay.
All right, well, that brings us to the end of this edition of Ask Profit from Mahima Vachrajani and myself. Thank you so much for watching. Do stay tuned. Lots more coming up on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
Hello and welcome. You're watching KYC. This is a show designed to give the regular investor powerful, actionable insights into the fundamentals of a single NSE listed company daily. We're talking about VMart today. Interesting because in the retail space, it's a crowded space in that sense. But at the same time, this one is engaged in the business of value retailing. So tier 2 and beyond is what they focus on in terms of geography. They have 488 stores. Pretty much all of the stores are on lease. And while I'm speaking about this, you'll start to understand how cost structures within the company are also working. So all stores are currently leased. They have a strong presence in UP, Bihar and Tamil Nadu, and therefore a larger focus on tier 2 and beyond cities. Now, in terms of store formats, and this is interesting, they've categorized their store formats into 4 or 5 verticals. One is the VMart Aspire. The format caters to young generation. Focus is to provide Gen X the latest trends in fashion. Then there's VMart Plus. The store caters to all age groups and they're serving the basic needs of customers and providing contemporary fashion as well. Then there's VMart Corporate. Here they are focusing on 22 to 25-year-olds. That's the target. And they are serving again the fashion needs as well of these. Then there's VMart Values. and these stores largely cater to all age group formats, focusing on basic needs. So this is pretty much covers all age groups. The last one is LimeRoad, and this is the online fashion marketplace of the company. Currently contributes just about 1% of top line, so not major in that sense, but nonetheless a good possible lever where they can push growth higher, because it's an omni-channel, and omni-channel is generally where the sourcing is done in a common warehouse, and thereafter you are distributing to both stores, which is retail stores, brick and mortar, as well as doing online. So that's broadly the model they are following. Store count. This is how their store count is split. Largely, as you can see, tier 2 and beyond. Maybe they have nearly 370 of their stores out of the 488 in tier 2 and beyond. That's the larger focus area that they are currently working with. They have a larger focus on being low cost and in terms of their revenue mix, just about 1% from LimeRoad. So probably that's how their revenue mix is structured currently. And I'm interested to know how quickly they are able to ramp up on LimeRoad 1 and Unlimited, which is the other piece. So channel mix is something that I'd be keen to also understand better as to how they are looking to pick it up from here. Now, in terms of how we're going to break this down and metrics that we're going to look at for a VMart retail, let's look at all the metrics that we're going to look for. One, we're going to look at income statement, balance sheet, cash flow, and shareholding. So, of course, the key ones. But along with it, we will also look at a street cred, valuations, analyst recommendations, and your outlook in terms of what's their growth target, etc. So we look at all of those as we assess this company, and thereafter we'll go across and speak with or have a look at the conversation we've had with the management. Let me first bring on Mahima Vashajani, who tracks retail very, very closely for us, and she's going to give us a breakdown with regard to the income statement. Mahima, over to you.
Right. So overall, the income statement picture is on a positive trend. If we check the 4 parameters, that is your revenue, your EBITDA, your margins, as well as net profit. In terms of revenue, the 9 months FY25 numbers stood at roughly 2,400 odd crores, which was around 2,700 odd crores in FY24. So the 3-year CAGR has been around 37%. But as we were discussing earlier as well, Harsh, if we exclude the COVID period, the overall 3-year CAGR, that is trailing 12 months basis, has been around 23-24 odd percent. In terms of EBITDA, the overall CAGR has been roughly 17 odd percent, which stands around 309 crore rupees in 9 months FY25. In terms of margins, they have improved as compared to FY24, where margins stood at 7.6, and they've now improved to 12.5%. Margins overall in FY24 were also affected by the overall acquisition and implementation and execution of LimeRoad. But this year specifically, the company has taken cost initiatives and has focused on margin expansion as well, which is why we are seeing a significant uptick in the margins as well. Net profit, well, this is the year where company so far has been profitable. Otherwise, FY24 was a loss of around 97 odd crores. This year, till now, 9 months FY25, the company has seen profits of around 27 odd crores. Of course, we'll wait and watch out for as to how the 4th quarter pans out and whether the company stays in that profitable range or not. In terms of operational metrics, well, average transaction size, overall, if we compare for the 2 categories, that is VMart and Unlimited, 9 months FY25, there has been no growth as compared to 9 months FY24. It has remained within that 980 odd range. Unlimited has in fact seen a decrease in the transaction size, which was around 2014 versus that of 1797. And overall total also, there is a tad bit of decline when it comes to average transaction size. Average selling price, however, we've seen that the total average selling price for VMart for the entire company stood at 234. For VMart itself was 216, and for Unlimited it was around 431, where total is concerned. In terms of conversion rate for 9 months FY25 versus that of 9 months FY24, the conversion rate has significantly gone up. It stood at around 39 million in 9 months FY24, which has gone up to 56 million. In terms of other operational metrics for 9 months FY24, double-digit growth in terms of same-store sales growth at 12%. Volume growth also stood at 10%, but this is lower as compared to its peers like V2 Retail. Stores count stood at 488, as Harsh also mentioned earlier. Sales per square feet stood at 729. And overall retail space right now available for V-Mart, something like a V-Mart retail, is 4.2 million square feet, which as compared to V2 retail is much lower, because if I correctly remember, for V2 retail it was around 17 million square feet. So overall, operational metrics to some extent are improving, and in terms of revenue as well as being profitable, the company is making its contribution towards turning profitable and also taking cost initiatives to expand the margins as well, which is why we've given a thumbs up right now. But operational metrics as compared to peers, Harsh, are definitely a little lower as compared to something like a V2 Retail, which has seen a good growth in terms of same-store sales growth as well as volume growths.
Yeah, possible, but a 12% same-store sales growth in an environment where we've seen a bit of a drag where retail is concerned.
Absolutely, and where large players like Aditya Birla are not even doing single digits, high single digits volume growth.
Correct. It's not looking all that bad either. So, and therefore the thumbs up justified, and the kind of growth clip that they've done, 23%. Even when I'm looking at trailing 12 months currently, so maybe in Q4 you'll have a stronger number. Mind you, Q3 was their strongest top line that we've ever seen from a V-Mart retail. So maybe Q4, if they're even able to replicate that, the numbers will be starkly better. You'll roughly go at an annualized 4,000 crore kind of top line clip, which is fairly decent in terms of growth overall. So some things to keep in mind. Let's look at the balance sheet. Now, in terms of net worth, the net worth has actually come off over the 6 months because we've seen a bit of a loss which has crept in the first half of this year. You've also seen debt go up. Mind you, we spoke about the acquisition of LimeRoad being a bit of a headwind with regard to numbers. That seems to be starting to even out now. And therefore, these numbers may look a little weak at the outset, but likely some of these numbers may start improving very, very quickly. And nonetheless, the numbers at the outset don't look all that bad. So for the gross debt to be around the 155 crore mark even at this point doesn't look bad at all.
But in fact, stepping in, they've also given the scenario for 31st December in their recent presentation, and the debt has come down to around 35 odd crores. So that debt has significantly come down.
Correct.
And
so that's at the end of 9 months.
End of 9 months.
So the number looks different at the end of 9 months. But if I were to compare net worth, gross debt, and cash as of September H1 to 9 months, we are seeing that there are improving metrics which are playing out.
Correct.
Also, for gross debt, even say for example to peak out at 155 crore on a 2,500 crore market cap doesn't look too severe in that sense.
Correct.
Given that it's a retailer. Also, they don't own the land or they actually lease the land on which they build the store, which makes it easier for them to be able to drive operating cost as the number. And therefore doesn't require very heavy capex either in that sense. So therefore not surprised that the debt is at that number, but looks reasonable, and therefore the thumbs up. You want to take up cash flow?
Absolutely. So the cash flow position right now, we've given it a neutral rating because overall, if we see the numbers, as compared to how they panned out, we have the updated numbers as well for this as of 31st December 24 and 25 as well. And but before that, the numbers in terms of operating cash flows are slightly have gone down, but this could be because overall inventories would have gone up. They will be stacking up for festive season, which is why. So overall, when we see the picture at the end of FY25, we'll definitely see that increase in operating cash flows and net cash flow. overall, in 9 months, FY25 has turned positive, which was negative in FY24. So net cash flow position is also improving, but at a very lower pace, which is why we've taken a very optimal approach right now and conservative approach and given it a neutral rating right now.
Yeah, absolutely. And it's also Limeroad, right, Mahima, which we spoke about, which has impacted some of these numbers. Of course, Q3 has been on an improving trajectory. Can Q4 continue to sustain that? Will essentially be the question. Let's look at shareholding very, very quickly. Now, in terms of how the promoter shareholding has panned out, it's at 44.3% currently. Your FIs have trimmed their stake a little bit versus March of 22. DIs have in fact hiked stake and very, very substantially. Public shareholding has gone down. But broadly, promoter shareholding being largely stable over maybe 2.5 years, where we've seen a very decent rally in markets as well, giving some amount of support to the fact that promoters still hold a chunk of the company. So 44.3% in terms of the promoter stake. We'll give this a neutral, but nonetheless, it's decent in terms of the promoter holding. Mahima, with regard to Street Cred.
Right. So Street Cred, in the past 1 month, the stock has been down by about 2%. 6 months, the stock has seen a hit of around 27%. This is despite the kind of performance that it has given in Q2 and Q3 as well. 1 year, the stock is up by about 39% and 5 years return for the stock has been around 97%. So since we've seen a downtick in the past few months, it's just that reason because of which overall we've given a neutral rating. But of course, this downtick is on the back of the market sentiment as well as to how the markets have panned out in the past 6 months, and we've seen that the mid caps and small caps have taken a significant hit as well. So overall, again, taking a conservative approach here, we're giving it a neutral rating, but overall the stock has done well in the past 1 year.
You want to also take us through valuations?
Sure. So in terms of valuations, if we see the EV to EBITDA for 12 months trailing, we've not taken PE here because the stock has seen losses before. In terms of how it pans out versus its peers, well, V-Mart right now is placed at a slightly better position than something like a V2 Retail or something like an Aditya Birla Fashion. But having said that, the EV to EBITDA for 12 months trailing does not look cheap right now because it's trading at around 24 odd times. It will go to around 19 times going ahead in 2025 and further come down to 14 times in 2026. So 2 years down the line, as per Bloomberg consensus estimates, it will come down to around 14 times and that will be in line with where V2 Retail will also be trading at around 15 times, and Vishal Megamart, however, still will be expensive at 27 times. Aditya Birla Fashion is something that will also come down to around 16 times. So it's a space where the competition is tough and the valuations also are looking similar where peers are concerned. So overall, considering that valuations are in line with how peers are trading at, we've given it a neutral rating for now.
And Mahima, just in terms of the valuation delta, FY24 versus FY26,
right,
what we are seeing is that the delta going down very, very quickly because
steeply.
the trajectory of growth is extremely solid. So looking at a decent growth clip, that's one way to probably look at it. V2 Retail may be growing slightly faster, but of course with it comes its inherent risks as to what happens if they don't clock in the numbers that many are expecting them to clock. Vishal Megamart too, largely in terms of the way the trajectory is moving, there seems to be a decentish growth, but AB Fashion and Shoppers Stop, what we are largely seeing is growth isn't there. Just look at the way in which the move is in terms of how Shoppers Stop's EV to EBITDA lines up. For FY26, you're at 6 times. FY25 is a year where there's no growth. And basically that is a bit of a concern. But quickly on to analyst recommendations. Just 2 analysts with a buy rating, no hold, no sell, potential upside is 36%. The number of analysts having or very low in that sense, being it's not as well covered. We'll give this a neutral. We'll go with a neutral on this one. Quick correction, the return potential is 36%. So very solid return in that sense, but just 2 analysts covering it. Now, in terms of outlook, Mahima, what can we expect And what is it? A thumbs up or a thumbs down?
Right, it's definitely a thumbs up. The management has said that it is targeting high single digits growth, mid to high single digits growth going forward. They're focusing on maintaining the margins at where they are right now. They're also enhancing customer value propositions, and they'll continue to invest in technology to improve overall operational efficiencies. They're also taking initiatives to integrate digital solutions at store level, which will overall improve their inventory levels, and they're also targeting to improve their inventory levels at least by 5%. And lastly, they'll maintain their store count, but at the same time, they'll also ensure their profitability is something that the management has said in the con call. So this is the overall outlook that the management has guided so far for V-Mart Retail.
Okay, interesting. Let's quickly pull up our rating for this one. As a result of all of this, we give it a 5.5. But how does it play out? Income statement, balance sheet, cash flow, shareholding. So 3 over here. And then you have 2.5 coming in from the others. You got 3 neutral, 1 positive, no negative. That's the other thing that really stands out for me. So 5.5 in that sense. Let's shift focus here from the management. We spoke with the CFO, Anand Agarwal, and here's what he had to say on the company's growth prospects ahead. Listen in.
I think the trends are looking slightly positive. I would say that coming at the backdrop of post-COVID correction that we saw for the last 2-3 years, last 1.5 years especially has been quite positive. There's definitely far better traction that we are able to see in terms of the customer footfalls, in terms of the customer sentiment, and also therefore the throughput that we are able to see in the numbers. But having said that, I think a large part also is to come from the efforts that as a company that we have taken to improve our product offering to the customers, the way we source, the way we buy, what we buy, how we design, how we price, and all of that. So there's a large part of work that the company has been doing for the last 2-3 years, which is also now reflected in the results that we are now able to see. But at an overall macro level, I think we still remain quite confident at the overall opportunity. I think the market may not be very, very strong, but definitely is better than what we had seen in the last 3-4 years.
Right, and overall in the past 2 quarters, we've also been seeing that there's a double-digit like-for-like growth. Volume growths are also in double digits. Do you think that this is a new normal for V-Mart Retail, and going forward, the growth is going to be higher when like-for-like growth and volume growth is concerned?
While I take your compliment, I think it is definitely a good growth. We've grown at double digit so far YTD in the year, and I would definitely want to maintain or grow even better. But I think more on a sustainable basis, one should look at a single digit, mid single to high single digit kind of same store sales growth going forward. But at an overall company level, I think we should still be looking at mid to high teens overall total sales growth for the next 3 to 5 years. And that's the effort as a company that we are trying to build on in terms of our offerings and how we look at the growth opportunity. While the opportunity remains very strong, but we still are more focused on profitability growth rather than just the top line growth. So our efforts will be more on making sure that our profitability growth is higher than the overall total sales growth.
Okay, and Mr. Agarwal, in terms of competition, of course from the listed players and the unorganized space, because in the past few years we've seen a lot of, the e-commerce platforms coming in, something like a Meesho, which are now providing what you provide generally at a lower price point. How are you viewing that competition, and what is the kind of strategy in place?
I think there's a lot of opportunity for all kind of players. We've also been trying our luck in the online space. We've also had our online marketplace platform called limeroad.com. But I think our experience so far has been that in this highly competitive price segment of around 300 rupees average selling price, it's extremely unprofitable and very difficult to operate our pure online business only for apparel. We still remain very buoyant on the brick and mortar story in the markets where we operate, but we still see online as an opportunity. At an overall level, I think the competitive intensity is only increasing, and that is also helping increase the overall size of the market. So the organized share of the market of the retail pie has been growing. A large part of that has come in from the growth of the competition and also the way we have grown. And I think it only helps to increase the overall size of the market for all players to, thrive in.
Okay, and when you say that going online is not cost effective, does that also mean that tying up with other e-commerce and quick commerce platforms is also not cost efficient for you because of the price points that you operate in?
So in the fashion segment, online still is a relevant segment, but at the higher price points. But for the quick commerce, at least our experience so far has been that in the smaller towns and even in these larger towns, the fashion as a category may not be the most conducive product to be offered on quick commerce. But having said that, we remain very buoyant on exploring that as well as an opportunity. But at least so far, we have not seen a lot of traction coming in from quick commerce in the fashion apparel segment. But we will still want to explore and understand how we can operate in the quick commerce segment, and we are doing some pilots with some of the players in some of the non-apparel categories.
Okay, in terms of store expansion plans, what are the plans looking like and what's in the list?
So I think we should be looking at adding at least 50 to 60 stores every year. This year also, I think we're just about to close, so I can't really comment on the numbers right now. But I think going forward on a sustainable basis, we should be looking at adding 10 to 12% area addition every year. So for the next year, that should translate to roughly around 60 odd stores, and the year after that, maybe 10 more. But yes, I think 60 plus stores per year, yearly addition is a safe number to take.
Got it. And in terms of the overall growth, when we see your revenues also as compared to March 2021 overall to how things panned out in 2024, the growth has been quite steep. Do you expect this growth to be better than how it is performed in the past, and at what CAGR do you expect your revenues and overall bottom line also to grow with?
So I think in the last 20 years, we have grown at a revenue CAGR of almost around 17-18%, and that's something that we would want to maintain for the long term in the future as well. And similarly, on the profitability side, our entire effort and focus of the organization is to make sure that we remain a very profitable organization, and therefore our the profitability CAGR should be much higher than the sales CAGR. So I can't really exactly specify what is the number going to be, but we will definitely want to outdo the sales number or the sales growth number as far as the EBITDA growth is concerned. So we're looking at more sustainable and profitable growth in the future, and not just revenue growth to look at the top line.
Got it. And in terms of margins, one last question. Margins have also improved, right? 2 years down the line, do you expect an expansion on these margins, or do you expect to remain with them within the same range?
I would definitely expect, and we are working towards making sure that the margins come to more healthy and more sustainable levels, and the entire effort is to make sure that our sales per square feet and therefore the total sales improves. And in the retail business, almost all of the costs are fixed costs, so therefore one should look at some amount of operating leverage, which should come in the form of improvement in the margins. And in any case, we would want to come back to the margin levels that we used to enjoy pre-COVID, and that is the first target that we have taken for ourselves. So in the next 2-3 years, I think we should be looking at similar kind of numbers in terms of margin growth.
Right, so that was around 13 to 14% if I'm not wrong.
No, at a pre-Ind AS level, that used to be around 7 to 8% pre-Ind AS, and post-Ind AS, it would be around 13-14%.
Right, that's all the time we have on this edition of KYC. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Hope this was helpful. Stay tuned. More action on the other side.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting in space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as
Hello and welcome. Good afternoon to Markets at 12. This is Malika Mishra. Let's take a look at how the markets are faring first before we move on with the show. The markets currently seem to have given most of their gains because the Nifty 50 and the Sensex 30 are off the day's high but trading with marginal gains at the moment. It has in fact erased over 3.5 lakh crore in market cap from the day's highest point, and I'm talking about the Nifty. The Nifty stands about 23,600 at the moment and the Sensex hovers around the 78,000 mark. Now, the broader markets, however, seem to be in a bit more pain as compared to the main benchmarks because they seem to be underperforming the Sensex as well as the Nifty. The Nifty mid-cap 150, as you would see, is down about 0.98%, and the Nifty small-cap 250 is down over 1%. Now let's check the main contributors to the little pressure that we're seeing at the moment, and you would see counters like, Reliance, ICICI Bank, Mahindra & Mahindra, Larsen & Toubro are emerging as the biggest drags on the index, while on the other hand, HDFC Bank is evidently doing the heavy lifting, contributing close to 60 points to the total gains on the index. Other counters like Infosys, Ultratech, TCS are sort of pulling up the market. Let's quickly look at the top gainers and losers of the Nifty 50 basket as well to get a sense of which stocks exactly are gaining and losing. And you see today that there are more declines than advances. And, most of the talking about the advances, you have, speaking about the losers, you have IndusInd Bank, DRL, Hindalco, Bajaj Auto, Adani Enterprises, Adani Ports, all losing, while some of the top gainers that you see are Ultratech, HCL Tech, Bajaj Finserv, Infosys, Trent, Grasim, TCS. So a couple of IT names that you'll see are gaining in trade. Let's take a look at the sectoral picture and see which sectors are gaining. And you would see that most sectors are declining, with only the IT and the finance holding up, and with marginal gains currently seen on the banking end as well. Now, on the losing end, you would see defense, media, PSU Bank, metal, realty, oil and gas, pharma are all in the red territory. But let's check the Nifty IT index, as we observe that not only there were some IT names in the top contributors, but also the top gainers of the Nifty 50 basket. And the index totally has been up over around 1.5%. And you'll see that most of the components, in fact, all components are in the green, except for LTI Mindtree, which is trading with marginal cuts of close to 0.5% at the moment. Let's check the advanced decline ratio to get a sense of how the market is breathing, and you'll see that, as expected from the performance of the benchmarks currently, the market breadth stands heavily skewed in favor of the declines, with less than 1/4 of the stocks advancing, and this picture looks quite opposite to what we saw yesterday. A couple of counters I'd like to see are Ola Electric, because the company has clarified that it has settled all the outstanding dues with Rosmota Group, totaling around 267 crore, and the latter has withdrawn its insolvency petitions against the EV maker. However, despite this clarity that we saw coming up on the company's front this morning, Ola Electric has been down in trade close to 2.5%. Let's check Colgate Palmolive, because this stock price is down as well, and it in fact plummeted to its 52-week low today, following the warnings of a couple of analysts that pointed out impending challenges for the company. Now, let's also take a look at Suzlon Energy, because this one has not been doing as bad as compared to the previous two that I just mentioned. It in fact soared to its 3-month high levels after Motilal Oswal put out a bullish call in this particular stock, and brokerages also have initiated coverage with a 21% upside projection for Suzlon Energy. Now, moving on, an important story that we're tracking is that Donald Trump has revealed plans to impose tariffs on autos and pharmaceuticals, adding to his upcoming reciprocal tariffs. Trump, in his recent address, in fact, said that this imposition of tariffs will soon be taking place in the near future. Let's listen into his statement first.
And we'll be announcing cars very shortly, and we already announced steel, as you know, and aluminum. We'll be announcing pharmaceuticals at some point in the not too distant, because we have to have pharmaceuticals. We don't make pharmaceuticals anymore in our country. And if we have problems like wars or anything else, we need steel, we need pharmaceuticals, we need aluminum, we need a lot of these things. We sort of don't make anymore, and yet we're equipped to do it all. So we'll be announcing some of these things in the very near future, not the long future, the very near future.
And now this announcement by the President of the United States has rattled the pharma sector, which has been under immense pressure in today's trade, as you saw most of the counters doing in the pharma space. My colleague Varsha, who closely tracks the pharma space, is joining us to explain how these potential tariffs could impact the industry. Varsha, thank you so much for joining us. Explain how these tariff announcements could impact the industry, as well as some of the counters that are most vulnerable to US tariffs.
Yes, thank you for that. So as we rightly heard that pharmaceuticals are a target alongside, automobiles, and a possible 25% of tariff on pharmaceuticals may be, we may see that. And so overall the impact on, Indian pharma company or Indian pharma sector is unclear. But anyhow, whatever tariffs will come, analysts sort of view that the companies will pass on these increased tariffs to consumer. Let's see what analysts are saying. So they are saying that reciprocal tariff of 10% are levied with no additional levy. While this would have negative sentiment impact, the financial impact could be restricted if companies pass on this increased tariff to the consumers. On 25% of tariffs, while companies will look to pass on this entirely, but there is a possibility that they may face resistance from channel partners and distributors. So when I talk about the Indian pharmaceutical companies, you have Zydus, Lupin, Dr. Reddy's, which have highest US revenue exposure. So if you see these companies, so you take Zydus, Lupin and Dr. Reddy's, they have 42%, 34% and 32% of US exposure, while Mankind, Torrent and Alkem have the lowest exposure of 6%, 8% and 18% respectively based on FY27. Now if you see the Sun Pharma, Cipla and Lupin have the manufacturing presence in the US, while Cipla have 30% of revenue contribution from these plants. While this insulate that these companies to a certain extent, the contribution of these plants, if you see, can't be ramped up in a short time due to existing regulatory filings from these specific plants and varied manufacturing capabilities. The rest of the companies, if you see, don't have manufacturing plants or any exposure through CMOs when it comes to US. Now, based on both the revenue exposure and manufacturing presence, Zydus and Dr. Reddy's, if you see, if you can see on that table, are the most vulnerable when it comes to higher tariffs. Let's see what HSBC is actually saying, when it comes to impact of EPS on these companies. So, impact on earning per share of companies by HSBC if 10% tariff has been levied. So you have Aurobindo Pharma, which will, the EPS of this company will be impacted by 5.5%. You have Cipla, wherein the EPS impact will be 4%. But if you look at the Zydus Life Sciences and Dr. Reddy's Lab, the impact on EPS is more than 6%. And if you see Sun Pharma, the impact will be only 1%, while Torrent Pharmaceuticals has an impact of 0.8%. So if you see, the pharma index is down because the Trump tariff will come maybe on 2nd April, but very soon. And these are all the companies, when it comes to Dr. Reddy's, Zydus Life Sciences and Lupin, these are the companies which will be impacted the most.
Right. So Zydus Life Sciences and Dr. Reddy's could bear the most grunt out of these tariffs. Now, not just the pharma space, but Trump has issued an executive order declaring that any country buying oil or gas from Venezuela will pay a 25% tariff on trades. The announcement has impacted the oil prices this morning, and Mihika is joining us with how this particular announcement will sort of affect the Indian market.
So, a 1% exposure to Venezuela crude could actually, invite 25% tariffs for India. Now, the announcement was that Trump stated that he would levy secondary 25% tariffs on a country buying oil and gas from Venezuela, and we do buy it. In terms of our exposure in US dollars, which is our crude import bill, Venezuela crude oil imports in 2023-2024 stood at $800 million versus $1 billion in the April 2024 to December 2024 period. This is a 27% jump. Trump, and even as a percentage of our total crude import bill, Venezuela crude now stands at 0.93% versus 0.58%. If you look at how many barrels of oil we're buying from Venezuela, well, in the next table you can see 15.5 million barrels in the April 2024 to December 2024 period. This is as per the Ministry of Commerce, and this is 1% of the total crude barrels that have been imported by India. If you had to go company specific, well, as per multiple analysts, RIL is currently the only Indian company importing Venezuela oil, and the company had secured official clearance from the US authorities to import oil from the country last year in July. But the clearance was approved well before, the Trump administration took place, and we can see some of the impact on the stock today.
Okay, so Reliance being the only company at the moment that actually imports oil from Venezuela, pardon my tongue over there. But Mihika, we've also learned that JSW Steel, in fact, has been in focus after the company becomes the world's most valued steel company with a current market cap of over $30 billion. It has also gained close to 70% year to date. Tell us what's aiding this particular company and what's the reason behind the kind of run that we're seeing?
That's right. JSW Steel has become the most valued steel company, and this is on a global platform as per the Bloomberg World Steel Index. The current market cap of the company in US dollars is $30.31 billion. It is the highest market cap versus any other top global steel player, and it is also a stock that has given better returns versus its Indian peers. If you look at the top valued global steel companies, at the top of the list is obviously a JSW Steel, where the country of origin is India. This is followed by a Nucor Corp at $29.4 US billion, which is from United States, followed by a Luxembourg-based company, and then Nippon Steel Corp, which is Japan-based company. If you look at how the company has performed in terms of your market performance, 1 month it's up 11%, year to date it's up 17%. In the 1 year time frame, the stock is up 29%, and in the 5 years it's up 7 times. A little bit about the company. The 3-year sales and profits CAGR stands at 30% and 2%, and the current capacity of the company stands at 35.7 million ton, and the expansion plan actually targets around 48 million ton by FY28, 51.5 million ton by FY31. And historically also the company has delivered volume growth that is higher than GDP and has well-timed project delivery. Lastly, what's working for JSW Steel and why analysts like the stock? Well, strong and on-track capacity expansion plan, which will in turn help the volume growth of the company. Raw material integration in terms of iron ore as well as coking coal, which will help cost efficiencies and aid its EBITDA per ton. Focus on efficiency and cost optimization. Higher value-added product as a percentage of the company's total sales mix. These are high product margins as well as their overseas business that have better metrics in terms of their domestic operations. And lastly, an expectation of their EBITDA per ton rising in the following years.
Right, Mika. Thank you so much for bringing us those details on JSW Steel. And now I have my colleague Harsh, who's standing by to explain and in fact compare Nifty Bank with Nifty FinServ and tell us how they're different, what is the kind of 6-month performance that both these index have seen, and also compare them on various other parameters like valuations. Harsh, over to you. Which is the winner here among the two?
Well, the Fin Nifty and the Bank Nifty have clearly outperformed the Nifty 50 over the last 3 months. And what we've tried to do is try to delve into how much that outperformance has been and what are the reasons for that. So let me first start off with the performance itself. If we take the base of 100, the Nifty 50 is at 91, Nifty Bank has given 96, and Nifty FinServ is at 100.2. So in fact, we've seen a flat line where the Nifty FinServ is concerned versus the highs of September at a time when the Nifty 50 is down nearly 10%. So FinServ clearly outperforming. Now within the FinServ pack as well, we've seen certain banks, especially private sector, outperforming. So let's talk about that. Since September, Kotak Mahindra Bank has given 16% returns, very, very solid, commands 3% weightage on the Nifty 50. ICICI Bank 4%, HDFC nearly 3%, and Federal Bank 1%. Of course, Federal Bank is not a Nifty stock. But look at ICICI, 8% of the Nifty, giving a 4% return. So a large part of the contributions with regard to the last 6 months have been from Nifty bank or constituents within the Nifty bank. Let's talk about Nifty bank's top gainers in the month of March. Look at some of the numbers that are stacking up on your screen. 14.5% returns that Kotak has given. Bank of Baroda, SBI, ICICI and Canara Bank giving anything between 12 to 14% returns, and then you have the others giving anything between 8 to 10%, and then HDFC Bank giving a 4% return in the month of March. So some of these heavyweights have done decently well in the month of March as well. Factors that are influencing this performance, FI is starting to make a bit of a comeback now, and if that were to continue, you might well see the rally sustain. Liquidity push by the RBI, we've seen a slew of measures coming through, 2 lakh crore of liquidity plus being pushed into the system, the repo rate cut and possible further rate cuts also to ease the regulatory cycle. There have been restrictions with regard to the RBI has placed on specific companies, something like a quota, gold loans. Some of those have been eased. You're seeing growth starting to make a comeback in terms of the GDP growth number for India as well, likely to get better as the quarters go by, as the overhang of last year's election starts to wane. When you're looking at the valuation picture, the Nifty has traded at the largest discount. The bank Nifty has traded at the largest discount to the Nifty, and I'll pull up the chart on this one. When you're looking at the 5-year average on the Nifty, 24.2 versus it trading at 22 times nearly, whereas the bank Nifty's average P was nearly 19, but it's currently trading at below 13. So the discount here between the Nifty 50 and the bank Nifty is stark, but even in comparison to the bank Nifty's 5-year average, the current bank Nifty trades at roughly a 30% discount to 5-year averages, and I'm talking price to earnings, very conscious of that, and not price to book. But something to keep on your mind, because this delta between Nifty 50 earnings and Nifty bank earnings is currently sitting at 9 as a multiple again. Which is a very, very large delta, which was the delta, and this is the 5-year chart, so you can see the delta is at its highest, and I'm talking about the number 22, which is the price to earnings ratio of the Nifty minus the 13 times, which is the price to earnings ratio of the Nifty bank currently. This delta is at its highest even now, of course has been for a while, but continues to be. So maybe something that you want to watch out for. Last off, what are you looking at in terms of valuations currently? These are some of the top banks trading 1-year forward price to book versus 5-year average price to book. We've switched from price to earnings to price to book to give you better context. In terms of the discount number, it's roughly around 60% discount that IndusInd trades at. AU Small trading at roughly a 50+% discount, Kotak trading at a 35% discount, Axis trading at a 27% discount. Those are the discounts that some of these stocks are trading at. Also, let's look at the upside, and of course IndusInd will lead that because the discount is the largest where IndusInd is concerned. Let's pull up the upside as well. Where all of these banks are concerned. IndusInd trading at a 52% upside at this point, average analyst estimates. AU 26, Can Bank 22, and then you have a slew of other PSU banks. Where HDFC is concerned, and HDFC, ICICI, some of the heavyweights, they have a 10 to 12% upside from here. Where Kotak is concerned, has a 4% downside. So this outperformance, can it continue to sustain? Well, clearly analysts don't believe it.
Well, thanks for that, Harsh. Thank you for giving us that comparison. Especially, I've caught that Nifty FinServe is the clear outperformer against Nifty Bank, and but both together have surpassed the gains of the index. Plus, both these indices have also shown some discounted PE multiples as compared to the main benchmark. Thank you so much for that. Let's move on to another important story. UBS has come up with a note on the cement space, upgrading calls on some of the key players, including Ambuja Cement and Ultratech. My colleague Mihika breaks it down for you.
So what UBS has done is upgraded its entire cement coverage to a buy rating. This includes counters like Ultratech Cement, Ambuja Cement, ACC and Dalmia Bharat, all upgraded to a buy rating. Ambuja Cement and Dalmia Bharat were actually previously pegged with a sell rating. In terms of the upside potential, the highest upside potential stands for Ambuja Cement and Dalmia Bharat, a 20% upside when you talk about its new targets versus its previous closing price. For Ambuja Cements, for ACC and Ultratech, it stands at 16 and 18% respectively. In terms of the top pick for UBS is Ambuja because of higher growth as well as lower valuations. They've upgraded Ultratech on strong execution in a tough environment, and they've upgraded Dalmia's as well as maintained ACC's ratings because of valuations and industry tailwinds. In terms of why UBS has turned positive, because it was negative on the sector for a while now, well, they expect an earnings upcycle to emerge in the sector in FY26. This is based on several factors. One, demand is expected to be a benefit from the housing upcycle as well as the revival of government capex. There are also structural cost savings that are helping drive margins for the companies, and UBS believes that cement prices have bottomed out in the 9 months FY25, which saw an 8% sharp fall in prices pan-India. And lastly, the sector consolidation that has been led by the top two players, which is Ultratech and Ambuja Cement. And lastly, in terms of earnings potential, well, Ultratech, they expect an EBITDA CAGR of 31% over FY25 and FY27. Ambuja, they expect the consolidated EBITDA of the company to double over the same period. ACC, they expect EBITDA CAGR of 26% over FY25 to FY27. And Dalmia, the expected compounded annual growth rate stands at 18%.
Thanks for that, Mihika. Now, on a call with some select analysts, Colgate management indicated muted growth environment as well as a weaker demand that has led to a significant slowdown in February sales for the company. My colleague Sumi joins in with more details of that call.
Yes, Colgate will remain in focus given that it's one of the top F&O losers, and Colgate actually did a call with select few analysts, and what we are picking up from the key takeaways that are coming up from that call is firstly, the management has clearly highlighted or indicated that Q4 numbers are expected to be muted, and this is because of high base and weaker demand, which has led to this muted growth environment for Colgate in the fourth quarter of FY25. Along with this, they're also saying that there will be profitability pressures in the fourth quarter owing to higher promotions and higher discounting, which has been a trend for Colgate at least for the last couple of quarters. So that has remained in the fourth quarter as well, and that will lead to lower profitability. So both these factors, lower revenue and higher discounting, both these factors will also put pressure on the company's operating leverage, and the margins are expected to be in fact weaker on a YY basis. Now they're also saying that they had taken some price hikes. However, the impact of this price hikes will not fully reflect in the fourth quarter given the fact that discountings were higher. So price hike will not mitigate the impact fully of the higher discounting that the company has been doing so far. However, they have also said that they are likely to outperform the overall industry growth in the fourth quarter. Now, analysts were expecting Colgate to report a revenue growth of around 1.5% and EBITDA and PAT growth of around 9%. But given this new indication that the management has given, analysts believe that there could be target price cut or EPS cuts of at least 3% post this new update that has come in from Colgate, and that's the reason we are seeing this kind of a downtick when it comes to Colgate share prices.
Right, and after the IT stocks bust in trade today, you might want to see this data. Hiring in the tech sector has taken a hit, with data reporting that less than 3 lakh less jobs were added in FY26. My colleague Haripriya is joining us with all the data. Haripriya, over to you.
The tech industry will hire 3 lakh less employees in FY 2026 because the industry is now facing macroeconomic headwinds and uncertainty, which has been brought in by the US tariff wars and the fear of high inflation rates. Now, ideally, the tech industry was expected to grow at 5 to 7%, which essentially meant that 12 lakh jobs will be added, which would include attrition, backfill and new business. Now, with the macroeconomic uncertainties, the tech spending is likely to go down and affect the demand environment. This will put the growth rate lower to 3.5%, which essentially means that only 9 lakh jobs would be added according to the analysts that we spoke to. To give some context, the hiring activity had reduced drastically in 2023-24 and only now had the outlook turned a little more positive and the activity was picking up. But now with the new developments that has happened in terms of the geopolitics, this has been put on back foot. The IT services sector specifically will only be adding 1.2 lakh jobs. Now in an ideal macro condition, it would have added 2.5 lakh jobs. The fresher part of this will be 15 to 17% of the gross hires, mostly concentrated on the skills around artificial intelligence and the generative AI roles. Largely, while the IT services sector's hiring outlook looks dampened, some green shoots or some more better opportunities can be seen in the GCCs, tech startups and the other non-tech companies that would be hiring for the tech roles.
Well, thanks for that, Haripriya. But with that, viewers, that's all the time we have on this show. But do stay tuned to NDTV Profit. A lot more news and updates lined up for you on the other side.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well. Markets give up morning gains to trade flat. Nifty loses nearly 200 points from the day's high. HDFC Bank, Infosys trade higher. ICICI Bank and Reliance Industries drag the most.
All sectors except Nifty IT and Nifty Finance trade in red after a sweet day of recovery. Nifty Media and Defense drag the most.
And Nifty Pharma and Oil and Gas trade under pressure after US President Trump vowed to charge 25% tariff on any country buying oil or gas from Venezuela. He also reveals plans to impose tariffs on pharmaceuticals.
Colgate-Palmolive hits 52-week low after the management said that weaker demand led to sales slowdown. Company remains positive about performing better than others listed oral care peers.
And several stocks buzz on the back of qualified institutional placement, that is QIP. Restaurant Brands Asia, UCO Bank and Central Bank of India trade with cuts while Punjab and Sindh Bank soars in trade. More details coming up on the show.
JSW Steel steals the show, becomes the world's most valued steel company, touches market cap of $30 billion. More details on the show.
Hello and welcome to Profit Buzzers. You're watching NDTV Profit. I'm Hiral Datia and with me is Varsha. Clearly, if you see in terms of where markets are concerned, the initial gains is something that the markets have actually gone ahead and given up, and that's something which is going to be concerning because 23,500 was the level that we were watching out for in terms of Nifty 50, but where from here on? We're still at 2686. So we've maintained to stay above those levels, but the next hurdle that we should be crossing is 23,800 in terms of Nifty 50, and post that 24,200 is what the street is eyeing. Let's quickly pull up Bank Nifty as well because that was the top gainer in terms of yesterday's session. Today there was somewhat of positivity, however now it's nearly at the day's lowest levels with trade, which is trading pretty much flat. IT, let's pull up Nifty IT as well and see what that is doing in trade, and then we'll get the sectoral heat map. There you go. The uptrend continues, though from the day's highs of 38,073 we have inched lower, but you're seeing an up move of around 1.6% in terms of IT as well. So that's something which is holding up. If we can have the sectoral heat map and then the Nifty 50 heat map to understand. So IT only sector. Apart from that, media taking major cuts, consumer durables, defense. You know, the conversation that we were having in today's session in the morning was whether defense is making a comeback or not. And there you go. You're seeing cuts of nearly 1.8% on that one. Metals is trading under pressure. PSU Bank, real estate, oil and gas and pharma absolutely taking a bitter pill on the back of what Trump is indicating. A very quick heat map in terms of Nifty 50 because it's Reliance Industries which is one of the top contributors to the cuts in terms of today's session. But apart from that, just have an Ultratech on the back of the UBS upgrade, Trent, Bajaj Finserv, HDFC, Grasim, TCS, which are trading in the positive. Coal India, Hindalco, Dr. Reddy's, IndusInd Bank, Shriram Finance. These are the ones which are taking a beating. And broader markets, mid cap and the small cap index, a quick check-in on that front as well. There you go. Nearly at the day's lowest levels with cuts of around 1.2% on the mid cap and 1.7% with regards to where the small cap 250 go. So that's a very quick update in terms of what's happening with markets at this hour. But moving on, the 2-day Motilal Oswal Financial Services 11th Ideation Conference is what is underway, and we have been bringing you all the action exclusively on NDTV Profit. The conference is a great opportunity for investors to find hidden gems in this space, which is the small and mid cap space. In fact, we've been speaking to a whole host of companies like Radico Khaitan, Aadhar Housing and lots more. In fact, now we are joined by Amit Ramchandani, MD and CEO of Motilal Oswal Investment Banking. Amit, good afternoon and welcome to the show. My first question coming to you is, what is your read with what's happening with regards to markets? Because last week plus today, the uptick has continued. You are seeing some bit of profit booking that's coming in at higher levels. The clear strategy that everyone was alluding to was buy on dips, sell on rise, and don't be greedy. What would you have to say with the current market texture?
No, I think bounce back was due. Mutual funds and other market participants were sitting on good cash, and towards the year end we see deployment. So clearly that has come through. We've seen a rise of about 10% in the last week or so, and at least till the year end we feel that you will continue to see this momentum. However, for the next 2 to 3 months, one would see some bit of consolidation, which would also include a time correction, not necessarily a dip in the prices. And post that, one can hope that indexes would sort of continue the positive momentum. Also, encouraging sign has been some bit of FII buying. So last 3 days, we've seen a good amount of FII buying come back to the markets.
Right. So Amit, when you talk about the FI buying that has come back as well, and I think that is what is providing us that kind of positive momentum. And usually the trend is when the FIs come, it's the BFSI as well as the IT space which goes berserk, right? Though IT, not a lot of people are positive on taking into consideration the kind of job cuts, the discretionary spends which are on a downtick in the global markets. If the FIs are back, first is, do you think they are back for good right now, or do you think this is just knee jerk? And secondly, where do you think they are parking?
So I think if you look at the favorite sector that we are seeing some momentum build up, and we feel that banking and NBFCs are going to do extremely well from here on. That's a sector where you're seeing disproportionate amount of interest, whether from locals or from FIs. In fact, after about a month or so, we saw 4 deals open yesterday, and 3 of them are in the banking sector. So next year specifically is going to be the year for financials, private banks and NBFCs, where you will see huge amount of primary raises come in, and also enough secondary market interest.
Right. Amit, hi, this is Varsha here. Welcome to the show. I just wanted to ask about, considering the market situation.
Hi, Varsha.
Considering the market situation, what are the sectors that you are bullish on for, say, next 2 to 3 years? Where do you see the most growth coming in?
Sure. No, so as I said, extremely bullish on NBFCs, private sector banks, and financials as a group. Right. We feel this year again you should see out of the total fundraise about 35 to 40% fundraise happening from this sector. We are also bullish on some of the tech and the digital stories which had otherwise not done well. I think consumption is the third sector, specifically premiumization stories are clearly going to lead this leg of growth in markets.
Right. Amit, considering the tariff situation that we have, how are you taking this? Because today also, Trump had announced that the next tariff that they are focusing on is on automobiles and pharmaceuticals. So overall, considering the tariff scenario, how are you taking this, announcement, and how do you see this going ahead on a long-term basis?
Sure. No, so on a long-term basis, we are clearly going to be a beneficiary of tariffs, whether it is China +1 or other. So previously we saw China sort of leading the exports to US, and you also had a few other countries who were doing that. But with the tariffs coming in, we feel that we will be a beneficiary, specifically in sectors like chemicals, EMS, and of course Auto Anch has always been one of the sectors that we were extremely strong in, and the way Indian government has been speaking and negotiating with the Trump administration, we are confident that in the longer run it's going to be extremely beneficial of India, and you will see some of the largest companies being created in these sectors in the following years.
Right. Amit, from the space that you track closely, how are you viewing this entire fundraising space? I mean, what are you getting from the markets? One is on the IPO side, and one is probably even in the unlisted space. Is it become an easy task to raise funds, or do you think people are now waiting out, taking into consideration that the valuations have dipped quite a bit?
Sure. No, so I think on the IPO, in the IPO markets, we've seen almost 3x rise in the money that was raised. So we would have raised about 1,60,000 odd crores in this financial year, FY25, compared to about 60 odd thousand crores last year. Even in the QIPs, where listed companies use this route to raise money, we've seen almost a 2x increase from 70,000 to maybe 1,35,000 crores, right? The number of deals has also gone up significantly. The average sizes for the deals for IPOs have gone up to about 2,000 crores, and for QIPs to about 1,500 crores. Even if you were to look at our global share, right, the Indian IPOs contributed about 30% to the global share in CY24 compared to that of 17% in CY23. So no matter how you look at it, the primary activities continue to flourish, and we are hopeful that this trend will continue, right? Even when we were seeing a downturn in markets, you saw a few deals happen, and with the current rise, yesterday we saw 4 QIPs being launched. Typically, you would see the primary activity pick up with QIPs and then go to unlisted space, which is the IPOs. So extremely bullish and hopeful that this trend is likely to continue. Even if you were to look at the documents that are pending with SEBI, right? Today, about 115 odd unfiled filed documents are there with SEBI, out of which 49 documents have got approval and another 68 documents are awaiting approval, which means you have a pipeline of about 115 odd issuances that is already there for next year compared to 78 issuances that were completed in FY24. So all indications are that FY25. So all indications are that the primary market activity is likely to continue.
Right. Amit, so, considering the current situation, do you still think the mid-caps and small caps, do you feel that more, still they are overvalued and more dip can be seen when it comes to mid-cap and small caps, and, investors should stick to large caps?
So, whenever markets recover from a fall, right, large caps are the first ones to sort of move, and then you see the mid caps and small caps sort of pick up. While there has been some bit of correction in mid caps and small caps, overall, I think we still find the broader mid cap and small cap to be still overvalued. So one would see some bit of time correction and in the next 4-5 months for people to come back to the space. However, we've always believed small caps and mid caps are the ones that give you the actual growth, and your bet should always be stock specific. Even in these markets, people are able to get their stocks, and we are seeing good amount of bets coming in. Yesterday we launched Restaurant Brands Asia, which is Burger King, QIP, and we have seen good demand come through for it as well. So I mean, rather than being more generalistic on small caps and mid caps, we feel stock specific ideas would continue to do well, and this is the space which gives you that multi-baggers where you can make money in the long term.
Absolutely. I mean, stock-specific action is the key at this current juncture with the kind of up move that you're seeing. But there is no, confirmation whether the upcycle is going to continue or not. But thank you so much, Amit, for speaking to us at NDTV Profit. So clearly from what Amit is saying, he's extremely bullish on NBFCs, private sector banks, as well as the financial space. So the entire BFSI space is what he is looking at pretty closely. Apart from that, if you talk about the broader mid-cap and small-cap companies, yes, they are slightly overvalued right now, but prefers to be absolutely stock-specific as well in terms of creating all of this. He was talking about Restaurant Brand India, where the QIP is opened, and it's Motilal Oswal which is managing the same as well, where it has got a good response so far. But moving on to the steel space, JSW Steel, that counter is in focus of the company has become world's most valued steel company. Now, with the current market cap of $30 billion, Mahika is standing us to give us more details. Sorry, I beg your pardon. Mika is with us. Mika, over to you.
Yeah. So JSW Steel has become the most valued steel company, whether you compare it to the Indian peers or the global peers. The current market cap of the company does stand at $30.31 billion as per Bloomberg, and it's the highest market cap versus any top global steel players. And this is a counter that has also given better returns versus its Indian peers. Now, if you look at the top valued global steel companies, at the top of the list is obviously JSW Steel, followed by Nucor Corp and a Luxembourg-based company. And even the difference between the second and third most valued steel companies, there's a difference of $91 million to $3 billion in terms of market cap. And the fourth top valued company is a Nippon Steel. And just to note, fifth one is actually Tata Steel, which is again India-based. In terms of the Indian market performance of the counter, 1 month returns stands at 11%. Year to date, it's seen an uptick of 17%. 1 year, 29%. And in the last 5 years, it's seen an uptick of 7 times. A little bit about the company is JSW Group's flagship company. The 3-year sales and profit CAGR stands at 30% and 2%, and the steel making capacity currently stands at 35.7 million tons. It plans to expand this to around 48 million tons by FY28 and 51.5 0.5 million tons by FY31. And the company is one that has always delivered volume growth that is above GDP growth, and it's also seen well-timed project delivery. Lastly, in what's working for JSW Steel and why analysts do like the counter, we have around 51% of the street bullish on the counter, strong and on-track capacity expansion plan, which will help the company's volume growth, the raw material integration, whether that's iron ore or their coking coal, and focus on efficiency as well as cost optimization, which will help its margins. And they've also increased and seeing higher value-added products as a part of their total revenue mix, which is better for margins, and this is what's leading to the expected uptick in the EBITDA per ton of the company, which is a key metric when analyzing a steel counter.
Right. Thanks, Mika, for getting us the details. So JSW Steel is actually stealing the show in the words of what Mika is describing to us. But now also let's welcome in our guest, Raghvendra Kedia, founder at Prosperity Advisors, joins in. Raghvendra, good afternoon and welcome to the show. Before we talk about markets as well, let's talk about a JSW Steel. I mean, the most valued steel company that we're looking at right now with a market cap of little over $30 billion. How would you look at a JSW Steel? Do you think a good value bet? Or versus a JSW Steel, what would you prefer?
Good afternoon, Hiral. We are bullish on the overall metal space from here. We believe that there could be some stimulus packages coming across from China, and that could keep the entire metal space in a bullish undercurrent. As the US-China tariff war escalates, China would actually try to protect its domestic sectors, and metal being a very integral and significant sector for the Chinese economy, we would see significant stimulus packages and measures from Chinese side, which would actually benefit the Indian metal stocks as well. So that overall would be bullish for metal. Specific to JSW Steel, this company has a great management, corporate governance is good, and on top of it, it has a fantastic track record in rewarding minority shareholders in terms of the stock price appreciation. It is rather a wealth creator and a constant compounder stock. So this is a stock where you can have it in your core portfolio, and any dip due to a market or a metal sector correction, if at all, should be taken as a buying opportunity for JSW Steel. Led by Sajjan Jindal, we believe that the overall group is actually trying to go significantly on debt reduction side with the very aggressive capex plans globally and across India also. So JSW Steel at levels of 1060 should be in a core portfolio and remains as a leading pick in the metal space. And we are bullish on JSW Steel from current levels.
All right, so bullish on JSW Steel. Well, moving on, Trump issued an executive order declaring that any country buying oil or gas from Venezuela will pay a 25% tariff on trades. The announcement has impacted the oil prices. Mika joins us with this. How this announcement will actually impact Indian markets?
It's actually a 1% exposure that could invite 25% tariffs from the Trump administration. Now, Trump has stated that he plans to impose a secondary tariff of 25% to any country that does buy oil and gas from Venezuela, and India does. Well, in terms of, exposure, in terms of our import bill, Venezuela crude oil imports stood at $800 million in 2023-2024, and in the April 24 to December 24 period, this stood at $1 billion, which is a 27% jump. And if you look at the percentage of Venezuela crude as a percentage of our total crude oil import bill, it stands at 0.93% in the 2024-2025 period. In terms of how many barrels we are importing, 15.5 million barrels in between April to December of 2024. This is higher than what we imported last year at 14.3 million barrels, and it's a 1.05% of our total crude imports in terms of barrels. Lastly, in terms of stock-specific impact, Reliance Industries, as per multiple analysts, is currently the only company importing oil from the country, and it has secured official clearance from US authorities to import this oil. However, this was a clearance that was gotten by the company last year in July, before the Trump administration took place, and that's why the stock seeing slight pressure in trade today.
Thank you, Mika, for all the details. Raghvendra, how are you taking this announcement and your view, when it comes to Reliance Industries, because that's the only company that will be impacted the most?
Good afternoon, Varsha. Broadly, we believe that the overall import of India from Venezuela is less than 1%. So it's largely insignificant in terms of whenever this tariff, and again, if at all it gets into effect in terms of escalation from the US tariff side, anybody buying from Venezuelan oil. So that we believe is insignificant in terms of a percentage. More specific to Reliance Industries, we believe that there has been a slight inch in overall global crude prices, and that could actually augur well for Reliance Industries in terms of the stock price. And we believe the stock can be looked upon as a slow and steady up mover from current levels. So we are neutral on Reliance Industries in spite of this movement, in spite of this announcement. And overall, for Indian crude or overall crude prices, we believe it would be an insignificant as far as India is concerned, looking at a less than 1% imports from Venezuela.
Right. So that's with regards to the impact that you could see in terms of where oil and gas as a space is concerned. But let's quickly pull up an IndusInd Bank on the screens and see what the stock is doing in trade. There is some information on the flash bottom of your screens where sources are indicating to PTI that PwC report is expected to be submitted soon. And this is the external auditor who will be submitting the report on IndusInd Bank's accounting discrepancies on Friday. This is what we are picking up so far. Now, the PwC report is expected to point out actual loss to bank due to the accounting discrepancies that have happened. Overall, 2,100 odd crore discrepancy in accounting may impact around 2.35% of the bank's net worth. This was information which was known ahead, but now Friday is when the external auditor, which is PwC, will be submitting their report on the impact that the bank could get. And the quantum of impact that PwC submits is what we need to eye from here on. So that's the fresh bit of information that we're picking up with regards to where IndusInd Bank goes. It's sources that are indicating to PTI. Let's quickly pull up the stock on the screens and see what IndusInd Bank is doing in trade. 5% is the kind of downtick that you're seeing. It's trading at the day's lowest levels. Raghavendra, very quickly, your view in terms of IndusInd Bank. Because if you just look at a 1 month chart, let's just pull up that one also, the kind of beating that the stock has taken, right? Yes, you are seeing an impact in terms of where the discrepancies go. The question was whether it's regulatory issue or is it governance issues. Once things unfold, what do you make out of it in terms of business and in turn an investment bet? Because the stock has already corrected around 40% in the last 1 month.
So, Harsha, we usually avoid catching a falling knife and see. So, on the same grounds, we would avoid buying into IndusInd Bank, even the stock is corrected significantly, might be tempting, but we would avoid. The fact that there were discrepancies is actually a yellow flag. The magnitude of discrepancies in magnitude of impact, whether it is a regulatory flaw or it was a governance override, or it was a combination of both, that is itself is a concerning thing. And that said, once the RBI also looks deeper into it and come out with their diktat on in terms of penalty or in terms of their action or remedial measures, till that time we would avoid. But at levels of 630, though the stock might have corrected 40% significantly, we continue to avoid and wait till the more final details come in. We usually prefer to stay away from so it's too hot to handle and very highly volatile stock. So it's an avoid even at current levels.
Right, avoid at current levels, and that's the word coming in. But stay with us, Raghavendra. We'll quickly slip into a short break and lots more lined up on the other side. We will talk about the pharma space, the impact on the back of the tariffs that could be coming in, and overall whether it's going to be a bitter pill for pharma as well. Please stay tuned.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key.
Well, welcome back to Profit Buzzers. Well, let's pull up the chart when it comes to Nifty Pharma. So Nifty Pharma, if you see the sector is down, it's down almost 1.4%. Now this is on the back when Trump said that he will soon announce tariffs which will target pharmaceuticals. So they'll be announcing these tariffs at some point of time in a very short period of time, and so these tariffs are actually a part of reciprocal tariffs plan, and announcement is expected in a very near future, as Trump said. Now, if you see the possible, so possibly there's a possibility that there may be 25% tariff on pharmaceuticals. Well, the impact on the Indian pharmaceutical companies is unclear, because we don't know what percentage of tariffs will be announced by Trump. Now let's see what analysts are saying on that. So two scenarios where analysts have pointed out. One is the reciprocal tariff of 10%. If levied, this will have a negative impact on Indian pharmaceutical companies, but this will be restricted as companies will pass on this increased tariff to the consumers. Well, in case of 25% tariffs, companies will look to pass this increased tariff entirely, but there is a possibility they may face resistance when it comes to from channel partners and distributors, and companies may end absorbing a certain proportion of cost. But what we are concerned over here is you have Zydus, you have Lupin, and you have Dr. Reddy's, which have highest exposure when it comes to US. So if you see, Zydus, Lupin and Dr. Reddy's have 42%, 34% and 32% exposure to the US, while Mankind, Torrent and Alchem Labs, if you see, have the lowest exposure at 6%, 8% and 18%. Now this is based on FY27. This is as per JP Morgan, by the way. While Sun Pharma, Cipla and Lupin have manufacturing presence in the US, while Cipla has 30% revenue contribution from these plants. While this insulates that these companies, to a certain extent, the contribution of these plants can't be ramped up in a short period of time due to existing regulatory filings from the specific plants. While the rest of the companies do not have any manufacturing plants or exposure through CMOs in the US. But well, from all of this, we see that Zydus and Dr. Reddy's are the most vulnerable when it comes to higher tariff plans. But let me go to our guest, Raghavendra. If I were to talk about the tariffs impact, how are you taking this announcement, and what do you feel when it comes to Dr. Reddy's, Zydus and Lupin, because these three companies will be affected the most?
Well, the finer details in terms of the percentage of tariffs and the date of implementation are yet to come. But at current levels, Varsha, we believe that we would overall avoid the pharma sector, considering the stocks which you have specifically mentioned have a more than 35% export exposure to the US markets. So we would avoid any such stocks. And we believe that overall, also in terms of pharma, where the US has been significantly cutting down its spend to or aid to WHO or to any other health programs, that would actually squeeze upon the spending from the US space and impact the Indian exporting companies across the North American continent significantly. So pharma sector at current levels might actually underperform at broader levels. Plus, there has been some strength in rupee versus the US dollar, which actually might augur negatively to the overall exporting companies. So some strength in rupee, US cuts in WHO, and overall this new plan for tariff increase to the pharma space would actually have some negative impact and a negative price correction in the Indian pharma sector. So we would avoid the large cap names at current levels.
Thank you for that. On that note, let me also invite Aditya Arora, who's founder and multi-asset research analyst at adleytech.in. Well, Aditya, welcome to the show. And just we were speaking about the pharmaceutical sector. What are your picks, and how are you taking this announcement when it comes to US tariffs?
Very good afternoon to you and to everyone. I think, yes, the correction in pharma is evident even on the charts, and I think there could be a speed breaker in the trend of pharma stocks and the index itself. After a stellar rally, I feel Nifty Pharma Index could take a halt over here, which is currently trading at 21,468. So now 21,800 to 22,000 will act as important resistance for the pharma sector. So there could be some period of underperformance over here. So my top pick in pharma pack would be Ajanta Pharma, currently trading at 2708. This stock has actually took some time to consolidate, and there's some strong price action and volume action in this counter. So I think the strategy over here could be bullish. and it's trading at 2710. One should place the stop loss at 2600 and target should be 2820 to 2900.
Right, so that's with regards to where Ajanta Pharma goes. But moving on to the FMCG pack, you have a Colgate-Palmolive that is in focus. In fact, on a call with a select few analysts, the management has indicated that the growth environment will be muted with a high base, as well as weaker demand is going to lead to slowdown in the February sales data. Somit joins us with more details of that. Somit, what are you picking up with your conversation with analysts, because the stock is down nearly 2.5% to 3% in trade?
Yes, Colgate will remain in focus given that it's one of the top F&O losers, and Colgate actually did a call with select few analysts, and what we are picking up from the key takeaways that are coming up from that call is, firstly, the management has clearly highlighted or indicated that Q4 numbers are expected to be muted, and this is because of high base and weaker demand, which has led to this muted growth environment for Colgate in the fourth quarter of FY25. Along with this, they're also saying that there will be profitability pressures in the fourth quarter owing to higher promotions and higher discounting, which has been a trend for Colgate at least for the last couple of quarters. So that has remained in the fourth quarter as well, and that will lead to lower profitability. So both these factors, lower revenue and higher discounting, both these factors will also put pressure on the company's operating leverage, and the margins are expected to be in fact weaker on a YY basis. Now they're also saying that they had taken some price hikes. However, the impact of these price hikes will not fully reflect in the fourth quarter given the fact that discountings were higher. So price hike will not mitigate the impact fully of the higher discounting that the company has been doing so far. However, they have also said that they are likely to outperform the overall industry growth in the fourth quarter. Now, analysts were expecting Colgate to report a revenue growth of around 1.5% and EBITDA and PAT growth of around 9%. But given this new indication that the management has given, analysts believe that there could be target price cut or EPS cuts of at least 3% post this new update that has come in from Colgate, and that's the reason we are seeing this kind of a downtick when it comes to Colgate share prices.
Right, so that's with regards to Colgate. Thank you, Somit, for getting us the details. In fact, before we talk about any of these counters with either Raghavendra or Aditya, another aspect is in terms of the distributors' inventory. That has been piling up as well pretty much, and this is in terms of the faltering February data after the pickup that we saw in the month of January. Now, my colleague Sesha Sen has done her on-ground checks, and she has picked up a lot of information as to which companies could probably miss the target and the distributors which are seeing a pile-up. Let me first head across to Sesha. Sesha, clearly a picture of inventory pile-up that's happening. Feb, it seems, has been weak, and this is going to be reflected in the Q4 numbers.
The distributors of fast-moving consumer good companies have been piling up inventory as companies aggressively push products into channels to show volume growth. Now, after a lackluster festival season, there was a slight uptick in demand in January, but again, February and March so far have lagged, causing a build-up in stocks. Now, what we are given to understand is that the average closing stock at distributor levels has gone up by 25 to 40 days versus a lag of 7 to 10 days in the last few quarters. Distributors of companies including Colgate, Dabur and Britannia have missed their sales target for February as demand in urban markets remains under pressure. Meanwhile, the FMCG companies have been focusing more on quick commerce, standalone modern stores as well as rural markets for growth. Now, unlike in the traditional general trade, there is in fact a surge in discounts in modern trade such as the supermarkets, and companies are pushing for bundled offers in small packs to grow volumes. Now, but that hasn't really been effective because the muted demand scenario would mean another stressful quarter for FMCG companies, with analysts predicting a single-digit volume growth for FMCG players in the March quarter. Rising input costs such as those of palm oil and coffee are also eating into margins. While companies have taken price hikes, it may not really be enough to cushion margins in a subdued demand environment.
Thanks, Sesha, for getting us the details. In fact, Aditya, let me come to you. Colgate has been trading under pressure right now, but if you have to look at Britannia, Dabur, Jyoti Laboratories, the list which Sesha was talking to us about, what are charts indicating? What would your strategy be?
I think pharma sector has took some time to consolidate, and all these counters have also consolidated quite a while. Although there's negative news flow right now and there are a lot of headwinds, but that isn't reflecting too much on the charts. Although there could be 1 or 2 day of downtick, but overall the negative news is already priced in. Like the FMCG pack has corrected for more than 6 months, 9 months. So now all the bad news is already in the price, and this is a very good time to get in the counters. All these counters or FMCG pack, if the view is medium term, the risk reward seems very favorable. And you were referring to this a lot of counters. So in this pack, I like Britannia. We have also recommended to our clients. That's the disclaimer. I think Britannia looks fantastic over here at 4850. So I think from all this pack, Britannia is good, and there could be some upside of 10 to 20% from here. One should place stop loss at 4,600.
Stop loss at 4,600 on a Britannia is what you should be watching out for, but a good upside otherwise. Raghavendra, your view with regards to FMCG, because in spite of what's announced in the budget, the street view still is that the street does not expect the consumption or the durable side to pick up to that extent. How would you look at it?
Well, this budget announcement where there was no tax till up to an income of 12 lakhs should actually theoretically augur very well for the FMCG stocks. But that post-budget, the market has gone through a significant correction. And we believe that this correction, FMCG sector was no exception to this overall price collapse across. But the levels are very attractive, and overall, this FMCG space, which is largely considered as a defensive play versus any market correction, should play out its role in terms of a defensive sector. Well, the global macro might have some rub-off, and which could impact the interest rate sensitives or other high beta stocks. But that said, FMCG could be have a buffer and immune to any global correction. So that makes it more attractive. And specific to Colgate, the stock is corrected around 35% from levels of 3,800. It's a debt-free company, significant market share. Or in the rural India, Colgate is equal to toothpaste or vice versa. So any price correction to levels of 2,300 or even at current levels, it's an attractive buy for a double-digit return for a one-year investment horizons. We are bullish on FMCG, and Colgate also, we are bullish, expecting double-digit returns in a 9-month to 12-month horizon.
Right, so that's with regards to where Colgate as well as the FMCG pack go. But thank you, Raghavendra, thank you, Aditya, so much for joining us on the show and sharing your views with individual stock-specific action that we would be watching out for. But moving on, the next big talking point right now is the SEBI board meeting outcome that happened yesterday. Now, the Securities and Exchange Board of India have actually decided to double the investment threshold, and this is for granular disclosures by the FPIs, which is the foreign portfolio investors, to rupees 50,000 crores. And they did set up a high-level committee meeting to review the conflict of interest by its members and allowed investment advisors and research analysts to charge advance fees for up to 1 year. The decision was taken by the market regulators, SEBI, at their board meeting, which was conducted yesterday. And the newly appointed SEBI chairperson, which is Tuhin Kanta Pandey, addressed the press conference in Mumbai, briefing all the reporters with regards to where the decision goes. Now, to discuss more in terms of what would this mean and whether the street is happy with this or not, joining us on the show is Sandeep Parekh, Managing Partner at FinSec Law Advisors. Sandeep, good afternoon and welcome to the show.
Hi, good afternoon. I can hear you.
Sandeep, my first question coming to you is your view with regards to the threshold being increased. Is this a step in the right direction?
I think it's a good step because this has actually caused several FPIs to actually close their funds. So I think increasing the threshold from 25,000 50,000 crores is going to exempt several FPIs who were otherwise were not able to provide the ultimate, what they're requiring is the ultimate beneficial owner, which means who's the final human being who owns those units. Now, it may sound very obvious and clear that you can provide the, 2-3 levels up, you should be able to provide the actual human being. But in practice, it ends up being difficult when you have hundreds of investors, and some of them are, let's say, corporate entities, some are listed, some are, other forms of agencies where it's difficult to kind of find the final human being. And there is no de minimis rule, which means that even if somebody holds $5, that person's name also has to be has to be unearthed really and kept on file for future records. So the doubling of this limit is, I think, a very good step. It will still kind of impact certain types of FPIs who have concentrated shareholdings in Indian stocks. So I think they will continue to have to provide the details. There's no relaxation on that.
Okay.
So, like I said, it's not a complete solution for.
So Sandeep, from what you're saying is, yes, it is a step in the right direction, but probably more could have been done so that you don't have a lot of FPIs that would actually wind up their positions from here on. Because from my conversations offline as well, what I hear is that FPIs are winding up their positions to an extent because of the regulatory hurdles. How are you looking at it, and what are your conversations with, clients telling you?
So including our clients and several other people I speak to regularly, multiple FPIs have actually been forced to close their positions. And, this clean money, kind of very big names, obviously no issue with respect to Press Note 3, with respect to money laundering, all those issues are not there. But still they kind of, because of the concentrated shareholding and, let's say only 2 or 3 Indian companies, they're being asked details which they frankly don't have. So they've chosen to close. Several funds have, in fact, already shut, and some other funds are in the process of shutting down. So I think what I would recommend would be to create an exemptive relief, which is pretty common worldwide, that where, on best effort basis or kind of exclude the de minimis, which means the smallest of players. You don't want the $50 person to be kind of unearthed. So, I think look for the mischief, which is, our Indian promoters trying to evade the minimum public shareholding route through foreign holding, etc. So I think so long as you get those certifications and again, on a best effort basis, I think FPI should be allowed to kind of get an exemption from this ultimate beneficial owner disclosure. So I think they should look at that exemptive relief.
So Sandeep, just for the benefit of our viewers, we are a little short on time, but if you could just help the viewers understand that these FPIs who are winding up their positions, how would they actually impact India as a country so that they understand the context?
So, I mean, you've been following the markets for the past 3 months. Obviously, large part of the reduction in the indices is because of FPIs leaving. Now, I'm not saying that is causally related to this, but at least a small part of that story would be, some of these funds closing shop. So I don't think, I won't go so far as to say that is the cause of the fall. But even if it is 1% of the cause, why should we have that fall, especially when we know that they're kind of big names, good money, clean money. We should not be asking those funds to shut shop.
Absolutely. I think, and that's going to be interesting to see what's the quantum and how it impacts. But thank you so much for joining us on the show and sharing your views with regards to the threshold that has been increased. But completely out of time. A wrap on this edition of Profit Buzzers from Varsha, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headline.
Hello and welcome to NDTV Profit. You are watching a very special segment of NDTV Profit's exclusive coverage of the Motilal Oswal Ideation Conference. First up, my colleague Harsh spoke to Northern Arcs Capital MD's CEO Ashish Malhotra, who talked about the company's growth potential going forward. Listen in to a slice of their conversation.
I think the credit growth over the last 2 quarters has been a bit muted. I think that's what we're seeing towards as we end this quarter. But I think we are fairly bullish as the things settle down, especially in some of the sectors which saw some amount of stress. And we looking at about 20 to 25% growth on a year-on-year basis for the next few years. There is a massive gap between the credit demand and the supply, and the role we play in both in terms of lending directly to MSME consumers and the rural India, and more importantly the credit solution business, where we facilitate the flow of credit using our funds management platform to invest in it, using our balance sheet, more importantly providing structured finance and placement business, our bonds platform, which is Altify, and the entire data and digital stack between NPOS, Nimbus and NewScore. I think we are very uniquely positioned to facilitate that flow, and we are very happy to see as the demand comes up, as the things stabilize, for us to grow it in a meaningful manner, in a calibrated manner.
Okay. So you spoke of MSMEs. I wanted to touch upon that. How do you see the growth in MSMEs, in the next financial year? There had been some slowdown, this year, given the overall slowdown in the credit space. But on the MSME side and on the MFI side, the stress that we've been seeing. So do you see that bottoming out in this, in this quarter, or, in the coming few quarters?
I think we're beginning to see improvement in the MFI over the last few months. To my mind, it will take few more months. But I think starting next year, you should start seeing bit of growth crystallizing into balance sheet. The improvement is there in most of the states, barring one state where we're seeing some bit of uncertainty, and I hope that get addressed soon. The new guardrails put in by the self-regulatory body of MFIN and Sadhan should enable the responsible lending to address the need of rural India. That's key to drive the consumption-led growth and to enable smaller entrepreneurs, smaller women who do their business to have access to money. So I think that coming along. MSME is a very, very large gap, correct? That gap is almost 100 trillion plus demand of what's get fulfilled in the overall parlance. And I think growth there should start coming back. To my mind, that should grow over 20% year-on-year basis. That's been a growth, if you look at it, barring bit of slowdown over the last 2 quarters. That's more on the unsecured side, but the overall demand and supply gap is big. The MSME, the micro entrepreneurs, the smaller businesses need access to credit. Only 35% of them have access to the formal credit, and I see that becoming a big play. As we learn from the current situations, our scorecards and our ability to underwrite should improve significantly, and we are very aggressive because that's one of our focus sector for us to grow the secured lending business.
Okay, but so are you planning to, cut down your MFI book, or, what is your growth guidance for the MFI book?
Actually, our MFI book is actually a very small component of our overall balance sheet. We are largely a diversified lenders. In the focus segments, it is MSME, consumer, and the rural finance. And for us, the rural finance includes part of it is the JLG and the non-JLG element. Our direct exposure on the balance sheet, which is where we lend money, is less than 10% of our balance sheet. So I think at an aggregate level, we'll have about 19%. We will remain below 25% as diversified. For us to manage risk, our thesis is exposure at a sector level, exposure at a geography level, exposure at a product level, then sector, product, geography goes down to district level. Sure. And that's why if you see over the last 15 years, we tend to perform significantly better in terms of a risk-adjusted basis. Our credit cost is significantly better. But I think both of them should come back.
Okay. So I wanted to touch upon the asset quality. I mean, asset quality, has been worsening for most, NBFCs and banks, in the past few quarters. How do you see that panning out in the coming few quarters? Do you see that stabilizing?
I think we should start seeing stabilization of that credit cost over the last 2 quarters, and maybe some part of it will flow into Q1. But broadly, it is over, given all the corrective action, like I spoke to you about, the self-regulation imposed by the MFIN and the Sadhan to ensure responsible lending to the rural India. And we'll start seeing a lot of that coming into it. I think we broadly peaking of that should get over between this quarter and next.
Okay.
But we're seeing the new cohorts of loan performing significantly better. Okay. So as you validate your new scorecards, you validate new underwriting, there is a scale up of growth because the gap is huge.
All right. Sir, I also wanted to touch upon, your NIMs, if you could give us a growth guidance for NIMs.
So our NIM is currently at about 9% plus. NIMs is pretty healthy. And we have a unique proposition, if you give me a minute, that we also make about 80-90 basis point on NIM. On top of a NIM is our fee franchise, which is very unique to any other NBFC or any other institution. Now that's a function of a funds business, and that's a function of a placement and credit and tech solution business. So our NIM will expand as a direct-to-customer business expand from where it is today. And you should see that expansion in NIM coupled by, hopefully, reduction in the borrowing cost. We're beginning to see that, and that more of that will crystallize as the new rates settle down. And the growth in the fee franchise in our credit solution business between intermediate retail finance business, growth in the funds business. We've launched 4 funds, correct? We're deploying for those 4 funds, performing credit funds. Our performing credit funds over the last 9 years, we've deployed over 12,000 crores. Our return is about 14.5%. So this is high quartile performance if you look at it. We begin to grow that significantly. We want that to almost more than double over the next 6 to 8 quarters. So we see that growth coming in the funds business, coupled with our new score and POS all kicking a new line of fee income. So I should see that expansion coming on the fee line too.
Okay. You said you're expanding your fund management business. You've already launched 4 funds. So going forward, how many of those can we see? Are there more in the pipeline?
Yeah. We're working on systematically to find right set of thematic opportunities for people to participate in performing credit. And right now we're closing our emerging business fund, which is the last leg of deployment. We've launched the financial services fund. We've already spoke about launch of a first credit fund based out of Gift City, which is dollar denominated. It is $125 million, and we're launching a couple of more.
Okay. Sir, I also wanted to ask about, monetization of your tech platforms, if you could, touch upon that as well.
So we run probably most sophisticated tech platform, both for the B2B credit called Nimbus. And the second is the on-lending and a co-lending platform called Nimbus Partner Origination System. We call it NPOS. There we've now tied up with about 4 banks in the process of enabling the flow of credit. it's a very high quality platform and very agile, helps you to, it's like a bespoke tailoring every day. So you can decide what kind of garments you want, and it has the system. You can play with the size, fitments, fabric, all of that together. We use that platform for our own lending. We've lent over 17 million loans using that platform. We're making that available to other banks to participate. On any given day, we underwrite about 25,000 plus loans where we real-time do the KYC, we do the penny drop to validate the bank account, we real-time underwrite the customers, real-time communicate with the customers, and then disperse the money. And then follow up the communication with the customers. And I think those are great sets of platform to enable the flow of credit, and not only us but other lenders can also lever that platform. Yeah.
So the RBI has very recently, lowered risk weights on bank lending to NBFCs. How do you see that? I mean, do you see banks opening up, to NBFCs in the coming financial year, and how are your fundraising plans going to be? Are you going to stick to debt, or bank loans, and how is that going to be?
So we are pretty well capitalized for the next 3 years, assuming the growth ambition we have. We don't need any more new equity. We probably have a very unique distinction and a very high quality liability franchise. Our 64% of borrowing comes from the banks. Close to 30% is global multilaterals who come and participate, given the nature of work we do in terms of impact space, and balance is public. Balances through NCDs and other lenders, correct? So I think that's the power of the franchise. We should see the benefit of that and the rate cut reflecting starting next year, next fiscal in it. So I'm very, this will enable the flow. And the NBFC is a meaningful play. 20% of India's credit goes through NBFC route if you look at overall size of the credit. And given we are a large diversified country, both in terms of, and you need more bespoke solutions, which is NBFCs can provide that leverage, that reach for people to play. I think we should see a good growth coming.
You expect your funding mix to remain the same?
Our funding risk broadly, we have a great franchise. I just want to continue to build on it. And I think we are very unique in our own way, because we not only leverage that for ourselves, but we also leverage that to provide credit to 300 plus originators who are there on our platform. That's a placement business. And that's, we will do about close to 14,000 crores of credit solutions to other players. And that means in a credit solution play, we have all the elements to make that meaningful contribution to the society and, to the sectors, underserved sectors who need access to credit.
Well, that was the management of Northern Arc, but the next company that is in focus is a very recent listing, Ventive Hospitality. My colleague Agni Dev spoke to the CEO, Mr. Ranjit Batra, who talked about the company's margin play as well as key growth parameters going forward. Here is a slice of that conversation.
So yeah, this is an interesting one. Our focus has always been RevPAR. I think that's the right way to look at it in our industry. And but having to answer your question, we are on top of the pyramid as far as ARRs are concerned. Our blended ARRs is probably one of the highest in the industry, around 20,000 rupees. Primarily also being contributed from our leisure segment that operates in Maldives, which is Maldives being a destination commanding one of the highest ARRs in the world. And our portfolio, our ARRs are touching almost 70,000 rupees, whereas our Indian portfolio is around 11,500. So blended around 20,000.
Right, sir. And my next question will be on margins. So how do margins stand for the company currently? They're at industry best, correct me if I'm wrong, but they are at an industry best level. So where do you see margins going from here?
So we are also working very hard. I think the capital markets bring in a lot of discipline, and now that we have this portfolio with very strong quarters coming and moving forward also, we are looking at a Q3 margin of 49%, which is super healthy, which was an increase of around 600 bips. And for 2024, we had a margin of 45%. This will also go up as we keep in building in operating leverage efficiencies, looking at costs very closely, and looking at the levers that we always use, which is again RevPAR in India and TrevPAR in Maldives. Maldives is very interesting. It's a total revenue per available room.
Right, sir. That's a very interesting point. But again, like you said, margins to continue to improve. So building on these ideas of improving further, how many keys are you looking to add going ahead, and what are the key counts currently at? If you can paint a picture on that.
So Ventive Hospitality right now is around 2,000 keys. If you see our growth pipeline in the last 5 years, we've literally doubled our room inventory. And all that is being outside Pune, where we are headquartered. And we will continue at the same pace going forward, and doubling our inventory going forward with the addition of 3 assets that are already under construction. They being one in Varanasi, which is a brownfield acquisition that we did. The other one is additional rooms and rebranding of our Whitefield Aloft to AC by Marriott. And the third being Sri Lanka. Sri Lanka is an interesting development. It's 160 keys. 60 will be branded residence along with 80 keys in a very solid brand that we are going to bring out. At this stage, I'm not going to disclose that, but you'll be pleasantly surprised. That's the Sri Lankan market as well.
That's a very interesting proposition right there, which segues very nicely into my next question, which is about your international businesses. So, like you said, Maldives is very different from your India business, right? So, India is mostly business travel, Maldives is more of a leisure travel. So, can you paint a picture on how your international business will look like going ahead?
Yeah, I mean, I'm seeing a great shift in the way leisure is consumed, both in a domestic fashion, and India outbound story is also going very strong as we see the visa-free travel is becoming more and more prominent, and it's becoming very common for my friends to actually visit countries outside India, and there is the demand drivers and the exploring countries with short haul flights is becoming super common, and that means Maldives is right there to take advantage of the India outbound. Maldives being a very resilient country when it comes to tourism. It's pretty much dependent on tourism in a holistic manner, and the GDP, about 90% of the GDP depends on tourism. So very friendly, it's very unique. The concept of Maldives is the one island, one resort, which is here to stay, and nowhere else in the world does this concept exist.
So I remember you, even when the company was getting listed, there was a lot of conversation around how the growth has doubled in the last 5 years. I'm not sure if it's growth or some other component. So can you expand on what that is and how that's going to advance going ahead?
So our growth is primarily coming through our 3 assets that I already mentioned. Plus, we have enough free cash flow, around 500 plus crores every year, to deploy on acquisition. We are very aggressively looking with our business development team to acquire any opportunity that comes by. We are looking at chunky assets with good EBITDA contribution, and going forward, we have the ability, we have the understanding. I mean, if we can build an asset in the middle of the ocean in Maldives, I'm sure we can build, acquire, rebrand, reposition any asset in India.
Right,
we have that ability.
Lastly, I want to touch up a bit on seasonality, about travel trends and how they affect your business, top line, bottom line, anything that you can paint a picture on.
I mean, in business hotels, half our portfolio is in the business hotels, and I don't see any trend or data that affects our seasonality. What affects business hotels largely is weekends, and we've mitigated that with filling that space with MICE, wedding component, MICE with room component very successfully. When it comes to leisure markets, yes, there is seasonality in play, especially in Maldives. Q3 and Q4 financial year is the best 2 quarters that contribute at least 70% of the total revenue. But these are occupancies that get filled in way in advance, because planning of these holidays, what we call festive time, whether it's the overhang of New Year's and typically followed by the Easter, is a very strong quarter. But what we see in the low season, Maldives does not rely on any particular country for contribution of business. It's very well diversified, and what we see in off seasonality is shorter haul business coming to us from Asia, whether it's India, China, Korea, Japan.
Finally, let's also jump into a very specific conversation with the management of PG Electroplast, its managing director, Mr. Vishal Gupta, who spoke to my colleague Subhana. Here's what he had to say on the compressor supply chains, Make in India push, and much more. Listen in.
As an industry, I think people have prepared for a growth of around 20%. If we are going to grow beyond that, then some companies might have problems with the availability of the compressors. Some companies have done some better planning, so some people will do better in case industry grows, and some people might have shortage of compressors.
But do you think you'll be able to achieve the target, because of this shortage?
For PG as such, we have done enough planning for the compressors, so we don't see any challenge in that. For FY25, we have already guided the numbers. I think we'll be achieving those numbers very comfortably, and for next year also, we believe that we should grow at least 30-35% in next year also.
Okay. And so in your product business, AC, washing machine, air coolers, these are also expected to grow almost 100% in FY25. So what do you expect for the next year? Would that be on high base or how?
See, even at this base where we have grown roughly 100% in FY25, the kind of feedback what we are getting from our clients, we expect to grow at least 30-35% in FY26 also, but we'll be releasing our firm guidance at the time of our annual results announcement, which will happen somewhere in middle of May.
Okay. And sir, what about, there are multiple other reports that are also saying that electronic components like PLI, what has your conversations been with, the concerned government body regarding that, and how do you see this benefiting existing players?
See, a lot of things are being discussed right now. Broadly, the contours of the policies are not very clear. Let the policy be announced. Once we have that policy contours in place, terms and conditions in place, only then we can comment on that. But largely, yes, the government is very clear. They want to increase local validation in India. So the focus will be on the backward integration, the creation of component ecosystem in India.
But do you think the backward integration could have, a different play on margins?
It can have. Let us see that once we have the contours of the policy in place, what kind of asset turns, what kind of margins we are able to do that, only then we can comment on that. Yeah, it will be there.
Okay. And sir, we have seen industry-wide slowdown, in terms of TV sales. How are you, tackling with this? There is smaller market size. What do you attribute, to the smaller market size in this area? And are there too many players entering into the fray? What's the outlook on the TV end?
See, surprisingly, what has happened, if you talk about at an industry level, yes, we are seeing not that kind of growth what we see in AC for all other product categories like washing machines and TVs. But yes, as a company, as PG, we have been able to gain business or share of the wallet from our clients. And this year, I think our TV business should grow at least in FY25 should grow around 70-75%, 80%. And next year again, we are targeting to grow it at least 40-50%.
Where do you get the optimism from for that?
We have been, we are able to increase wallet share with our clients and acquire more clients and increase share of business with our existing clients.
Okay. All right. And so you entered the EV assembly and, lithium ion battery, all of that space. And you had also signed, a definitive agreement with Spiro Mobility, if I'm not wrong. So what's the update on that, and the long term for non-electronic manufacturing?
Yes, the Spiro, we are going to be a contract manufacturer for Spiro Mobility. Spiro Mobility has made an application for their approval of their EV bike, which is still pending. Once we have that approval in place, then that project will be kick-started. There are certain delays, but we are waiting for the approval of the EV bike right now.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know.
Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Mahima Vajrajani. And quickly on to the top news at this hour. The Nifty's fallen 250 points. Thereafter, it's recovered quite a bit. It's probably recovered by around 100 odd points from those lows. So positive with regard to where the recovery is concerned, but the fall was quite steep. You can see from the highs to the low, it was fairly quick fall at that point. So maybe something to look out for. Nifty Bank also very similar, 500 points down, and that also has recovered quite a bit from those lows, especially in the last half hour or so, or rather the last 15 minutes. We've seen a bit of a recovery where the Nifty Bank is concerned. From 51,530, we are now around 200 points higher. IT sector is leading among sectoral gainers, 1.6%, really standing out in trade today, aiding the index. You're also seeing broader markets being under pressure today. The Nifty mid cap, if you can pull up the intraday and the small cap intraday, both of those languishing actually, some pressure and no sign of recovery. Couple of attempts of recovery, but no sign visible yet. 1.2% lower even on the Nifty small cap. Those are the three top laggards for you. 1% lower on the Nifty Realty, even though there's some recovery there. Nifty Pharma down 1%, some recovery there as well, and the Nifty Metal down 1% as well. But I want to quickly circle back onto the Nifty 50, quickly onto the heat map on the Nifty. You're seeing some traction, Ultratech as well as Grasim, Trent around 3% higher on some of those. Financial services continue to dominate, and HDFC Bank today standing out. It was a Kotak yesterday, it's an HDFC Bank taking leadership today and essentially driving the index. So I want to quickly flag off 68 points higher on the Nifty, and likely a lot of those would have come straight from HDFC. IndusInd Bank though, from the banking space itself, a laggard. ICICI Bank 1.2% lower as well. Reliance is down 0.7 odd, Bajaj Finance 0.5% lower. You're seeing auto largely muted, 0.5% higher on a Hero. Kotak today again a muted kind of move. Pharma as well has seen some amount of pressure. Dr. Reddy's is down 2.5%, Sun Pharma down 1%, Cipla down 0.3%. Even infra is facing some bit of pressure. Look at an L&T. But quickly on to how contributors are shaping up, because that's what we just spoke about. Just want to quickly flag off 50 points by HDFC. We are net 57 positive on the Nifty. 50 of those contributed by HDFC. Of course, the others also chipping in, but some bit of pressure coming in from ICICI as well today. So 26 points from ICICI, another 14 maybe from Reliance. So those also kind of weighing in on the index. That's how it's shaping up. It's been a tough day of trade. Let's look at the breadth of the market as well. And the breadth has been sharply in favor of the negatives, of the losers in trade today. Just about 500 gainers for 1700 losers, and that is where all the pressure is. It's the broader markets. Let's look at the sectoral heat map before I hand it over to Mahima. Talk us through some names and also start taking views as to how we're seeing markets now directionally. 1.5% lower on the Nifty PSU Bank. So that's one pocket of pressure. Nifty Metal down 1%. We spoke about that. Pharma down, Realty down 1% each. Nifty Auto down around 0.5% thereabouts. What's doing well is IT. It's the only bright spot at this point. Private banks, but that's largely driven by HDFC. Can I have the constituents of the private banks, please? And maybe that will show that while banking as a sector is doing slightly, is having a slightly tepid day, but the private banking index is doing decently well. The bank Nifty, if we can, in terms of constituents, that will also give us some kind of a view. There you go, HDFC. But outside of that, AU up 1.5%, Axis 1.2%, Kotak. Outside of that, you're seeing largely PSBs under pressure and ICICI, IDFC under pressure. So not as bad as I would have thought it to be. But Mahima, over to you with regard to some names, and then let's take views.
Right, absolutely. So broader markets is where actually the real pain is. If you see the mid cap 150 and the small cap 250, there you go. The mid cap 150 is down by about 0.7% and the small cap 250 also trading about 1.2% lower. Now some names which are doing well in trade despite of the broader markets being under pressure. The two names, the HEG Limited and Graphite India, are up and above in trade today. HEG up by 16%, Graphite up by 12%. There's Blue Dart, which is also doing well in trade today, up by 7.5%. We'll also bring in a bull versus bear case for Blue Dart going forward in the show. There's Piramal Pharma, which is doing well, up by about 5%. Punjab Sind Bank on the back of QIP is up by about 5%. Sanofi India is also doing well, up by 4%. There's Birla Corporation, Cimex Limited, Fine Organic, Metlis, also doing well in trade today. But let's cut across to finance. Mr. Nirmala Sitharaman addressing the Lok Sabha.
माननीय सदस्य वित्त मंत्री जी इजाजत नहीं दे सकती, इजाजत मैं नहीं दे सकता हूँ यहाँ पे, तो माननीय वित्त मंत्री जी.
He has allowed me, he has called me, okay? Sir, thank you very much, Speaker sir, for allowing me to respond to the discussions which have taken place on the finance bill. This finance bill, sir, we have attempted to do several things which, as per the expectation and aspiration of the people of India, and also the goal that the Honorable Prime Minister has given us towards a Vikasit Bharat by 2047, which is hardly 22 years from now. So we have done a lot of major steps through this finance bill. It's actually a bill which aims to provide tax certainty. It rationalizes a lot of provisions which are towards ease of doing business and also provides unprecedented tax relief in honor of the taxpayers of this country. So I'll straight go to talking about the direct taxation, in which the income tax is something which I'll spend a minute on, and then talk about the other direct tax reforms that we've undertaken. We've recognized the strength, spirit, and the contribution of the Indian middle class, and as a result, this budget has, under the new tax regime, come with a proposal that there will be now zero income tax payable for income up to 12 lakh rupees. So that is an average of 1 lakh rupee per month salary, which is going to be tax-free, completely tax-free. So for the salaried taxpayers, this limit technically will be even higher. At 12.75 lakhs, which is inclusive of the 75,000 rupees standard deduction, and the marginal relief that is going to be applied for the taxpayers reduces the tax burden on the marginal rise in the income beyond the limit. So I will elaborate this point in response to some of the members who have asked specific question about what happens for those who are crossing 12 lakhs per annum income. I'm also glad to say that through this finance bill, we have brought in the new income tax bill, meaning I have not presented it as part of the finance bill. The introduction of the new finance bill during the budget session this time, which of course is rightly gone into a select committee's review, post which we will take it up in hopefully in the monsoon session. Aims to... Yes, I thought I said that. I said it is not brought through the finance bill, it is a new income tax bill. Thank you. So, brought during this budget session, but hopefully we'll have it taken up for discussion in this House during the monsoon session. So during this budget session, sir, not only the provisions and also certain reformatory steps taken during the through the finance bill, the rationalization of customs also is a major thing that I'll come to talk about in a minute. So the steps taken for the customs duty reduction are also post elaborate discussion with the stakeholders. So there has been an element of Jan Bhagidari both in the preparation of the new income tax bill and in the larger finance bill itself. The other direct tax reforms, sir, are worth mentioning. We have brought down certain TDS and TCS provisions. We've increased the thresholds so that the deduction of tax starts at a higher threshold rather than a lower. In respect of sale of goods, the requirement of TCS, particularly under section 206C 1H, is proposed to be done away with. We are completely removing it. Further, considering the difficulties which is faced by the taxpayer, we now propose to allow the benefit of 2 such self-occupied properties without any condition. And that is a major step which will benefit the middle class, because in order to prove that the second house is also under their occupation, they do quite a few of paperwork and diligence has to be kept up. We are now saying you don't even need to do the paperwork. We take it as you stated for the second such occupied property. In order to streamline the process of transfer pricing, sir, and to provide an alternative to yearly examination, we have proposed that a scheme of determining arm's length price in international transaction for a block period of 3 years at a time. So this will be in line with the global best practices. So annually, people do not have to rush to prove what the transfer pricing commitments will be. Further, we've also, with a view to reducing the litigation and provide certainty in international taxation, the scope of safe harbor rules have been expanded. Instead of having it narrow and expecting people to continuously come and prove that it is required for their business, we've widened it, and the safe harbor rules are therefore broader in favor of the assessee. Further, the presumptive taxation regime for non-residents is also now a lot more relaxed, particularly in the case of those businesses or resident companies which are operating in electronics manufacturing facilities, because electronics manufacturing demands supply of components in time, and those specific components will have to be brought in. If time lapses in their supply from the original equipment manufacturer, the production itself will suffer. So we've given them this particular presumptive tax regime, so that the non-residents who participate in these services, particularly given to a resident company, can benefit. So also for the startups, again, which is primarily for the middle class, government has proposed to extend the period of incorporation of startups by 5 years to allow the benefit available to the startups which are incorporated before 1/4/2030. So that's been an extension given so that there's greater participation of the newer registering startups as well. Again, to promote IFSC, the International Financial Services Center, government has proposed specific benefits to ship leasing units, to insurance offices, treasury centers of global companies which set up business in the IFSC. In order that they can claim benefits, the cutoff date of commencement for the commencement in IFSC has also been extended for 5 years, that is up to 31/3/2030. So these are in brief the steps through this finance bill taken up for direct taxation. Now if I were to briefly look at the indirect tax, sir, as I said earlier, the customs rationalization, tariff rationalization, which was an exercise that we began 2 years ago, every year some or the other rationalization related steps have been announced in the budget. Now this budget, this finance bill in 2025 relating to the customs aims to rationalize tariff structure and to address duty inversion. These will also support manufacturing units, domestic value addition, promote exports, facilitate trade, and also provide relief to the common people. So that has to be highlighted because it's not just the new income tax bill which is coming, but this finance bill itself is talking about rationalization of customs, which is a very big step forward so that importers can benefit from it. Exporting industry which import parts can also become cost competitive. So, budget 2025, sir, we aim to boost domestic production and enhance export competitiveness by reducing duties on raw materials and inputs, making domestic products more cost effective, as I said a minute ago. So, taking forward the comprehensive review of customs, about which I would like to elaborate, the rate structure announced in July 2024 budget, we are taking that forward. So as I said, the exercise began 2 years ago. We made a major announcement in July 2024 budget. We are taking it further in this budget also. So this finance bill actually proposes to remove 7 customs tariff rates for industrial goods. The 2 tranches of rationalization of customs tariff carried out so far have reduced the number of tariff rates from 21 to 8, including the zero-rated goods. Many Indian exporters have become cost competitive. And one matter which will interest honorable members is when you're looking at cess and surcharge, we made sure that on no one item on the customs duty where it is being imposed, both cess and surcharge would be imposed. We are looking at that, and therefore in this budget, in the finance bill, we have proposed that only one can be applied, and therefore only one cess or surcharge will be applied on any one item. So for instance, social welfare surcharge will be now exempted from 82 tariff lines which are subject to a cess. So the double burden of both cess and surcharge on any particular item is being removed. In addition, sir, we also propose to add 35 additional capital goods for EV battery manufacturing and 28 additional capital goods for mobile phone battery manufacturing to the list of exempted capital goods to boost domestic manufacturing. So this will actually have a bearing. So EV battery manufacturing will be a lot more cost competitive because 13 additional capital goods are being exempted. So 28 additional capital goods for the mobile phone battery manufacturing are also being exempted. Sir, we also propose in this finance bill to fully exempt basic customs duty on cobalt powder, waste, the scrap of lithium ion battery, lead, zinc, and 12 more critical minerals. So this is in addition to the 25 critical minerals which were fully exempted from the basic custom duty in the July 2024 budget. So we have not wasted time. After that, we've rapidly also brought in more goods, particularly critical minerals, into this exemption. So the Customs Act as 1962 does not provide, as it prevails now, does not provide any time limit to finalize provisional assessments leading to uncertainty and cost to trade. So as a measure of promoting ease of doing business, in this finance bill, government has proposed to fix a time limit of 2 years, extendable by a year, for finalizing the provisional assessment. That will itself bring in a lot of certainty for those importers and exporters. Sir, we also propose to extend the time limit for end use of imported inputs in the relevant rules from 6 months to 1 year. What this actually means is some exporters, in order that they produce goods for export, import some components. The customs duty is not paid because they're bringing it for the production of goods which have to be exported, because we don't export taxes. But for that use of that component which is imported, we normally give 6 months, saying you brought it in June 2025, by December 2025, you should have sent that product out, that product which you manufactured with this particular item imported. Many exporters found it difficult. The 6 months period is not sufficient. So for them, we have extended that time period to 1 year. So this is more an export friendly measure that we have taken. So we have actually allowed the industry to better plan their imports, and also we are providing operational flexibility. So these are as about the finance bill as it was presented to the House. We are of course coming up with some government amendments. The amendments which are being brought, 4 of them I'd like to highlight. The simplified safe harbor regime in section 9A for investment funds managed by fund managers in India. Normally, these fund managers are expected to verify that no one exceeds the 5% limit in terms of direct investment or indirect investments. So it is proposed to be made further simpler by removing this 5% condition for monitoring indirect investment, because it becomes too cumbersome for them to search for who the investor is indirectly, and that itself hampers investment, so we are removing that. Clarificatory amendments in the provisions for IFSC's provisions and presumptive taxation for service providers for electronic manufacturing units is also being brought in as government amendment. And the third one, for clarity and consistency, a government amendment is coming in for small changes in the block assessment provisions, and then the 6% equalization levy, which was being proposed, which was in effect for advertisement and other things, is being proposed to be removed, so that we can address the uncertainty in the international economic conditions. So largely, these are the major... yes, I'll answer. These are my opening statements. I'll come to answering each one of the members' points. I will come to answering this. So these are the finance bill related...
writer for...
So then I now come to addressing individual members who have raised issues or sought clarification. So I'll go one by one. By the issue, 2 or 3 members could have spoken on each of the issues. I'll go by the issues. So on the income tax, as I said, members have shown concern for incremental increase over 12 lakhs. What if, I think this was a member, Sri Neeraj Maurya, who had raised this question about if income is 12.10 or 12.20 lakhs, tax will have to be paid. So ensure taxes are graded from 12 lakh rupees is what the suggestion came from Sri Neeraj Maurya. So I want to say that even while I read the budget speech, we made it very clear that marginal relief is being granted. Under the provision of section 87A, it has been ensured that the tax payable by a person having income marginally above 12 lakhs is required to pay only the marginal amount of tax equal to the amount of income above 12 lakh, so that his carry home is also 12 lakh of rupees. So he may earn incrementally more, but he'll still take back to his home 12 lakhs, and that increment on the incremental amount, the calculation is also very well explained. For instance, with an income of 12.10 lakh, rupees 10,000 is what he earns over the 12 lakh that he already earns. So for that 10,000 rupees, it will be paid as income tax only. Tax without marginal relief on that person earning 12.10 lakh would have been 61,500. So we have given the marginal relief where he, for the 10,000 rupees he earns more than the 12 lakh, the 12 lakh is exempt from tax, but the 10,000 will have to be paid as tax. He would have ended up paying 61,500, whereas because of the marginal scheme that we've added into this scheme of income tax,
All right, that's Finance Minister discussing the finance bill in Lok Sabha. With that, let's also welcome in Kush Bora of kushbora.com, who's joining us today. Kush, with respect to the markets, the broader markets under pressure, but what are the kind of readings that you have on the Nifty and the Bank Nifty right now?
Hi, first of all, very good afternoon. Well, very interesting, set of developments, at least from a technical standpoint. We were speaking about how, you should be buying on declines and how the RSI on the hourly chart is overheated. Now, what's come to happen is that even in this consolidation, in this day of consolidation where the Nifty dipped quite a bit, those levels have actually now slipped just below the overheated territory. So still stretched, but at least not in the overheated territories. And actually the same is true for PCR as well. Because of the rollover activities and this being the monthly expiry week, the rollovers, option rollover, there isn't anything called an option rollover, but because of the squaring off of positions, what's happened is that the 1.25 and 1.3 PCR has actually now come down to about 1.05. So there's a lot of comfort there as well. All in all, what the data is suggesting that there could be some more momentum going forward as well. Or what could happen at best is that you could see consolidation with a positive bias over the next couple of days till the expiry is over, and perhaps then a little more as well till the April 2nd date, where everyone's just waiting with a bated breath as to what finally comes out. So consolidation with a positive bias is perhaps the norm for the next couple of days.
Okay, so what should you do at this point, Kush?
Well, there is a lot of action in stock-specific names, and has been for some time. Although there is some profit taking, in the broader market, I think there are still pockets that can be considered. Even if there is, a decline in some of these names, this should be taken as a buying opportunity. Two of them, first is Shriram Finance. Again, a stock that we discussed yesterday went on to hit the first target. So, a reiteration of that call for targets of 685, 695 with a stop loss around the 665 mark. Also, Ahluwalia Contracts. Here too, we've seen some institutional activity pick up over the last quarter. And if you see, the stocks made a good base near the 650 mark and has been moving higher ever since. Some consolidation today, in line with the markets. But overall, the structure still looks strong for levels of 860 and 895, 795 being your stop loss. Also, just a quick word on HEG, one of the stocks of the day. Incidentally, it was a stock that we discussed on Friday as a buy for targets of 435 and 455. I mean, those levels seem like slightly distant history now with the kind of move that it's making today. So not a bad idea for someone to go out and book partially, if you have taken a position based on the discussions that we've had, because the momentum and the volumes are still strong with it. You could continue holding on the rest of the position.
Okay, thanks so much for that, Kush, for giving us those views. Stay with us because interesting conversation following this one. Nandan Chakraborty, Head Research and Strategy, DAM Capital Advisors, joins us. Interesting in terms of the way your note is structured, Nandan. You've been meeting with FIIs, quote unquote, you've met 25 FIIs in Singapore and UK. First off, thanks so much for being with us online. You had to stick on for a while because we had to cut in to that discussion happening in the Lok Sabha. But talk to us about what FIIs are thinking at this point, basis your meeting. Are they turning constructive? This is Harsh here.
See, as far as the FIIs who invest in India are concerned, thing to remember is there are three types of FIIs. One is the global FIIs who put some money in the emerging markets, India and so on also. The second type is those who are basically emerging market funds and out of which India has an allocation. And the third is the India dedicated funds. So there are three distinct types with three distinct drivers. And I met, I think, a fair this thing of all three types of them. The other thing to remember is that because we are a part of the emerging market allocation, therefore, whatever drives emerging markets as a whole, which is basically, a large part of it is a second category of FIIs, which is the ones which are emerging market funds. There are not too many India dedicated funds. And in the global funds, India has, very, very small, tiny shares. So the largest chunk of it is the emerging market funds. So if the emerging market flows go up or down, we get affected. That is the fundamental bottom line when you think of FIIs. The second fundamental bottom line that you think of, there are three things. The second thing that you should, keep in mind is that Indian quality decides our valuation. It does not decide our flows. So if our growth is good, ROE is good compared to China and other countries, then that will decide at what valuation we should settle at. The flows are decided by the emerging market allocation, while its valuation is so valuation and flows are two different things altogether. The third thing to keep in mind is that in terms of your hierarchy of thinking, valuation is key. Then come any other consideration. So if suddenly China becomes too cheap, flows go there. If India becomes too expensive, flows get out of here. After that comes anything else, any other consideration.
Right. So Nandan, at this point, where are flows headed? We're seeing a bit of a reversal where flows are concerned. So it's a good time to get your view on that.
Yeah. So, at the time that I was there, which is in the last 30 days, you must remember one more thing also is that most of the data that you see is usually at least 1 month old. So you'll see a lot of people, when there are discussions with FIIs or even locals here, you'll see that a lot of them are thinking about what was in the data a month back, but not what is happening on the ground at this point in time. So if you look at FIIs, some of our conversations are also based on what has been happening in the last 3 months. So at that time, basically a lot of the flows are moving out of US into its alternatives. And the alternative to US is not emerging markets. It is basically Europe, Japan, etc., etc. So in terms of currencies as well as flows, because the dollar had started to tank. So the first phase was a suck back of monies to the US. And the second phase was a suck out of money from US towards its competing developed markets. Second part is within EMs, a lot of money obviously went to China because simply China was cheap. There was nothing on the ground in the last 1 month also. I have not seen any news. China as it is opaque, but even then I have not seen any news of any change on the ground. It was all based on stimuli and the tech meetings and stuff like that. So my money went into China. The basic feel of FIIs on India was that we are now already at a 15% discount to US. And typically, over the long term, US and Indian valuations have been more or less at the same level over a long period of time. So valuation, there wasn't too much of a problem. Obviously, there are some pockets among small and mid caps which are overvalued. That's fine. Everybody understands that. The thing which was worrying, the two things which are worrying is when will the rupee stop sliding? So the REER, which is basically the real effective exchange rate of the rupee, which is, the valuation in theoretical terms is roughly around about 89. And we are at about 86.5. So they were waiting for the rupee to stabilize before entering India back again. And another set said that whatever happens, we will not come into India unless, this whole business of tariff on Trump's, which is April 2nd. So we will take a call after April 2nd. So there were two classes. One was said that, okay, it's a good time to enter, but I'm going to enter only when the rupee stabilizes.
Right.
Second class is that I will not enter whatever be the valuations till there is clarity on tariffs.
Right. Okay, Nandan, Mahima also joining in very quickly. You talked about consumption versus capex in your report. The budget this time is focused towards consumptions. How do you see the flows coming in or going out to, see that kind of effect in terms of investing in which pockets?
Well, see, while we pushed both consumption and capex plays in our report, the lower end of consumption, which was FMCG, not too many FIIs were interested in them. For them, their reason for being in India is whatever is a leverage play to the economy. There are only two major leverage plays to the economy. One is capex, and the other is the higher end of consumer discretionary, which is auto, realty, consumer lending, NBFCs, stuff like that. Maybe alcohol beverages. So whatever is consumer discretionary. So I think these were the two pockets of a much higher interest, because FMCG at the end of the day, our call was a 1-year call, which is because of the monsoons, there being a double monsoon last year. And this year, hopefully the monsoons will be good. The Rabi crop, that is a winter crop, has also been fairly good, though the summer is early and the yield of the winter crop might be a bit, might decrease a bit. But otherwise, I think this monsoon is better than last monsoon. There are a lot of monies which are going from all the states to Ladli Behan and various schemes and so on. So our call was on a 1-year YOY basis, huge upsurge in the FMCG part. So that was not taken very distinct, because he said, if you're going to come to India, we want a structural long-term play. So therefore, capex, which we found was a bit expensive. They said, okay, we're willing to wait till the prices come down. We'll get into capex. And the other part is consumer discretionary.
Right. All right. Well, Nandan, completely out of time, but thank you so much for taking our time and speaking with us at NDTV Profit. With that, let's slip into a short break, but there's lots more lined up on the other side. So stay tuned to NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings, and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of
Welcome back. You're watching India Market Close, and we have with us Sachin Shane, who's the head of institutional sales at Motilal Oswal Financial Services, to talk to us on the backdrop of the Motilal Oswal conference, which has started to play out now. Sachin, Harsh, very quickly trying to understand what are the 2-3 top. You've spoken to various managements within the small mid-cap space. What are the 2-3 top takeaways for you? Where are the tailwinds coming from and headwinds? Just the top maybe 3 for perspective.
Good afternoon, Harsh, and thank you for having me on the show. So we have 2 days, 50, 60 odd companies, and very interesting set across sectors, be it cap goods, industrials, or be it durables, and retail, healthcare, real estate, banks, NBFCs. So quite variety of sectors. So I think overall the mood, I would say, has been not too exuberant, but not as it was maybe a couple of months back in the markets. On the company side, and what managements are talking is a very measured growth outlook, I would say. So especially in industrials, cap goods space, we are seeing very interesting set of companies which have participated, and we are seeing fairly strong order inflows into the company, very good robust order books, as well as slight margin improvements on their business in the coming years. So I think industrials, cap goods is one space where we are seeing some positivity. Also, we are seeing very interesting commentaries from managements in durable space. So be it in room air conditioners, or be it in allied spaces, we are seeing very decent traction on their growth. So managements are generally speaking of high teens to mid 20s type of top line growths in these sectors. So that is another area. The third is healthcare and chemical space. I think there also we are seeing fairly decent commentary and outlook from managements, where again mid-teens type of earnings growth with steady state EBITDA margins. I think so. These are the few of the sectors where I think most of investors have seen quite a lot of meetings being taken up. On the sort of sectors where we are still seeing a bit of challenges are in the consumer space. I think some of them are Sorry, did you say anything?
Right. Yeah. So, I was going to ask you about the consumer space
Harsh,
only, because
can
a
you hear
lot
me?
of your companies, Sachin Maima also joining in, a lot of your companies came in from the consumption space as well. There were companies from retail, hotels, from the Alcobev space as well. What is the commentary that you're hearing in the consumption space, and what pockets look attractive right now?
As you rightly said, Mahima, Alcobev's space is again looking very, very strong. The managements there are talking of very, very strong premiumization and growth there. They are seeing a lot of new initiatives which are being well accepted by the customers. So Alcobev companies are something which even investors have seen a lot of interest in those names. And in terms of retail, I would say there is a slightly cautious optimism, nothing immediately on the horizon, but I think managements over the next year or so are definitely seeing far more better efficiencies, and value retail is something which is holding well. I think some bit of urban demand has to be seen how that unfolds. So that is something on the retail where still there is some more, I would say, time to see a pickup on growth. So that is there. And in hotels, again, very strong, I would say, at least expectations. So the occupancy rates are 85% plus there. Average room rentals are still yet to pick up. I think initial rates have been slightly on the lower side, but I think we should see over the next few quarters even the revenue, RevPAR, what we call in the terminology, that should also pick up from 8,000-9,000 levels to almost 10,000 plus levels. So I think hotels also is a very promising commentary coming off from the management.
So Alcobev Hotels. Okay, thank you so much, Sachin, for joining us this afternoon, giving us all of those views and perspectives. Day 2 of the MOSL conference, and we are tracking some of those, and we're tracking this event live technically. But let's quickly move on though. We have Soumit Sarkar joining us as always. 15 minutes delayed today, but heard on the street. What are you hearing from dealing room, Soumit?
Well, multiple news across multiple stocks that we are picking up. Firstly, on REC, what I'm hearing is that large HNIs have started to accumulate this counter at a lower level, so keep an eye out for REC in trade. The second counter that has been is Paytm. Even a weak market, we are seeing the stock buzzing. It's up around 1.5%. What dealers are indicating is that a potential, the buzz is that the RBI restriction could get uplifted on its payments bank business. Now, RBI had restricted its Paytm's payment bank business from carrying out several activities, and that restriction could get lift is what the dealers are indicating, and hence even in a weak market, that stock is up around 1.5%. Dixon is another stock that I'm picking up some news is that the stock is down, in fact 6% in trade, and what dealers are indicating is that there's a potential negative development that could come around when it comes to the company's PLI scheme, and that's the reason we are seeing this kind of a pressure in Dixon Tech. MCX is another stock. Sell call is what coming in from dealers on technical parameters. In fact, the stock is seeing resistance around its 50 and 100 DMA, and hence dealers are indicating to sell MCX is what the call is on MCX. Then there is DMart. Again, the stock is up 3% even in this kind of weak market. What dealers are indicating is that the Q4 updates for DMart could be very strong, and the store addition guidance could also be on the stronger side for DMart, and hence that stock has been buzzing in trade. And lastly, this is the most important one, that is Ashok Leyland. What I'm understanding is that large HNIs have been buying this counter at lower levels, and companies in fact doing a call tomorrow at 5:15, and most likely dealers are expecting some positive announcement to come in on one of its loss-making subsidiary. Some stake sale or the sale of, in fact, the loss-making subsidiary could happen is what the dealers are indicating, and hence large HNIs have started to now accumulate this counter Ashok Leyland. So keep an eye out for Ashok Leyland. The board meet is tomorrow. The company will be holding a call at 5:15. A potential announcement around sale of loss-making business is what the street is expecting here.
Okay, thanks as always, Samit, for bringing us that, pretty much all of those counters in focus and buzzing in trade today. So we'll take views on some of those. But let's quickly go across. We've got guests joining us, Aditya Agarwala, Head of Research and Investments at Invest for Edu. And we have Chakri Lokpriya, Chief Investment Officer, Equities at LGT Wealth. Of course, Kush Bora still with us. Aditya, very quickly, views on the index. We're seeing a bit of a recovery from the lows, but nothing material, right?
Hi, good afternoon, Harsh. Good afternoon, Mahima. Thanks for coming on the show. I think it's a bit of a profit taking, and that's very okay after 7 days of non-stop up move on the index. I think it's good to have some bit of a cool off because indices are sitting on a bit overbought zone if I flip the chart to a lower time frame. And 23,800 over 24,000 will act as a resistance as well. Mind you, 200 DM is also somewhere around the zone of 24,000. So I believe some cool off from current levels is not too much to be perturbed about and not to get disturbed. 23,500 or 23,400, the downside are good support areas. So at current levels, maybe I'll avoid going long on the index per se, wait for some pullback to buy the index again. And if you're already long on index, maybe it's a good time to book some profits, both on the Nifty and the Bank Nifty, because I think 100 to 200 point cool off from here can be seen in next few trading sessions.
That's the view with respect to the levels on the Nifty and the Bank Nifty. Chakri, a very good afternoon to you. Somit was talking about good uptick in Q4 for something like a D-Mart, and the stock is up on the back of that. And we've seen that the pressure from quick commerce is coming in on D-Mart, and something like a Zomato is also down by about 5%. Your views on both of these counters?
D-Mart will see a cyclical uptick in its sales, so they're also adding a number of stores, so that will also contribute to but the margins for the sector is likely to continue to fall because of competition from the Zomatos of the world and as well as from online players. And so, the valuations are not cheap for the stock, so therefore wouldn't really expect anything meaningful upside, but worth a trade because, the fundamentals are largely improving.
All right. Kush, with respect to the charts, he also talked about Dixon. How are the charts faring out for something like a Dixon? Even PG Electroplast is under pressure today.
Well, not so great. I mean, there was this consolidation, longish bit of consolidation phase that was going on, and it slipped below the 200-day moving average. I think the only recovery that we saw was in line with the stellar rally that the markets have seen over the last few days. Otherwise, there has been this 50-day moving average resistance that has come in. Today, the stock has again slipped below its 20 and 200-day moving average, and mind you, on the back of very strong volumes. The 13,700 mark is a bit of a support zone. If that gets broken, then you wouldn't be surprised to see the stock slip to 13,100 and then retest the recent lows of 12,600 also. So not so great because this consolidation and then the up move should have had this follow through, which it seems to be missing now. So I would for now stay out of Dixon Technologies.
Okay, stay away from Dixon. Aditya Agarwala, your picks for this afternoon?
So I've got a couple of buy recommendations, Harsh, because the undertone still remains bullish. So Trent is something which is looking good to me on the chart setup after a decent bit of a correction. Stock has consolidated and now on the way up. So for a target of 5,500, I'll be a buyer here with a stop loss at 5,050 on the downside. The second stock is SBI Card. This is one stock which is constantly making higher highs, higher lows, and has broken out from a fresh consolidation phase. So I'll buy for a target of 910 on the upside with a stop loss at 480, 840 on the downside.
Okay, thank you so much for those quick calls. Stay with us because we're being joined by Naeem Aslam, Chief Investment Officer at Zai Capital Markets. Good morning, Naeem. By the way, speaking live from London, so thanks for joining us this morning. Harsha, I want to quickly try and understand the global context at this point. There's, of course, some bit of tariff uncertainty which is playing out in global markets. Europe, though, is reacting positively to that. European markets today in the green for viewer context. What's your sense like at this point? Where will the impact be the deepest? Is there a sector, pocket or market globally where the impact of tariffs will hit the heaviest?
Sure, thanks for having me. Look, I think there are a number of factors that we need to pay attention to. Number one is understand the full tariff equation fully. Tariff from Trump administration is a very much a tactic to bring other countries to the table for negotiation. So obviously we at a very heavy tone right at the beginning, and now there are prospects of some sort of a wings coming from the Trump administration, where perhaps we could maybe see a lower or diluted version of those particular tariffs, and that is the reason we're seeing that uptake optimism back in the market, and especially if you look at the U.S. markets for the last 2 or 3 days, we've seen more green color in those particular markets, and especially for the indices, which are very much oversold. So impact is still very much about diversification. Now, if you look at from the tariffs equation, then of course NASDAQ 100 is absolutely massively oversold. Anything with the tech related is massively oversold in the United States. So investors started to diversify their exposure towards European indices. If you look at the year-to-date performance for the European indices against the US indices, you will see one very clear trend. Investors are seeing more inflow in the European indices, because if you look at the stock 50, stock 600, there is less of an exposure to the tech sector, which is massively impacted because of the tariff threat. As that is the main result, that the NASDAQ 100 index is the most sold in comparison to S&P 500 index or in comparison to Dow Jones Industrial Average. So investors are thinking Europe has a better place because the US is isolating itself with respect to the tariff, but Europe is still very much in conjunction with what is happening with China, what is happening with the Middle East. So there's this particular triangle. On the back of that triangle, investors are saying that, okay, this is the diversification play on the back of tariffs. So Europe remains a sort of a safe haven play for investors on the back of this tariff threats.
Right, Naeem, hi, Mahima also joining in. Just wanted to know if at all, you're tracking India as well. Do you think valuations are attractive as per you? And what pockets are you looking at if yes?
I'm afraid we don't really get involved in those particular markets. But speaking generally from the global perspective, look, India remains at a very strong position because we know from the last few number of years, investors have been diversifying their portfolio. They have been looking at a higher, bigger bang for the returns. So India remains attractive from that particular perspective. If you look at the geopolitical level, India has played its cards very well during Biden administration. And I think during Trump administration, India is still positioned in a much more stronger position. So investors would continue to see India as an attractive place from that particular perspective. But I think from our perspective, we are focused more on the European markets and what is happening in the United States and the opportunities within those particular ones. Now, speaking from that particular trend, I think one particular place where India is very much lacking and is not playing right is in the digital currency place, because you have seen countries like Pakistan adopting to that digital currency age, coming to the table and then opening that particular market. And even now, there are rumors that, okay, perhaps government will get involved in the mining of a Bitcoin, which is a huge, huge loss from Indian government's perspective, not to take advantage of that particular market, not to regulating that market. If US is on board, if US is talking about the treasury results, digital assets treasury results, India should certainly do that before it is too late.
Okay, thanks so much, Naeem, for coming in, speaking with us. Great perspective. Have to keep our eyes on the globe at this point. Essentially, there's just so many moving parts there. Chakri, very quickly, coming to you with regard to tariffs and the possible impact on India. What's your sense? What are sectors, spaces where you believe that a positive outcome with regard to tariffs could well lead to some bit of returns in the medium term, short to medium term, low-hanging fruit?
Fortunately for India, unlike Europe, countries like Europe, China will be hardest hit by tariffs. They're very commodity intensive, manufacturing intensive. They don't really make anything of their own in the case of Europe. Whereas in the case of India, is still a inward-looking economy. 80% of the demand comes from domestic, and the exports, and still is a services economy and not a manufacturing economy, where the major impact of tariffs is likely going to be. So India that way is relatively far better placed than most other emerging countries as well as developed countries. Second is in terms of the earnings growth, is also coming from a number of new sectors which are unlikely to be impacted by the tariffs. And therefore, I think Indian valuations make it attractive at current levels to start looking at it in various sectors, in multiple sectors.
Okay. Aditya, if I can come to you with regard to a quick view on MCX. Somit, in his heard on the street, suggested that dealers indicating a sell on that one. What's your take?
So Harsh, there's a bit of a cool off for sure. It's broken down from its 200 DMA. That is where it fails the resistance, and it's trading below that at the moment. On the downside, maybe 5,000 is something that I'm eyeing very closely. That happens to be an immediate support level. If that is broken, then yes, it makes case for a sharper correction on the stock, closer to about 4,600 on the downside. Then otherwise, I believe 5,000 is a level that I would watch very closely. If you're short on the stock, then I would recommend keep a target in mind as 5,000 and maybe a stop loss somewhere around 52, 50, 5,200 on the upside.
1.5% lower on MCX, some real pain. Mahima coming in with regard to that one. Bull versus bear, though, that's the segment we do daily. Blue Dart is in focus today. Strong run, good gains for a couple of sessions and outpacing peers. Mihika joins us with all of the highlights on what's driving the stock and why is there a need to be cautious as well. Mihika.
Let's start off with the market presence of the company. The company has 54% market share in the Indian Air Express space. But on the bear case, this is a space that is a slow growth business and is also seeing pricing pressure because of increased availability of commercial airline cargo space. On the next front, it has seen a business pivot. The company has entered the B2B and B2C express space. It's gaining market share. The FY24 share at 60% versus 35% in FY10. But on the bear side, this is a space which has intense competition because of a fast growing pace. On terms of the margin profile, well, the margins have been under pressure, 8.7% in 9 months FY25 versus 12.2% in FY23, and this is because of rising costs as well as heavy investments. But the company has taken a 9 to 12% price hike recently, and they believe that fleet utilization and capacity stabilization will help their margins going forward, and investments will start to bear fruit starting from Q4. Next, we have capex and investments. Investments are expected to drive gains. They are investing heavily and aggressively in the tier 2 and 3 cities in terms of B2B and B2C. However, they've had a cautious stance on capex spends, and this could, as per analysts, delay growth in the medium to the long term. In terms of stock performance, well, the stock has outperformed its peers year to date as well as in the past 1 year. However, it is down 9% in the 2025 so far. Lastly, in valuations, the current price to earnings ratio of 54 times is below the 5-year average for the counter. However, when you compare it with a VRL Logistics or a TCI Express, the stock is expensive versus peers because the peers trade around 20 to 30 times PE.
Right, stock expensive versus its peers. Mika, thank you so much for breaking that down for us. Chakri, I'll come to you. Something like a Blue Dart, if you've had a chance to look at that and if you track the space, how does the outlook look like for the counter?
These days, right from corporate to consumer, everybody is shipping something somewhere. And therefore, a number of companies have come into the space. Blue Dart is therefore facing margin pressure. And the whole story remains that, volumes will go up. And that will kind of offset the margin fall. But for a business which is with the falling margins, greater competition, giving it a 50 plus multiple or 40 times for some of its competition is still way too expensive is what we believe. And therefore, we're staying by the sidelines.
Okay, so that's the view coming in with regard to a Blue Dart. But let's pull up an SG FinServe. Now, this one, just about a 2,000 crore in market cap. We had Madhu Kela, who's bought 1.7% stake. Stock is flying since the morning. We're up 14% on this one. First off, Kush, with regard to technicals, how does this one look? Is it interesting? Is it an interesting entry point if one were to consider at currently?
Harsh, I mean, look at the moves that it's made. About 5 sessions ago, it was at 300, at 400 now. So already 33% kind of moves in the last few sessions. The news will pretty much be what you've already mentioned. Entry of a big investor, big renowned investor. Perhaps pushing the stock up. So from a near-term perspective, for sure, the rally is done and dusted. If you have any positions in this and you are looking for a short to a medium term kind of a view, then not a bad idea to book some profits, because along with the jump that is seen over the last few days, comes up at the resistance of the 430 to 440 zone. The high for the day also is close to that mark. So maybe book partially. You might want to hold on to the rest of the position, see if the momentum takes the stock higher, but certainly not a good entry point at the moment. Perhaps on decline, closer to the 375, 385 zone is where you could consider a re-entry.
Okay, Chakri, would this particularly interest you in terms of development? You have a large investor with a proven track record coming in, buying nearly 2% of the company. It's a company which boasts that 100% of its loan book is secured, and secured against, of course, inventory and receivables and all of that. Largely working capital loans. 10 to 13% odd is the rate of the loan that they are giving out. Would this have you looked at it, or would it interest you just from the perspective that someone like a Madhukela has entered?
No, we don't look at this company, so really don't have a view on it.
Sure, okay, point taken. But would it interest you, the fact that Madhukela has entered, that particular principle that another investor has entered, should that enthuse investors?
He's a good guy. He's a smart investor. So clearly, there is merit to the whole situation. Yes.
Okay, point taken. Okay, let's slip into a very short break though. So that one on a tear, 14%. But we'll try to break this down a little bit more as well, because there seems to be plenty of interest around it. But slipping into a very, very short break. On the other side, we'll give you BTST ideas, as well as we'll pull out some stocks and we'll talk about IT in particular, because that one is the outlier in trade today.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected.
Welcome back. You're watching India Market Close. Well, IT is in focus. UBS has downgraded the target price for Indian IT companies, citing company-specific issues that are expected to drag revenue growth. Puneet joins us with more detail on that report. Puneet?
Well, thanks for that. So, while largely cutting target prices across the 5 stocks that they have in focus in this particular report, they are mentioning a kind of a bullish, standpoint across the IT space. They are mentioning that they're expecting the IT pack to counter some of the slowdown woes going forward, and they also think that the correction across this stock has been overdone. Now going forward, they are expecting that while the company specific issues will drag revenue for most companies specifically, they are expecting FY26 to be largely better than this fiscal year of FY25. And while they are seeing near-term multiple factor rebound, I think largely it will be news driven. So in terms of stock calls, they have maintained buy across TCS, Infosys, Wipro as well as HCL Tech, but they've cut target prices across board, and that's visible on your screen right now. But overall, it is a bullish stance that UBS is taking, expecting FY26 to be better for IT compared to this fiscal year.
Okay, thank you so much for that, Puneet. Let's go across. Kush, quickly, a technical view with regard to IT. Any particular names you're liking, and what's the move like? Sustainable?
Well, it doesn't look like, to be sustainable, if you ask me. So I would avoid the big names, the TCS, Infosys of the world, still trading below some of the strong resistance zones and key averages. The ones that we still like are Coforge, Persistent, and a lesser discussed name, which is FSL. So if I were to take a bet, I would perhaps pick one of these three.
All right. We've also Sameer Dalal, who's joining us now from Natwarlal Sun Stockbrokers. Sameer, a very good afternoon to you. IT space, what are your views and any picks there?
Hi, Mahima. Thanks for having me on the show. We've been talking on your show also quite a few times that we've not been very, very constructive on the IT space, simply from the point of view that, look, our biggest revenue stream and biggest turnover comes from the US markets for most of the IT players, right? And if the US market is going to go through a bit of a slowdown, which is kind of indicative of the way things are there, it's very easy for most companies to cut a little bit of IT spends in the current financial year or the next year, just to ensure that their profitability doesn't get hit so badly. Today, IT spends for most companies range anywhere between 1 to 3.5%. And 50 basis point or 70 basis point cut in some fresh IT spends could easily, be something that they look to do. And that would directly impact our IT companies. We are already growing in low single digits. So although we are not saying that these companies may degrow, if the growth is non-existent, if they kind of deliver similar kind of turnover and results and profitability, because margin pressures, the margin upside which was there is now behind us, then why should these companies continue to trade at even 20 times FY27? I think there's a possibility that these stocks could correct a little further. And even if they don't correct, there could be a time-based correction. So I'm not as constructive on IT in the short term. Maybe if you have a 3-year view, you could probably look. But if I could get it maybe a year later at the same price or even 5-7%, 8% lower than the current prices, I would be much happier buying it than buying it right away.
Okay, so a little bit of a wait and watch with regard to where IT is concerned. Let me also take it across to Chakri. Chakri, with regard to some of these power financiers, right? REC, PFC, finding them interesting at this point? And if not, then what else are you finding interesting? What are you buying?
If you saw that they just concluded a speech by the finance minister, the emphasis on manufacturing, and manufacturing requires more power. More power is financed by REC Power Finance, and also infrastructure activities. And these companies are trading at probably under one-time book on a forward basis, and therefore the upside is, and their NPA's balance sheet is all very, very strong. So we think that this as a sector and the stocks are going much higher.
Okay, shifting focus to the Alcobev space on the sidelines of the 2-day conference of Motilal Oswal Financial Services, that is the 11th ideation conference. We spoke to Dilip Banthia, CFO at Radico Khaitan, about the growth outlook. Listen in.
So raw material has seen very high inflationary conditions in last 3 years. We have seen unprecedented raw material inflation on grain, ENA, glass, etc. But now the situation is stabilized. The government policy of allowing the FCI rise for ethanol is also actually giving a declining trend and sentimentally improved trend on the broken rice side. So we are expecting a stable scenario on raw material, and by product mix and our premiumization journey will continue to expand our margin, and margin improvement of 100 basis point max annual CAGR basis for next 2 to 3 years is expected.
Okay, so that was the management of Radico Khaitan. Aditya, what are the charts saying for something like a Radico Khaitan, and anything in the Alcobev space that is looking attractive right now on the charts?
I think it's the Radico Khaitan which is looking interesting to me, I believe, and United Spirits. These are the only two stocks which actually stand out for me. Radico Khaitan on the upside can test levels of 2600 if somebody has a slightly higher time horizon. They're not trading bets as of now. They're more of buy and hold. So Radico Khaitan for 2600 and United Spirits at current levels can be bought for a target of maybe somewhere around 1600 or 1650 on the upside. But you'll have to give it some time. I don't see any immediate momentum in either of these stocks. They don't look weak either. So it's more of a slow and steady up move on both these stocks.
Now, shifting focus from alcohol to cement, that's a big shift, but UBS has come out with a note on cement as well, upgrading calls on some of the key players, including Ambuja and Ultratech. Mihika breaks this down for us. Mihika.
So what UBS has done is upgraded its entire cement coverage to a buy rating. This includes counters like Ultratech Cement, Ambuja Cement, ACC and Dalmia Bharat, all upgraded to a buy rating. Ambuja Cement and Dalmia Bharat were actually previously pegged with a sell rating. In terms of the upside potential, the highest upside potential stands for Ambuja Cement and Dalmia Bharat, a 20% upside when you talk about its new targets versus its previous closing price. For Ambuja Cements, for ACC and Ultratech, it stands at 16 and 18% respectively. In terms of the top pick for UBS is Ambuja because of higher growth as well as lower valuations. They've upgraded Ultratech on strong execution in a tough environment, and they've upgraded Dalmia's as well as maintained ACC's ratings because of valuations and industry tailwinds. In terms of why UBS has turned positive, because it was negative on the sector for a while now, well, they expect an earnings upcycle to emerge in the sector in FY26. This is based on several factors. One, demand is expected to be a benefit from the housing upcycle as well as the revival of government capex. There are also structural cost savings that are helping drive margins for the companies, and UBS believes that cement prices have bottomed out in the 9 months FY25, which saw an 8% sharp fall in prices pan-India. And lastly, the sector consolidation that has been led by the top two players, which is Ultratech and Ambuja Cement. And lastly, in terms of earnings potential, well, Ultratech, they expect an EBITDA CAGR of 31% over FY25 and FY27. Ambuja, they expect the consolidated EBITDA of the company to double over the same period. ACC, they expect EBITDA CAGR of 26% over FY25 to FY27. And Dalmia, the expected compounded annual growth rate stands at 18%.
Right, thank you so much for that, Meeka. Samir, coming to you with regard to some of these cement stocks, there's been continuous increases with regard to pricing. Do you expect that to sustain? That's my first question. Second one, any particular counters that you like? What are your favorites?
Okay, so, we also believe that cement will do well over the next couple of years, given the revival in the housing, especially in the affordable housing segment. What we've seen is a great trajectory for premium housing, but we believe that this trickle down will now start coming through into mid-level and the affordable segment. So demand for cement is going to come, and that is the largest driver of cement in the country. You also have the infrastructure spend, which the government obviously is going to continue at a pace of about 12 to 15% higher than last year. So that also would lead to some amount of consumption growth. Yes, prices have moved up and probably could move up till the monsoons, but come at the monsoon, so maybe a couple more months before the demand starts waning a little bit, because obviously during the monsoons, what you notice is construction activity does slow down, and this is probably the best period for the cement sector, the summer period where you have the highest construction activity, and they could probably increase prices a little bit more. But you got to also remember that cement companies are working at 70-72% utilization. So there's ample room. So it just requires one or two players to say, no, we would rather do an 80% than have a higher price. And suddenly, competition intensifies and heats up. So as well as they have managed the cement prices till now, there always is a risk of someone breaking, I won't say a cartel, but an understanding of sorts where they increase their production. And that could put some pressure. Problem for me in cement, even though we are long-term bullish, is valuations. As much as I don't know what UBS's view is on valuation, but a cement company trading at 32, 35 times for me is unjustifiable. These are commodity companies. They don't do anything special. Yes, the market has consolidated, but no commodity company should trade at 35 times. And from that reason, at this point of time, I would think any rally in cement becomes a decent opportunity to book some profits in the near term. If the stock's correct down to, like for example, Ultratech was, I think 10 days ago, it was at about 10,200. If it comes to that level, maybe it could look okay, but at 11,400 where it is today, I would not be a buyer.
Okay, so valuations not looking cheap in the cement sector is the view coming in from Samir. Kush, your BTST call for today?
I think it's on cue. We've been talking about the cement space and my BTST idea happens to be from that space. Ultratech is the one that, I'm talking about. A good move, maybe slightly contrary to what Samir just mentioned, but from a technical standpoint, the stock actually does look on a good footing. It's had a good run. Today also the volumes are higher, the 200-day moving average conquered. So yeah, it's got a couple of things going for it. So from a very near-term perspective, 11,650, 11,850 are your targets. 11,250 is where you place that stop loss.
Okay, and Aditya, your buy today, sell tomorrow call?
I've got a Bajaj Finserv as a buy for a target of 2,050 on the upside, is stop loss at 910 on the downside, 1910 on the downside. A fresh up move on the stock on good volume, so I think it's likely to continue in tomorrow's trading session as well.
Chakri, curious to know your view with regard to PSU banks. Plenty happening, right? QIP is coming through, some bit of dilution by the government. Punjab and Sindh Bank is up. Central Bank of India also in focus on the back of that. What's happening in the PSU pocket, and is this a pocket where you could take an opportunity because it's not moved substantially with the market?
PSU banks will be the first beneficiaries of an uptick in manufacturing, SBI, Canara Bank, amongst others. These banks are still very well positioned with strong balance sheets, low NPAs, valuation is under one-time book, and with the economy bottoming out and beginning to grow, I think SBI, Canara Bank, and other PSU banks will do really well.
Samir, your view on Ashok Leyland? They've announced an analyst meet today, post their board meeting. It seems like they might announce something important, but what's the view like on the counter?
So given what's just come out of the Hinduja stable, I think it's difficult to say what could happen after this board meeting. Hopefully nothing negative, and that's why, I mean, they're not rushing to hopefully soothe ears. But let's put it this, look, we believe the auto sector in India is going to see a great amount of growth, especially if you see manufacturing activities continue to increase, which has been one of the government focus. In fact, one of your previous speakers also very clearly mentioned that, the focus from the past, from the current discussion from the finance minister was manufactured in India. So if that happens and logistics demand increases both for raw materials, finished goods, and all of those products, the trucking industry, the commercial vehicle business will do extremely well. They are obviously doing well in the bus space as well. So we believe the opportunity is great. Valuations are not very expensive. Barring today's board meeting, after the last Hinduja meet, like I said, I don't want to say, but if barring everything else, we have a buy recommendation on Ambuja Cement with a target price of 250 in about 15 months.
Very quickly, Samir, curious to know if you track Northern Arc, the NBFC, which has recently listed.
Sorry, we don't track that.
Fair point. Chakri, do you?
No clue, Chief.
Okay, so what we'll try and bring some more insights on this one, because that one's seeing a bit of a breakdown, at least in trade as we speak. So hence kind of piqued my interest. But a couple of other stocks which are really moving in trade. Salasar Techno. Let me go across to Kush. Kush, your view with regard to this one, 9% higher in trade.
Well, I think this is quite a spike. Consolidation was on the cards, fairly low ticket size. I don't really recommend such trades. But then again, for levels perspective, if someone is looking at holding on to this one, I wouldn't recommend a fresh buy because of the moves that it's seen in the last two sessions. But from a levels perspective, 1275 and then about 14 other levels to look at on the upside. If you do have a position, you could continue to hold with a stop loss around the 9 mark. But yeah, I wouldn't recommend a fresh entry in this one.
Okay.
The other one is Kalpataru Projects. And let me go across to Chakri with regard to this one. Around 2,400 crore worth of order wins. It's in the T&D space, India plus overseas. Does this one look interesting to you, Chakri?
Power as a segment, whether it's Kalpataru or the other power companies, clearly, there is some amount of revival in manufacturing and power generation and all allied activities. And these stocks have all corrected fairly significantly over the last few months. So as a space, clearly, yes. Kalpataru in particular, I don't have a view.
Okay, Aditya, PTC Industries is buzzing today up about 4.5%. What are the charts saying? What are the supports and resistance that you're seeing?
I think the up move is likely to continue here as well. I see positive divergences on chart, which has led to this sharp up move on the cards. On the upside, I think somewhere around 16,000 is what can be seen on the stock. So one should continue to hold if one has already built a long position. If you're looking at fresh long addition, I think it's a good idea to actually build long positions here. Good volume going for the stock. Easily on the upside, 15,600 about 16,000 can be seen. On the downside, place a stop loss somewhere around 13,700.
Okay, and Sanofi India, Samir, the stock is up about 4% in trade today. Any views on that?
No coverage again on this one.
Okay, Chakri, do you cover Sanofi India?
No, sorry.
All right, Kush, on the charts then, how is Sanofi India looking to you?
Not too bad. The only challenge is that it's now come up at the resistance level. There's a resistance zone from 6,100 up until 62, 62.50. So yes, any fresh positions should be considered above the 6,200 mark. For now, good momentum, good volume. So you could definitely continue holding on. Keep a stop loss around the 59.50 mark.
Okay, Punjab Sind Bank also doing well on the back of a QIP. I'm sure you have a view on this, Samir.
Yeah, we do. So, we are positive on the banking space overall, but again, Punjab and Sindh valuations are not very, very expensive, but that's not our top pick in this sector. Mahima, I've done quite a few interviews with you. So, in the private sector space, we have the best picks, which we've always stuck to HDFC, which is our top IDFC in the mid cap. Actually, I would. After the problems that IndusInd has had and the valuations have corrected the way they have, that's something I am saying is someone should make a small investment. If the problem is only about 2.5%, as they said, that will do well. And in the PSU space, Bank of Baroda and Canara Bank are our top two picks. So, it's no point keeping on going down the value chain in some of these banks, because then you get into more risky of the asset. You're already taking a lot of risk when you invest in some of these IDFCs and IndusInd, like we've already seen. But I think that's where I would like to draw the line on taking the risk, which I think.
Okay, Kesoram Industries is another counter which has seen a significant pressure in the past 2 or 3 odd trading days. Aditya, what are the charts indicating?
It's a downward spiral, and one way downside that we're seeing on the stock continues to be lower circuit. Very difficult to take a call from what will happen to the stock from here on. Unfortunately, if you're invested, you're stuck. You cannot exit. Fresh entry, definitely no. Till what level the stock can slide, it's very difficult to call. Honestly, it can slide to 5 rupees, 4.5 rupees. Very difficult to call, Mema, here. What to do with the stock? You really don't know if you bought the stock.
Okay, thank you so much. Packed panel today, difficult day of trade. Thank you so much, Kush, Aditya, Chakri, as well as Samir for joining us this afternoon, giving us all of those views and perspectives. Let's quickly wrap up the day of trade. Well, where the Nifty is concerned, we are definitely trading around near the day's lows. So we're down around at least 250 odd points from the day's highs. Let's pull up the intraday chart on the Nifty, and the pressure seems real at least. So from the highs of 869, we're down to 23,603. We're at the day's lows at this point, Mahima. So pressure evident, at least on the Nifty. We've closed for the day. Let's pull up the heat map as well, try and see what's worked today. And I have my eyes on HDFC Bank, so some bit of a pullback there. Ultratech as well as Trent sustaining to that extent. Grasim too has seen a bit of a pullback. So around 3% higher for both a Trent and an Ultratech. Grasim up 2. But the breadth is markedly different from how we've started this show. IndusInd down 5. So that's something to keep on your radar. Auto stocks also under pressure. M&M, Bajaj Auto are the other two. ICICI Bank is the one which also has dragged the index lower. The heavyweight Reliance also down. Among FMCG also pressure, Titan down and Nestle down as well. IT is the one pocket which is held up okay. TCS in the green, so is Wipro. Hero is largely flat. Infi up 1.7, HCL Tech up 1. So those are two pockets, rather one pocket which has done well in trade today. That's broadly how it's shaping up where the benchmark is concerned, Mahima. The advance decline, very quickly before I hand it over to you for broader markets. The advance decline, well, sharply worsening as the day has gone by. We've seen advances just below 400, declines over 1800. So essentially the pressure seems to be coming from the broader end of the market as much as from the Nifty 50. Let's have a look at some of those, the Nifty mid cap and the Nifty small cap.
Absolutely, and the pressure, as you rightly mentioned, is real when it comes to mid cap 150 and the small cap 250. Again, closing nearly towards the day end, the small cap 250 also down by about 1.4 odd %. So the pressure is real here. Let's also pull up the NSE 500 and see what counters have put pressure actually on the broader markets. The counters which are been down, Dixon Tech down, closing 7% lower. Swan Energy, Home First, all of these counters down. Zomato down by 5.6 odd %. Varroc Engineering, KIOC are also down by about 5 odd %. But some counters which have upheld, their gains. HEG leading the pack up by 11 odd %. Blue Dart up by 9 odd %. Graphite closing 6% higher. Kalpataru Projects also closing 4% higher. Sanofi also closing 3.7% higher. Now, three key takeaways today that we saw in the markets and factors that played out. Nifty slips over 200 points from its day's highs. Nifty Bank falls over 500 points from its day's highs, and IT sector leads the sectoral gainers for the Nifty. In terms of the broader markets, of course, under pressure. And lastly, the top laggards were the realty, the pharma, metals, as well as the PSU banks. Lastly, in
Before
terms
we
of
go to what to watch, I actually want to pull up the sectoral heat map as
Yeah.
well. Just very quickly zoom in, because this is where we're seeing a bit of a divergence. IT doing well. There you go, 1.3% higher. The Nifty Bank doing okay, not as bad, but the Nifty PSU Bank
under
is down 1.7. So that's where a lot of the pressure is. Outside of that, media has done badly. Realty is down 1.5. Metal down 1.4. So from where we were maybe an hour or so back, there's been a significant pullback. The Nifty Auto is also down 1% or thereabouts. That's kind of what we're trying to highlight. Nifty FMCG relatively okay in a market like this, and Nifty Bank also not too bad. But the pullback from the highs is what's causing this kind of pressure. But yeah, factors to watch.
Factors to watch. Something to watch out for post-market hours today, and of course before the markets open tomorrow. Well, eye on the globe, US new home sales will come out. US money supply data will also be out. In terms of corporate actions, we'll see dividends for TVS Motors at 10 per share, REC for 3.6 per share. In terms of counters that will witness exit in their lock-in periods, Ventive Hospitality for 2% odd, Cenerus Pharmaceuticals for 7% odd, and Carraro India for 5% odd. Two more counters, Tollens Tires will see an exit in terms of their lock-in period for 54%. That's quite significant. So both of these counters, in fact, Sri Tirupati Balaji also will see a 55% in their exit in lock-in. So both of these counters will be definitely something to watch out for tomorrow, because they will see moves on the back of this. But with that, we're completely out of time on this edition of India Market Close. Thank you so much for watching NDTV Profit. Stay tuned, more news and updates on the other side.
Small and mid cap, particularly in last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings, and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have
Hello and welcome. Good afternoon. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. Benchmark indices give up gains to end flat as heavyweights drag the market lower. The Nifty ends above 23,600, whereas the Sensex gains 26 points to end above 78,000 mark. Broader markets underperform benchmarks to end with deep cuts. All sectoral indices barring IT and private banks end lower. PSU banks, consumer durables, metals, realty and media drag the most. Rupee weakens by 16 paise to move back above 85.80 levels. This is after the currency strengthened to open higher by 4 paise. UBS believes the IT index is countering slowdown woes. It estimates that company-specific issues will drag revenue growth for most entities, expects 5 to 7% consensus earnings cuts, but still views FY26 to be better than FY25. UBS sees near-term sector multiple rebound. The pharma index cracks today, slows down in anticipation of tariff hit for companies. Remember, pharma and automobiles are the two sectors that are specific targets for Donald Trump. However, it is unclear to gauge the impact on pharma. Analysts that NDTV Profit spoke to say that tariffs could lead to pass-through costs. 10% tariffs can be passed on, and there will be limited mitigation due to lack of US manufacturing. Indian generics face risk despite US import dependence. Defense continues to be a key focus, and there are a couple of reasons that keep the stocks afloat. One of them being recent stock price correction versus fundamentals. Additionally, a huge focus is being laid on indigenization and domestic procurement. India-US defense ties are expected to improve, and there are higher order expectations from larger programs in 2025. US President Donald Trump says that he would impose a 25% tariff on countries that buy oil and gas from Venezuela, a punitive measure that could hit Asian markets, including China and India, among others, and sow fresh global trade uncertainty. In India, RIL Reliance is currently the only Indian company importing Venezuela oil. The company has secured official clearance from US authorities for import. Now, this clearance was approved in July 2024 before Trump administration took office. Axis Capital initiates a buy on Karur Vyasa Bank with a target of 295 rupees. The brokerage says that lower cost of funds enables bank to price risk much better. Additionally, there is improvement in asset quality. Cost ratios stand elevated. Healthy margin profile and lower credit costs will help return on assets. The government imposes anti-dumping duty on Chinese PVC paste resin. Now, these products were exported to India from China at below normal prices. Stocks like Phenolix Industries is in focus. Remember, PVC paste resin is different from PVC resin, which is used in pipes. It is mainly used for spray coating. For cement stocks, UBS picks Ambuja Cement as its top pick in the sector. UBS upgrades Ultratech on strong execution, maintains ACC's rating on valuation and industry tailwinds. UBS expects earnings upcycle to emerge in sector in FY26. The demand will benefit from housing upcycle, government capex revival. Structural cost savings will help drive companies' margins. NBCC bags 2 orders worth 658 crore rupees in Uttarakhand and Delhi. The first order worth 438 crore rupees is from Uttarakhand Investment and Infrastructure Development Board. The second order worth 219 crore rupees is from the Centre for Development of Telematics. JSW Steel now becomes world's most valuable steel company. The company's current market cap stands at $30.31 billion. It's the top performer among Indian peers on year-to-date basis, with returns of 17.7% registered so far. Britannia reports a partial disruption in operations at its Jhagadia plant in Gujarat following a worker strike that began on March 24th. The company is actively engaging with workers to resolve the situation amicably. Brigade Enterprises acquires land in Bengaluru for a premium residential project. The project has a gross development value of 950 crore rupees. In addition, the stock was trading at a high volume. The real estate developer acquired a land parcel of 4.4 acres in Whitefield, East Bengaluru. The residential project will offer a mix of spacious apartments. RVNL stocks in focus after the company emerged as the lowest bidder for 115 crore rupees construction work by Central Railway. Under the contract, RVNL will carry out the modification work for the upgradation of the existing 1x25 kV electric traction system to 2x25 kV at the feeding system in the Itarsi Amla section in the Nagpur division. Jupiter Life's arm, Jupiter Hospitals, projects inks a loan agreement with HDFC Bank for 350 crore rupees. The stock ends higher with gains of over 2%. Samvardhana Motherson completes acquisition of 51.99% stake in Atsumitic. It is a Japanese auto components company. Central Bank of India opens its qualified institutional placement of shares to raise up to 1,500 crore rupees with an option to upsize up to 500 crore rupees. The base issue of the QIP offers over 37 crore shares and a green shoe option of over 12.3 crore rupees, 3 crore shares. Pardon me. Now, the board approved the indicative price of 40.49 rupees per share, indicating a discount of nearly 13.7% to the last closing price. The shares will be allotted to winning bidders on April 1st, and those will be open to trade after April 3rd. BLS International stock is lower today. The Metropolitan Stock Exchange grants approval for delisting of 41.2 crore shares of the company from capital markets segment. Shares shall be suspended from trading with effect from March 31st. Shares will be delisted from capital market segment of MSEI with effect from April 7th. Godrej Properties homes worth over 1,000 crore rupees with a total area of around 0.84 million square feet in its Godrej Madison Avenue project in Kokapet, Hyderabad. The company had launched the project in January 2025. Ola Electric Technologies has settled all outstanding dues with Rosmata Group, which has now withdrawn its insolvency petitions against the company. Rosmata confirmed receiving the entire claim of 26.75 lakh crore rupees raised before the NCLT. Both parties stated that no further causes of action exist between them anymore. Ease My Trip has established new arms in Brazil and Saudi Arabia while investing in its US-based subsidiary to strengthen operations in the American market. Additionally, its UAE-based arm has invested in 2 new subsidiaries in Dubai, marking a significant global expansion. Zerodha's Nitin Kamath comments on the affordable diabetic drug introduced in India. He says, and I quote, "I've been following the developments around Ozempic and GLP-1 drugs with some interest for a while, and last week, Eli Lilly launched its variant Monjaro in India. Remember, India has the highest number of diabetics, and if current trends hold, 30% plus of Indians will be obese, and I don't think we have a good understanding of the second order effects of these weight loss drugs, but so far the effects people are reporting are remarkable. End of quote. The Mumbai police summons Kunal Kamra for questioning in a case registered against him in connection with his controversial statement against Maharashtra Deputy Chief Minister Eknath Shinde. Now, the summons has been sent to him to appear for investigation of the case. Maharashtra Deputy CM Eknath Shinde responds to the Gaddar joke, says there should be a limit. RBI revises priority sector lending guidelines, increases loan limits for housing renewable energy. Sources tell NDTV Profit that banks with larger share of housing loan book to benefit from RBI's revised PSL norms. SBI, HDFC Bank, ICICI Bank and Axis Bank are likely to benefit from high housing loan limits under PSL. The RBI is keeping pace with rising housing rates by increasing housing loan limits under PSL. As a result of this, competition among banks for renewable energy sector may intensify further. Swiggy Instamart has launched smartphone deliveries in Bengaluru, Delhi, Mumbai, Chennai, Faridabad, Noida, Gurgaon, Kolkata, Hyderabad and Pune. The move aims to boost order values and compete with Blinkit and Zepto, which already offers smartphone deliveries including Apple products. Instamart will deliver models like the iPhone 16e, Samsung M35, OnePlus Nord CE and Redmi 14C. Apple is reportedly working on an Apple Watch with built-in cameras as part of its AI integration strategy. Now, the standard series model may feature a camera embedded in the display, while the rugged Ultra model could place it near the digital crown. Now, the launch is expected of this product in 2027. Samsung Electronics co-CEO Han Jong-hee died of cardiac arrest on Tuesday at 63. Han, who had been with the company for over 37 years, played a key role in making Samsung a global leader in the TV and consumer electronics industry. He had served as vice chairman and co-CEO since 2022. Donald Trump's Gold Card scheme, offering U.S. permanent residency and optional citizenship for $5 million, is reportedly gaining traction. U.S. Commerce Secretary Howard Lutnick claimed to have sold 1,000 cards in a single day and confirmed that the program will officially launch in 2 weeks, with Elon Musk developing its software. Kalpataru project secures orders worth 2,366 crore rupees in the domestic and international markets. Its transmission and distribution business has received orders in India and overseas markets, while the buildings and factories business has bagged orders in the domestic market. The company, along with its international subsidiaries, have secured notification of awards / comfort letters of approximately 2,366 crore rupees. Another realty firm, Bajaj Projects, bags a large EPC order from Madhya Pradesh Power Transmission Corporation. According to the firm's internal classification, the contract is valued between 100 crore rupees and 200 crore rupees. The project involves constructing 132 kV DC-DS overhead or underground transmission lines, installing feeder bays, switch yards, and 220 kV 160 MVA power transformers to supply power for MPMRCL's Metro Rail project in Bhopal. After the IT stocks buzzing today, hiring in the tech sector has taken a hit, with data reporting that less than 3 lakh less jobs were added in FY26, is what analysts are saying. Now, the big reason behind is a dampening of growth projections, and the industry growth is expected to reduce to 3% to that of 5 to 7%. FMCG distributors' inventory piles up stocks as February sales falter after January uptick. Distributors claim that the sales were slowed down. A large general trade stores have shifted to standalone modern trade. Analysts are even projecting single-digit growth in Q2 of FY26 as major distributors like Britannia, Dabur miss February sales targets. Sources tell NDTV Profit that external audit agency PwC will submit audit report to all stakeholders, board and RBI on indecent discrepancies by Friday. Rekha Gupta presented her first budget as Delhi Chief Minister. Chief Minister Gupta presented the 1 lakh crore rupees budget, making it a historic budget as the BJP government has doubled the spending in comparison to AAP government. Some key allocations include 12,000 crore rupees for road repair, 500 crore rupees for Yamuna cleanup. Additionally, the government has promised free laptops for students who have passed 10th standard. Finance Minister Nirmala Sitharaman replies on the Finance Bill 2025 in the Lok Sabha, confirms NDTV Profit news break, proposes to move 35 amendments in Finance Bill 2025. This includes removing of equalization levy of 6% from April 1st, 2025. The FM proposes to amend Section 165 of Finance Act 2016. Resecures find a second body from the collapsed site of the SLBC tunnel in Telangana's Nagar Karnool district. The body has not yet been identified. The body was found 50 meters from the site where the collapse took place. A part of the tunnel roof had collapsed on February 22nd, trapping 8 workers. On March 9th, one body was recovered from near the tunnel boring machine, which was operational when the collapse took place. The second body was discovered a day after the Telangana government decided to go ahead with the search operations at the tunnel. President Donald Trump announced plans to impose tariffs on automobiles and pharmaceuticals, later adding lumber and semiconductors to the list. His comments came just hours after unveiling a 25% tariff on countries purchasing oil and gas from Venezuela, adding further uncertainty around U.S. trade policy. The Trump administration has requested that the Supreme Court halt a lower court's directive to reinstate approximately 16,000 probationary federal employees who were recently terminated. U.S. District Judge William Alsup ruled that these mass firings did not comply with federal law and ordered the affected agencies to offer reinstatement as legal proceedings continue. The Justice Department contends that this order oversteps judicial authority and infringes upon the executive. Bank of Japan releases minutes of the January policy meeting. BOJ members see the risk of price expectations exceeding 2%. One BOJ member says rate around 1% is desirable in the second half of FY25. Delhi Capitals started off their India Premier League with a win. Playing against Lucknow Super Giants in Vizag, KL Rahul's Delhi scored 211 batting first. Ashutosh Sharma was the highest scorer from the team, who also won the man of the match, scoring 66 runs in 31 balls. And that's a wrap on Market Express, but do stay tuned to NDTV Profit for more news and updates.
Small and mid cap, particularly in the last 4 years, because of retail flows, have become very exciting space. 35 to 38% of all the mutual fund flows goes into small and mid caps. It is almost 1/3 of the market.
It is all about ideas, where clients or investors can make money. Catch all the action on NDTV Profit. There has been some slowdown in corporate earnings and prices have corrected, valuations have corrected. So this conference will provide a very good backdrop for investors to understand where the value has remained intact but price has changed. So therefore they can accordingly tailor their portfolios. Catch all the action only on NDTV Profit.
Catch the action on NDTV Profit.
He sold most